All right. Welcome, everyone. Good morning. Let's see if this is working. We are having. Right. So I was just about to say we're having some technical difficulties here on the back end. Apparently, the streaming software that we're using do not want to work with us today. So we started one live stream and then it automatically started another live stream. So now we've ended the first one and we started a new one. And it's supposed to have LJ in here, but he's also experiencing some technical difficulties getting into the live stream. So a lot of things happening here. Maybe it's because we're running the Black Friday, the flat Black Friday campaign that we're running today. So you guys know that we're running a giveaway. We're going to give away 50 accounts in total. We're going to give away 10 accounts every day, and we're also going to go live on Friday and every day throughout this week. We have two hosts every day giving away one trading strategy. So the event is called, what is it called? It's called 9 Strategies, 5 Days, because that's what it is. Very simple, right? We got 5 days, Monday to Friday, 5 days, two people each day with one on Friday. That's nine. 5 days, 9 strategies. All right. Let me know if the sound is good, the quality, the audio, everything is fine. I'm just going to double check that everything's good on the back end. I'm going to go into YouTube and I'm actually going to see the live stream on YouTube, see if I have the sound and everything working, and then hopefully we can get some people into the live stream here. Yeah, that's right. Looks good. Sound is good. Everything is fine. So I'm up on my laptop right now because I'm changing my. I got this geothermal heat pump that I'm changing. So we got electricians and plumbers. Is that, I think that's called plumbers, working on that. So they're cutting electricity. So I'm on my laptop and I got a power bank running the laptop. So I got two screens, a laptop, and a power bank. Hopefully that's going to last. If not, I guess, yeah. We get an announcement as well. Tomorrow we're launching a new Black Friday campaign. So not only are we going to give away these strategies and the accounts, we're also going to launch a Black Friday campaign with discounts on our evaluations as well. So I'm happy to announce that as well. So I'm seeing that LJ is having some issues coming into the live stream. Hopefully he'll be able to fix that. So I am in a long on gold. And I think I can explain this in detail. Yes, I'll explain this in detail. Not sure if your comments is. Well, this is an interesting comment. We need around 90% off. Well, you're not going to get 90% off. I'm sorry about that. You know, we're a serious company and we're not giving away our products for free other than in a giveaway. And if you want that, you would need to go into the link in the description and join the giveaway to be able to get a free account. Actually, I don't know what the offer is going to be. I don't think it's going to be 90% though. It's going to be good, but 90%, I don't know. Right. Okay. So let me break down this gold trade that we have right here. First of all, let's talk about the interest rate cut expectations. We have the. I went on Polymarket and I saw that we had 5 days ago we had the December rate cut expectations for a 25 basis point rate cut expectations. And for those of you who don't know what basis point is, it's basically a 0.25%. I'm not really sure why they're not just calling it 0.25%, but they have to use words like basis point. But whatever, 25 basis point is 0.25%. So we had a 20% chance. Traders were betting on a 25% chance of the Fed cutting the interest rates with 0.25% in December. I believe that's the 10th of December. I have to look that up, but we got the interest rate decision coming up in the beginning of next month, and that has now shot up to 80%. And the reason for that is because we've had a lot of about a week ago we had a lot of hawkish comments coming from the official Fed officials, the local Fed governors were speaking on the economy and basically saying that they thought that there wasn't really a lot of reasons to cut rates and they would rather wait for more data to come out because we had the government shutdown, and that gave us a situation where we didn't get a lot of data coming out from the US in terms of labor markets and that sort of statistics. So they said we don't have the data to go on, so most likely there's not going to be a rate cut. And then on Monday, I believe, or maybe it was over the weekend, or maybe on Friday, we had Fed officials coming out and supporting the idea of cutting rates in December. So the rate cut expectations then went from 20 to jumped up to 80%, and I believe that's one of the reasons why we're seeing the bounce in the market. We can go and we can look at the S&P 500. Now, you don't need to know this. You don't really need to know the fundamentals of why things are happening. Just one comment on that before we go into the other markets. There is this idea in technical analysis, that the debate where you have technical analysis versus fundamental analysis, and it's not really a battle between the two. It's just simply the fact that fundamental analysis is the cause, and then technical analysis is the effect. The relationship between cause and effect. So yes, understanding the cause of why the effect is happening, that's great, and you can position yourself for, if you know the potential cause of the effect, you can then position yourself for different outcomes, different causes, and then the effect of that technical analysis would then have different outcomes. So, for example, if you have a scenario where they are either A, going to cut rates, or B, going to not cut rates, you have two different causes, and then you calculate what's the effect of these two causes. Well, if A is true, then markets bounce. If B is true, then markets dump. So you have two different outcomes for the cause, which is the fundamental analysis, and then you try to use technical analysis to look at what will the effect be on cause A or cause B. And then that's why a lot of times you see a lot of analysts post things on Twitter, etc., with different probabilities of different outcomes, and that's because they're looking at the cause, and then they're trying to calculate what is the effect going to be of these different causes. And then you can look at fundamental analysis, basically being what is the different probabilities of cause A or B playing out. And then for a technical analyst, that would be basically waiting for either cause A or B to confirm, and then looking at what's the effect of that cause. That's very simply put the relationship between fundamental analysis and technical analysis, and also gives you an idea of why one of them in isolation can be successful, and you can also be successful with a combination. When it comes to my trading, yes, LJ is supposed to be coming in this morning, and we will also look at gold. And good morning, Louis. The way I'm trading is I'm trading technical analysis, so I'm trading the cause of the move, but I'm also very interested in the why. I'm very interested in I'm trading technical analysis. I'm trading the effect of the move, but I'm very interested in the fundamentals, the why, and the cause of the move. But I'm not going to be trading based on that. At least not yet in my trading career, because I do see myself as slowly but surely coming to the level where I might soon be able to call myself an expert at technical analysis. But I probably have many years, probably thousands of hours of research before I can call myself even remotely an expert at fundamental analysis, which I think I never will be. But it's still interesting to know some ideas on the cost. So now we've talked about the interest rate cut expectations being a potential cause for, like I said, we're going to go into the markets here and look at the potential cause of that. So looking at the S&P 500, what we have here for the S&P 500, we can clearly look at this and see that yesterday we had a gap up, which means that the sentiment basically turned bullish over the weekend after Friday candle closed, and then you had a surge of buyers pushing price up and price gapped up. And this was most likely caused by the interest rate cut expectations jumping from 20% on Friday or the week before to 80% yesterday and today. So that's the possible cause of that. Now, what is the effect of this? What's the effect of this move? Well, the effect of this cause is that we are looking at price running straight into resistance. Okay, so was the cause strong enough for the market to reclaim the selling pressure that we have seen last week? And I would say that currently there are signs that sellers are stepping in and taking control over the narrative within this zone where we have the 6,700 on S&P 500. Why am I looking at S&P 500? Well, because we want to have a good idea of the overall sentiment within the market. And the way we do that is we look at assets that are very sensitive to the risk on and the risk of relationship, which is the S&P 500. So we're running up right into a resistance level here. Sellers are starting to take control here at 6,700 level on the daily as well. We are obviously bearish on the day. So even though the sentiment turned bullish because of most likely the cause being the interest rate expectations moving from 20 to 80, we can still see that sellers are stepping in, and we have not reclaimed any crucial level, in my opinion, for me to call this a confirmed reversal. On the technicals, we can look at the NASDAQ, basically looking the exact same as the S&P 500. We can go and we can look at Bitcoin, and Bitcoin is showing us at the same time. Oh, that's a lot of. I'm trying to learn Elliott wave theory. Very interesting, very confusing, and very difficult to understand as well. But I'm trying to, in my studies of CMT, CMT2 has like two chapters on Elliott wave. So I kind of need to understand Elliott wave to be able to do a good job on the exam, which comes up in, uh, what is it, about 3 weeks now. I have that exam, so I need to understand Elliott wave theory. But never mind that. Let's remove the Elliott wave here. And we're seeing Bitcoin showing, I would say, relative weakness right here. Are we in a bull market? Are we in a bear market for Bitcoin? I know you guys don't really care too much about Bitcoin, but Bitcoin is a very good proxy for risk sentiment. So that kind of gives you an idea of my current views on the sentiment in the market. I am seeing I'm seeing buyers stepping in at the lows here, but sellers quickly pushing price lower and not reclaiming any significant levels. On Bitcoin, it's very obvious. We have not really reclaimed any significant levels on Bitcoin. We are several resistance levels below before showing good strength. And then looking at gold, again, we go back to the fundamentals being the cause and technicals then showing the effect of the cause. And the cause here, I believe, could be multiple things, but definitely has something to do with the interest rate cut expectations. Because obviously, if the Fed comes out and starts cutting the interest rates, that is going to, well, it's not going to bring inflation down. Okay, it's definitely not going to bring inflation down. So what do we know? If there's extra pressure on inflation to the upside, that will obviously fuel interest, or potentially, I should say, fuel some interest in gold, because when inflation goes up, people are looking to hedge that inflation with assets like gold. And as we saw, the interest rates expectations shoot up. We saw a risk on move because people think that that is bullish for the market. More liquidity, easier money, easier access to money, more investments, good for the stock market, but also some pressure on inflation. And then, like what we talked about, the currency debasement trade, where we had the situation in Russia, Ukraine. We talked about that a lot during this move to the upside here, and that situation is still real. It's still active and it's still out there. The fundamental reasons for gold to be bullish is still here, and that's why I've opened a long position on gold. What's up, LJ? Welcome.
How we doing? Is my
Good.
camera laggy for you?
It's all
I
good.
don't know, it seems really laggy.
I think you're good, man.
But
Yeah, it's a bit laggy. Maybe it's a bit laggy.
all I know is at least it's working now. So
Yeah.
yeah, we'll
Yeah. So
just
I've
have
just
to deal with it.
I've just broken down the I guess some things that you're also thinking about here with the rate cut expectations, and we talked this morning about a potential long on gold. I know that you're looking at just perhaps just a move up to the trend line here, something like that. While I'm looking for more of a longer, bigger move to the upside. Interestingly enough, I told you that I opened up a live. So for those of you watching, I'm going to start 2026. I'm going to start with a new, fresh live account, and I'm going to try to build because I feel like I'm in a really good flow now, and I found a really good approach in trading that I like, that I would like to see if I can stick with during 2026. So as a kind of like accountability for that, I'm going to try to build a track record with a new live account. So what I did was I opened a new live account with a broker that is available on TradingView, and then I connected that to TradingView, and then I connected that to all my accounts with the fibers on a trade copier, so I can now trade directly within TradingView. So you can see right here I have an open position right here, and it's based on this here in TradingView. The issue with this is that I did some calculations, and I said, what is the? So I basically asked ChatGPT, what's the least amount of money I need in the account to trade the Forex market with 1% risk? And it came out and it said like, oh, you need like $600 or $700. And I didn't have the money liquid, right? I didn't have the money liquid, and so I wanted to set up the account yesterday. So obviously I funded it with a credit card, but it's okay. It's okay. I have the money. It's just I don't have the money on my bank account. And then I opened a position on gold. and gold
Why?
has, and gold has slightly different rules than Forex, obviously, because the minimum lot size is 0.01 and leverage is 20. Because I'm in Europe, and here they don't want us to use leverage or whatever. So this position here is actually a 30% account risk trade, which I'm kind of screwing up the track record from the first trade. So I need to have about
Hang on,
like
I can't keep. I don't know what's happening, but I don't know if you noticed, but my camera is randomly zoomed in. I don't know why. I'm sitting here trying to hold back laughing. I'm like, what is going on? Why am I like? It's like, hey guys, what the hell is going on today?
well
I'm
I can
gonna try exit and come back in, but I'm scared because I might not get back in. What is happening?
well I can see you.
This is insane. Oh, that's at least better. But do I risk it? I don't know. I feel like
Nah,
this.
you look good. What's the problem? I see your whole face.
Okay. Well, try. This is so weird, dude. Oh, sorry. It was tripping me out.
No, so there's a bit of an issue with the account size because I need to have um, I think I need to have like $7,000 in the account, and then I need to read because the only reason I'm doing this is to um, because I'm like I'm not really trading a lot on personal accounts. I'm making all my money from prop firms. So I've noticed that like the risk to reward when you're a profitable trader and you know how to trade within the rules of the prop firms, the risk to reward is so much better with prop firms that I'm able to make this same amount of money on prop firms without really risking any of my own money. So I don't really see a reason to be trading my personal capital. But now I have to rethink the whole. So I have money invested in funds, but now I kind of have to rethink my whole strategy because if I'm gonna be swing trading gold on a live account with this broker, I need to take like 7K and put it into a personal account.
Yeah. So what was the issue? So the lot sizing is different in Europe. Is basically what you're saying. And then
The
so
minimum lot size is 0.01 and the leverage
yeah.
is 1 to 20.
Right. Okay.
So I need to be able to risk 1% on this trade. I need like 7K in the account.
Yeah. Okay. Yeah. I see. Yeah.
And I was thinking that maybe I could just throw in, you know, 1 to 2K. Just have it sitting there and just trade, and then I would just focus on the statistics. Like I wanted to show, okay, what's my profit to drawdown ratio, what's the Sharpe ratio, Sortino ratio, like that's the thing I care about. And I don't really get like I can see those number on a yearly basis. I don't really care if you have a $500 account or a $10,000
Mm.
account or a $100,000 account. If you can show me that you've been able to have a good Sortino ratio for the last 12 months, I don't care what the size of the account is. But obviously, to be able to have those statistics, trading with low leverage and high lot size, then you you know you oh man, I forgot what I was saying. Henry said you don't need to heat anyway. Well, the thing is, I could have taken the money I invested in that one is 15K. It's insane, insanely expensive. So
Hang
yeah,
on.
that's
I'm gonna try it. I'm gonna try it. This is too much. I can't deal with it.
all right. He's out. Apparently, he doesn't like watching his own face being zoomed in. Anyway, this is the trade I'm taking right here. So this is based on the fact that I do believe that we have some fundamental reasoning, some fundamental forces potentially pushing price higher. But that's not really the main reasoning for this. The main reason for this trade is the fact that we have a what I view as an accumulation range right here for gold. And if you look at the weekly, I don't have the fibs on this chart right now because I'm charting on a different broker here. All right, there we go. Is that
Back to
better?
normal. I'm flipped the other way again as well.
You are.
I give up. I don't know what's happening. This
So
is
I'm
weird.
kind of going through the reasoning for this trade on gold, and we look at the
Yeah, do it.
weekly, and
Because I'm long currently as well. So yeah.
so like I said, we have the underlying like fundamental reasons I'm seeing here for gold. There are some factors that I believe might push price higher in the next few days or even few weeks. But I do that's not really the main purposes for trading this. But from a technical point of view, I'm liking what I'm seeing here. So if we go to the weekly, we can add some moving averages right here. And even though we see that a lot of times on the weekly, it kind of goes down to the 20 EMA here. So I do understand that there are still some we're still quite overextended on the weekly, but we have seen that the 20 EMA here on the weekly have now moved very close to the low right here, because when we printed the top, we were trading all the way down here on the 20 EMA. So we are now seeing price kind of stabilizing and the EMAs beginning to catch up. And then if we add fibs, which I don't have on this chart, we will see that on almost all the major um, swing lows on the strong uptrends for gold on the weekly, we have established a low somewhere between the 0.236 and the 0.382, I believe. So if we add a fib here, I believe it's going to be from that one to that top. We can go into settings and we can just add the 0.236, and then we can add the 0.382. Then if we remove everything else, we created that low between the 0.236 and 0.382. And if you do this fib calculations on all the major moves on the weekly, when gold has strong momentum on the higher time frames, this is usually the area where you create a higher swing low. And so that's one of the reasoning why I'm liking this area on the high time frames. And then if you go into the daily, we have this what I viewed as an accumulation range right here, with sort of a double bottom right here. We broke above the double bottom neckline, or the W neckline, and then printed a nice rounded swing low here as well, and then confirmed that with the daily candle close that we had yesterday. And all of this low happens like on the 0.618, which I really like. And this whole structure creates a symmetrical triangle as well. And I have my stops all the way down below the reload zone, which gives me a lot of room for error and a lot of time to exit this if it gets invalidated. Because if price moves like this, I would expect there to be a breakout somewhere around this area right here in the beginning of December. But if we do instead just trade sideways or move lower, I can quickly exit this position with knowing that this technical structure is now invalidated. And then for a breakout, we can take the measured move of this triangle, takes us all the way up to uh, almost all the way up to 4,700. But I'm looking at the minus 0.618 here, which sits right below 4,500. So what I'm thinking here is gold creates a new high, but it's probably going to be short-lived. So I want to get out here, or it's not going to be short-lived. It's just going to explode to the upside. There's also the possibility, but I'd rather take the profits on this one because it's a above 2 hour trade, which I'm definitely liking.
Interesting. Yeah, I do like that, because that sort of 4,600 area was, one of those areas we were talking about. I don't know, what was that, 6-7 weeks ago now as well.
Yeah,
As far as going into next year on the way to 5K. So I very much like that. We've built up this nice structure coming through. There has been decent buying interest at these lows. It was up in the air whether we would consolidate very heavily in a sideways kind of trend, but we've actually had quite momentous moves both up and down. So the activity is very much still alive. Obviously, we had this slight chop period just the past sort of week and a bit, where you can see sideways consolidation with wicks on either side. That was basically down to, like you were saying before, the Fed rate cut. situation. So we've jumped right back up on that as well, back up to like 80% or something now. So we saw yesterday NASDAQ stocks recovering and then gold ripping up as well. So I think I was talking about with Anastasia last week, the thing that we would need to see gold to take another leg higher is that the rate cut odds come back up. And rate cuts are positive for gold, zero interest bearing asset, therefore rates going down, positive move.
Yeah, so it's I, mean, I guess one of the reasons also, I mean, it's a zero interest rate bearing asset, which means if the interest rate goes down on the dollar, you might as well invest in gold if you're looking for that interest, right? But also, a decrease in interest rates means more liquidity, more money, and upside pressure on inflation, which is also bullish for gold.
Yeah, I don't think we'll get upside pressure on inflation per se, because I think like obviously it's always that thing with the consumer where the consumer is under a bit of stress right now. So it'll more so just alleviate their pressure rather than feeding into price input inflation, which is slightly different. We'll get asset inflation that's beneficial for that. But yeah, no, I like it. I think the Fed should cut. Arguably, as far as the members, they're still sort of 50-50. I did bring up, do have a little chart of where each of the Fed members are. Right now, we've basically got a split thing of 4 for a hike, or not hike, sorry, I should say hawkish, 4 sort of neutral, and 4 dovish. Right,
Yeah.
so it's very split evenly across the board. But I think they will lean to a cut at this
We
point.
have a quick question on EURUSD. I just wanted to show you the trade I have open.
Yeah, what's your thoughts since?
Well, it's we're prices hitting this level as support, then all I'm looking for is either we break down or we continue higher, and I'm happy to. I mean, it's too early for me to make a decision on this.
Okay.
It's because I'm trading this on the daily. It's way too early for me to make anything uh, out of this chart. We've had a sharp move to downside, and naturally, when you have a move like that, you come down into support area. Naturally, when you hit support after a highly volatile move, you are going to get most likely get a move back to the mean, a mean reversion type of move. It's going to be that rubber band snapping back. But then the question is, when you're back at that level, which direction is price going to take? And we're probably going to be back at that important level maybe tomorrow or on Thursday. And it's at that point when I can start making a decision, because prices obviously fluctuates between extremes, and when price is at one extreme, I'm not really going to be able to make a decision. I want to make a decision when we're closer to the average, because then I can say, okay, so now what's the probability of a move in from this average to the next extreme. So what I'm hoping is, of course, that price is going to come up here and test this level. Well, I'm not hoping for anything, but this is the general idea that I see is, according to price, more probable, which is a move up here. And then if we break this low, then this idea would be confirmed, and I can secure the trade and then just leave it open. But there is a fairly high probability today, especially depending on how this candle closed. And you can see how we have a doji candle yesterday. So we have a bullish doji candle yesterday. We saw a volatile move to the downside, hit support, indecision in the market. There's equilibrium between buyers and sellers. Obviously, they're accepting EURUSD at this level as support. Buyers are stepping in, taking price higher. The question is this just a move back to the mean, or is it a move that is going to break the structure, and it's then going to be a W structure right here? You break above the neckline, and then you're in bullish territory again. But if price does not break above the neckline of this W, and we instead perhaps create a high here and then move back down again. We do have the same, we have a, that symmetrical triangle type of shape. We reach the apex, and then the question is, which way are we going to break? But for me, it's either it's this level or this level that will decide the next bigger move for EURUSD. So I'm just holding this one. I haven't really seen anything that makes me super bullish on EURUSD.
Okay, fair enough. Fair enough. I see that.
Because I'm still seeing like uptrend,
Mm.
uptrend, and then I see this range, and I also see the local downtrend here, and I see a very interesting level. If I zoom up, like I really like this level with these touches right here, and then if I zoom out even more, I really like this low area right here, which is this right here. So there's a lot of things, like what I try to ask myself when I enter a trade is if okay, fast forward 6 months. Okay, so we fast forward 6 months and then we look back at this situation. If price moves down here, I'm definitely going to say, yeah, that looks quite obvious. If price just shoots straight up, I'm probably going to say that is not what we usually see in the markets. That is, I
Yeah, rug
believe
pull.
that's, yeah, I mean, it's breaking the
It's Trump's
structure
fault.
that, sorry, what?
It was Trump's fault. Blame Trump. Blame
Yeah, but
someone else.
I'm basically going to look at that and I'm going to say, well, this might be somewhat of an anomaly, which is we're in the market and we're in a structure, and I believe we're in, talking about the fourth turning, and we're in a crisis mode right now. We are in a situation where institutions are going to be falling apart. We are going to see the markets turn into a highly volatile crisis type of situation where there's going to be crashes, there's going to be revival, but there's going to be a highly volatile situation. So things like this can absolutely happen, 100%. But looking at, and the problem with those generational cycles that I know you're familiar with the last somewhere between 80 and 100 years, we don't have the data for that. The euro was not it when did they launch the euro? Was it like 2005 something?
Yeah, just earlier than that.
Yeah, so
2000.
we don't have the price data for the last 100 years. We have it on the Dow Jones and that sort of things, but we're talking about a cycle that none of us have lived through.
Yeah,
So everything can change. So I have to be mindful of that, but right now we have the price action that we have, and as a technical analyst, that's all we can do.
yeah, no, that's fair enough. Because my basic things that have developed and what have been on the horizon is obviously one, the Fed rate cut. That sort of seems to be very much back in play. We're getting up to the kind of numbers right now that it may just be, if it ends up being kind of 50-50 across the Fed, that they're all kind of split, it will just be the market, wherever the market is, will push the Fed. That's often the case. The Fed doesn't want to upset the market pricing. They tend to lean into that overall. So there's that, and then going into the forward projection is then how does this start to now feed into like the carry trade thing for the yen? I think that's where stuff unravels or doesn't unravel. So if that doesn't unravel for a longer period, then yes, you could get the downtick in euro dollar. If it starts to come a bit quicker or starts to be on the horizon, perceived as, then euro dollar higher from
Yeah,
that gentle trade.
I think the carry trade is something I need to study more. It's definitely something where I'm lacking knowledge, but it seems like it's a very important aspect of the market dynamics.
Yeah, I was putting together a few numbers. I started doing this last week. I still got to do a little bit more with it. some rough numbers at least to get like a general gauge of how much there is out there in the carry trade, sort of what areas, general ballpark figure. It's always hard to tell precisely where, what assets it's gone into, or gone into various assets which have then been borrowed against and then gone somewhere else and then gone somewhere else, right? That domino effect. But I'll try scrapping the rest of that together this week as well. I'll share it with you too. So
Yeah, that would be awesome. Would be
yeah,
interesting to see that.
I think right now though, like you're saying, I think euro dollar higher at the moment, which is, we formed a nice base. We're clearly coming up at least the midpoint of the recent local peak to bottom, sort of halfway up there, and then about 50%, the 61, your standard like fib retracement type thing.
Yeah, I would probably say we have somewhere between 50 and 100 pip move to the upside. So intraday traders or even intra-week traders, you're probably looking at EURUSD for long positions. If you look at the weekly, this is a textbook bullish trade right here. You have a first of all a long-term horizontal support area, and then the recent test of that support shows you that you have a very clear move where you have a strong move to the downside. Markets are slowing down. We got an indecision candle on a daily, and then price pick back up momentum. So it's very clear that there's a lot of interest at this level, and we're seeing the exact same thing: strong move to the downside. We're getting wicks to the downside, wicks to the downside, and then indecision candle, and then another indecision candle. And this is actually an inside bar, right? It's sort of harami pattern here where. And this is basically what this shows us is that there's a volatility compression. And interesting thing with volatility is that you're always going to have high volatility after low volatility. So volatility is not mean reverting; it's extreme seeking. So you go from low volatility to high volatility. You don't go from low volatility to normal volatility. You go from low volatility to high volatility, basically. So it fluctuates between the extremes, almost like an RSI, right? So what we're going to get here is, slowing down momentum, volatility, compression, and Bollinger Bands compression, and then boom, you're getting that after the squeeze, you're getting the expansion. So where is the expansion going to take us? Well, very easily we can put a fib on this move right here to the low. Where do we have the 0.618? Well, that's going to be right here, and that is. We can say 1.16. So 1.16 from current prices up to 1.16. That's about 65 pips, give or take. So you have that perspective, right? You have a idea where if this daily candle closes above this 0.618 here, you can go into the lower time frames. You can see that you have a very clear resistance right here. And if the daily, in my opinion, closes above here or on the lower time frames as well, but I'm not trading the lower time frames, but you get a move like this where you have a break, maybe a retest, then up to 1.16 or 1.59 something. You all of a sudden have a fairly good risk to reward trade here from an intraday perspective.
Yeah, I've got about 115.80 myself.
115.80.
Yeah, so it comes into some of the adjacent to left candle, like the body closes on like a 4 hour. You've also got the descending 200 moving average on the 4 hour coming through there as well. So
Yeah. Man, my battery's running very low on
contrast.
the laptop, and I'm running on a
Yeah, of course.
I'm running on a battery. What is it called? A
Portable charger.
Yeah, exactly.
Yeah.
So I gotta. There's still electricity still out. So I gotta jump out. I know Pedro is gonna come on very soon, and so I'll have to jump off before it cuts up. But I'll be in the
Can you
background.
give
I'll
me
be
like
listening.
literally 1 minute?
Yeah,
Just
definitely, no problem.
Yeah, and then I'll be
Yeah,
back.
definitely, no worries. Right, so we've talked about gold, we've talked about euro USD. No, you don't have to enter the giveaway again. But guys, make sure that you are subscribed. We want you guys to subscribe to the channel. Um, we want to get to that 100,000 subscribers by the end of the year, and we need your help. We need your help with that. So make sure that everyone do subscribe to the channel. I would highly appreciate that. What's interesting is, we talked about EURUSD here from an intraday perspective, but you see that I'm talking about the markets from a high time frame perspective. I'm only looking at the primary trends, and the reason for that is because for me that's the most stress less way of trading. I've talked with a friend this morning, and he transitioned. He tried to transition into being a swing trader, and he's like, I can't hold positions long. I'm not a swing trader, so I'm not able to it's for him. It's stressful to hold position for a long period of time, and I'm the complete opposite. Like trading intraday or scalping, or just intraday trading or day trading or intra-week trading is stressful for me. Like I'm getting a much better read on the market, and I can find a much better flow in my trading if I focus on the daily time frame and really only care about the where the yesterday's candle closed. I can look at the EURUSD here, and the current candle is not really interesting to me because we have uh, almost 12 hours left for this daily candle to close, and a lot of things can happen in those 12 hours. But what I know for certain is nothing is ever, and this is what I like about technical analysis. This price, this candle is never going to change. This is confirmed. This is cemented into the history of price right here, and that's what I focus on. So what is that? Well, that gives me a clue that EURUSD is most likely going to move higher um, for, I would say, the next couple of days. And then the important thing for me is to, because I'm trading like with the primary trend, the important part for me is to figure out what happens with this trend structure. This right here, this is what I'm watching. So what happens with this trend structure? What happens with those highs? Is EURUSD going to respect this high and start trading like this, or is it going to break out of those highs and trade like this, stop me out, and then potentially I'll look for a long? But that's what I'm focused on. What's the structure of the market? All right, welcome back, LJ. I see we have Pedro as well. I'm going to be switching to your screen, LJ, and then I'm going to be jumping off, and I will see you guys later today. I'm going to jump on and do the giveaway draw. Welcome, Pedro,
Brilliant.
What's up?
and
Good
goodbye,
morning,
Pedro.
everyone. Goodbye, Jonatan.
See you, mate.
What's up, LJ?
Pedro, how we going? How we going?
How good? How good,
Doing
man?
well?
How are you?
Good. Bit of chaos this morning with the stream, but
Mhm.
we're up and running now, so it's what
All
matters.
sorted. Yeah.
Yeah. But yeah, are you in anything today of particular? Just to start
No,
off
no, no. I'm
with,
trying. Yeah, I'm
over
just.
some
No, I'm not. I'm not in any trade at this point.
Yep.
I'm just trying to see where the best opportunities are. Unfortunately, and I've been, I've been calling for the trades on the end for many weeks now, and I didn't manage to catch any of the shorts. So that was disappointing for me on Thursday. I was a bit upset
Yeah.
with myself, to be honest, when price turned, and I didn't manage to catch anything. And maybe this is a top for now. We'll see. We'll see. But I didn't manage to catch anything. It's something that I've been mentioning on the live stream repeatedly for for the last 2-3 weeks. Fortunately, I didn't do anything with it.
Yeah, we have been. Hey, that 157.80 level basically
Mm-hmm.
played out to the exact sort of. We went a touch above it. It was like 89 or something, or just on 90, like just below 90 or something. So that did turn out to be the sweet spot right there. Coincided with the Fed rate cut probabilities coming back up,
Yeah,
like we're
it's
talking about
incredible.
as well, without bouncing. So see how that goes. We do still have like this is pretty much where everyone's sat for the Fed, right? So you can see it's very like 4-4-4. So it's still very split.
Mm-hmm.
But with that said, it seems as though the market will ultimately push them one way or the other. And I mean, we're now starting to like fully price this in, right? So
Why this difference though? So we had the NFP on Thursday, and I think it was around. I think it was actually the probabilities was higher on the keeping the rate and change on that day, but then
Yeah.
all of a sudden from Friday to the weekend, over the weekend, there was a big shift in there. Why? Where do you see the difference in there? What the reason
So
for it?
we've seen a little bit of continued banking stress in the repo
Mhm.
markets. So that's like the tangential one that has continued, despite the Fed sort of announcing that they're stopping the bank QE balance sheet runoff.
Mhm.
They're also going to potentially open up things like the SLR. I think was it Williams that's mentioned that they'll be dropping in liquidity anytime soon. He's still sort of got a bit of a hangover from the GFC, very much still in that like mindset of QE pumping liquidity, that kind of stuff. So despite that, we've still seen a little bit of continuing stress functioning through. The other portions is we've had a number of the Fed comments coming out where people are being pretty stern on a rate cut from the Fed members,
Mhm.
which was post the previous NFP that we had. Now, the NFP itself was pretty alright. It's old data, so it's not going to be taken so heavily at this point. But we did have some of the revision portions in the data that I think were, seeing as the rest was relatively balanced, that were slightly more leaned on, right? And then I guess arguing that if we saw those portions pulling back, we've now had the government shutdown, we've had everything else go on, we've had a bunch of disruptions. There's a fair chance that some of the data that we also won't get might have actually been a bit worse. We've seen some of the ADP stuff come out showing some negative signs. It's likely that there'd be some gremlins in the potential data, I think. So on the
That's where the
basis of
big
trying to
shift, I
weigh
think.
it all up, I think
Mhm.
it's one of those balancing scales things where everyone's trying to figure it out, and everything you start to put down starts to tilt slightly to the cut side. And so I
Yeah.
think people are just seeing that the Fed will ultimately rest there. You know,
Yeah. I think, in my opinion, I think it still can. It's still not definitive. I think since
definitely
we're
not.
still going to have one NFP before the Fed, that can still change. We'll see
No,
how
that,
that's
that
going
and if
to.
well, no, that'll be after the Fed. That's the thing. So it's on the 16th.
The NFP is going to be on the 16th this week,
Yeah,
on December.
yeah,
Okay.
December. Yeah, yeah. So that's where it got all into a mess, and that's why they dropped so heavily. Because that
Okay.
means the Fed won't get the NFP until after the Fed meeting. So we're doing it like the third week of December on like Tuesday or something, instead of the first week of the month like we always
Yeah.
have. Yeah. So that was the big piece that really dropped the interest rate probabilities down. Um, but knowing that we're definitely, because it would have been otherwise a lead up to that number, and then
Yeah,
that probably would
definitely.
have been the decider, right? But now, it's coming out after.
Okay.
Yeah.
Yeah, I didn't know that. I didn't know that. I was expecting to be kind of on the 5th of December, which is a Friday, the first Friday
Yeah.
of December. And
Yeah.
then on the 10th, we have the meeting. But I'm just checking the calendar now. So it's going to be on the 16th of December, which is that Tuesday that you mentioned. And then on Wednesday, we have not on Wednesday, then we have on Thursday the CPI
Yeah.
and
And then the Fed will
also
be the
the
week
ECB and
before
so on.
all of that.
Yeah, it's going to be on the
Yeah.
10th. The Fed's going to be on the 10th. Okay, so yeah, these last 2 weeks of December they're going to be crazy
Yeah.
until the
The
20th.
whole
Then
calendar, all the
yeah,
data is a total mess, right? Um, and
yeah,
so it becomes a thing. Do you need the data to make these decisions? We already had a slight trajectory of things coming off the burn a little bit, slightly weakening. You're kind of getting there eventually. You might as well take the safety cut doing this, keep up the positive sentiment, that kind of thing. Yeah,
fair
it's
enough.
it's not gonna distort mortgages like that much. That one extra cut. Yeah, So I think balance of probability. That's what they'll do. There's a bit of stress in the bond market, the repo market. Um, it all just seems to lead to there ultimately. So
So what are you expecting that for the indices? Are you expecting to see a retracement back to the upside? Are you expecting to see more downturn on the indices? What are you expecting when looking at NASDAQ, S&P, and so on?
Yeah, so as far as the NASDAQ, obviously yesterday we had the big pullback up. So we had that rather rapid collapse last week, right? Last Friday. Pretty aggressive. Coming into Monday, we've climbed right back up pretty healthily. And that was on the back of that rate probability coming back into the picture. So from here, let me zoom out a bit. EVMux is causing my browser to use like 90% of my CPU. So hopefully you guys can see this fine. On my screen, this is laggy as anything. So
I think it's kind of okay
yeah,
so far.
okay.
I think it's your picture. I think you are actually not mirrored at this point. My image was not mirrored, so I think usually whatever it's on your right is it needs to be on the left, and vice versa.
Yeah.
I need to go to the settings to change that. But that's just my ADHD kind of speaking in here.
Yeah, no, that's fine. Yeah, so I do think we will get some more upside, basically to where we had this the big downdraft sort of kickoff. That was once we came into this 200 moving average on the 4-hour pocket. That was roughly in line with some of the heads prior, before we had that initial downtick earlier in the week, which wasn't so aggressive, not at least in a straight line. And the week before that, where we had this head and shoulders type thing, which played out very textbook that we talked about with Anastasia. So I do see us getting a slight lift higher. I think the next portion, this is going to be a similar deal for crypto, which will be secondary chatter as to whether and when we'll get this increase of liquidity into the market. So basically that kind of secondary chatter around the banking situation, all the complex stuff that the market will see as very fruitful, I guess, overall income combination with the rate cuts. I don't particularly think we'll take a run to the highs just yet. I think we'll have to see a couple pieces of the data and a few more Fed comments leading up to the actual date. We might start to take a bit of a investigative look higher, but I don't think anyone's going to push the throttle for breaking new all-time highs going into like some massive Christmas rally like we typically get. I think we might just get a general upbeat, pretty Goldilocks sentiment, and we kind of end up somewhere near the all-time highs going into Christmas, but not necessarily a new leg, as we often get.
Yeah. You guys in the chat, you guys can also answer this question I'm about to ask of Jeb. It's basically, where do you think the bottom can be then? Like when you're looking at the bigger picture, just looking at the technical side of it, do you have a key level that you're looking at on NASDAQ? And maybe someone on the chat can also mention, anyone that trades NASDAQ, where do you guys think that the bottom is going to be in place? Or do you think that the bottom is already in place? You guys can share it. And just to mention in here, because this is actually what we usually call the hardcore members, which is when you have more than one Gmail account, okay, you actually subscribe with both accounts, okay, or even bring your family as well to subscribe to the channel. We are open to everything, even if you have a pet or something like that. Like if you want to create a Google account for a pet, you can also subscribe. So you are free to do so. So that's what we call kind of a hardcore member. So thank you, YD Trades. That's exactly what we like. On the road to 100K. So you guys already know it. But yeah, so where is a bottom that you see kind of as S&P, NASDAQ? Where do you think, when you're looking at the chart itself, or maybe with your moving average as well that you usually look at, where do you see that being?
Yeah, so as far as if we go out to the daily and the overall structure of the NASDAQ, the typical pieces you look at, say on stocks, because they're momentum based, you're often looking at the 50, which is this blue line here. So if we go and hide the Kalman filter, so this blue line just in here, and then you've got the 200-day moving average. So it's the 50 and the 200. So typically, often you move below the 50, close below the 50, you're taking another leg lower. The first next test is going to be the 100. we did get the bounce in there. You can see we've got to the left a few of these like candle legs, the wicks coming off, as well as that aggressive downdraft we have, which then we gapped higher that next Monday. And that's also roughly the heads from this sort of brief consolidation cluster on the way up, right? So right now, the next piece to tackle is to get above the 50, just here, just a touch above where we are. That's sort of what's capping price around here. We did push beyond that just on that Friday before we collapsed, created the wick there. We've now had another drive higher. So either this is going to be the low near term. We managed to close back above the 50 here, start to go towards the 10, and then that's that Friday's peak as well. And then beyond that, you're going up to the the next levels to the left and to the left, and then eventually all-time highs. Now, correspondingly, if somehow some of the Fed members come out and give some worries, some concerns around validity of the rate cut odds increasing, and start to throw out some, dousing those flames per se, we could see this tick back. It sort of starts to get, capped by that 50 moving average, and people pretty much lean on these two in between, basically between the 100 and the 50. Eventually, further downside pressure, the dam breaks below the 100. Next point of call is going to be the 200. And the 200 moving average tends to be your dead point for the momentum of the current rally. So once you've sort of managed to get below there, close below there substantively, often not just on a daily, but like a weekly close, then you might go, okay, the bull run for the near term is dead. So long as we're above this right now, we're still in good shape. But the next hurdle to tackle is back above the 50.
Yeah. Would you consider? So because if price does go to that 200 that you have in there, it's around 22,400, something like that. That will mean a 15% retracement. At this point, you are close to 9-10% retracement that we already did. So that would make the market go down for another 5%. But then it will take us basically to the previous level of support resistance. That was the high in February, March. If you zoom out a little bit, you can see it on your chart that you had that top being created in February, and you're getting really close to that structure in there.
Yeah, that's what I was about to say. So this was just before the downdraft with Fed
exactly.
coming in, and then so that's probably where you'd find your absolute bottom.
Yeah,
if, worse
so that
to
would
worse,
be
Nvidia tech starts falling out. We're not getting rate cuts. Inflation somehow picks up. We get some liquidity crisis in the bond market. That's what you'd need for that to happen.
Yeah, that would be. And what do you think? Like, this is kind of a different question, and this is kind of in general, but okay, we can apply this basically for any chart. But when you're looking then on the daily time frame, because we had that low from the 10th of October, that big candle did back that big red candle, and price on Friday, Thursday, Friday got really close to it, but it may have not closed below it, which for some people, maybe they'll turn bearish if price had closed below that level, but because maybe price actually end up not closing below that a week, then kind of at the green candle straight after that, they may turn that into a bullish scenario. Do you think that if by any chance price does end up breaking below that, which kind of in this case would also mean breaking below the 100 moving average, will turn a bit more bearish overall the sentiment?
Definitely. So I really like that point. Like, that's a very good piece to always remember. It's not just breaking a certain level, it's breaking close often, right? So the same way that just like Pedro highlighted down here, we came to the base of these wicks, and that aggressive candle that we had on the Friday, whatever it was, before we gapped higher right back up. That was around the China, with the China trade stuff kicking off again, right? Which then over the weekend, it went away. And we were right by the top of that wick there, right? So we did break through it, but you can see the close. We managed to close basically. We had the open there. We broke through it during the day, but then came higher and formed a bullish candle and closed higher. So we didn't get an actual close below that level. So similarly, on last Friday, when we had come up and approached the 50 moving average once again up here, I'll try to zoom in maybe a little bit more for you guys. We did get a break back through that, but failed to close above the 50, right?
Yeah.
Then came down, created through. And so similar deal, even though we had bounced back up, we weren't able to close back above the 50. So, in both directions, you need the break and then the close above those certain key levels, and that sort of tells you that participants are willing to stick with their position. So that's indicating they're a bit shaky on the upside. This was also indicating they're a bit shaky on further downside pressure.
Yeah, no, that's good. Yeah, just a few things just to understand, because basically this question was to try to get the general sense of where the most marketed participants will try to understand based on what you can see in the chart, like what they will kind of start to predict. And I was trying to understand, or try to put myself on the shoes of kind of the majority based on technicals, and then try to see if it makes sense or not as well. But yeah, that's interesting. Many people are asking about gold as well. Where do you see gold going? Gold yesterday broke slightly a new top, that intermediary top. Do you think gold's going to go higher, lower? Where do you see gold going?
I do. So let's bring on this back. So I'm in gold long right now. This position, so that was the first half of the position that I entered. And I'll go out to the higher time frames while I'm targeting up here in just a sec. But this is basically where I initially entered 4130 from this pullback after hitting the highs from today at 4155. Late Asia coming to just before London. And then as we dip back down into this 10 moving average and at the top of these candle closes here, I bought the other half. So the average price is somewhere in the middle of this, about there, about 23, right? And then from there, I'm targeting up at 4180 to 85 as the first interim point. God, this is so laggy. So it comes in where the base of these wicks are from this higher local price action cluster to where we dipped through, came back above, then had the massive fall through there. If we go out to a larger time frame though, it's also from that initial downdraft from the all-time highs. The wick we created was right here, right? So if we zoom that like a touch, you can see that's where the wick was created. That then lines up with these guys. You've got this trend line coming through here, forming a bit of a triangle. I think Jonatan was on here talking about this just before when he was around. And so those two line up very nicely together with that trend line, the wick from there, and some of the candle body closures through here that we basically tested and then collapsed through. So there's your 4180. And then Jonatan is basically looking for a push and break above that up towards the highs. And then, as he said, beyond that towards 45 to 4,700. But I'm just looking at holding this a bit more near term versus his very large swing trade. The other piece that I do like about it is that we form these sort of channels. We've had quite a number of channels this year on gold in general. We had a nice breakout through here. All through yesterday, we held up very nicely. Today, we've held up very nicely. And there seems to be, if you go down to lower time frames, a general willingness to buy any of the shorter dips. Right? It's been pretty sustained price action up higher overall. So, and I think the momentum as far as the rate cut type situation is probably going to continue for a bit. So that's what I'm looking at in gold.
Yeah, looking at the chart, I can see kind of those accumulations. It was also kind of some channels in here as well. We even talked when this was being created that it looks like that the way price spent so much time at the lows, it looks like that this could have been some kind of accumulation to push eventual price closer to the tops. Then price ended up finally taking this move into it there. This was kind of a structure that we had in mind, and then price came back into this structure, which was another good level to look for a long. Unfortunately, this was kind of a bit worry, and then price broke above, retested again, and it went in. Now kind of those challenges that you also mentioned yesterday kind of managed to break a little bit more to the upside. It's a bit difficult at this point for me to say that price is ready to go all the way to retest the all-time highs.
I agree.
But I think within the level that you are trading, I wouldn't be surprised if price does go indeed kind of retesting this level. I was actually looking a little bit deeper. I think exactly where was the comment? Exactly where Kamran Khan, I hope I'm pronouncing your name correctly, mentioned, closer to 4,100, kind of a little bit close to this level. That's where I was hoping to see gold kind of retracing a bit more before continue on this rally after breaking this topping here, and I could see price eventually getting to that target that you mentioned. You have that trend line as you showed, and it's kind of a little bit off structure. Even though, if I want to be a bit more specific, maybe price could already start seeing some reaction, which already got really close to it at the base of this level. But for now, anything above this level or kind of below this level is going to be quite difficult. I could see gold trading within this level and maybe trying to find trade opportunities within there, if that's your trading style.
You can see there's a wedge like from the bottom section as well. So just like you were saying, I think that's going to be the high near term. And we sort of keep bang off the top, consolidate, and sort of coil up and eventually break through.
And
I agree the
direction you break, we'll see
probably next year. So
and the direction that you break, that's going to be a big clue. Like, of course, if you do break above, maybe then an explosion, the target's going to be the tops. If you do kind of by any chance to kind of break below, maybe are going to go towards these lows, and who knows, even a little bit lower than just where we are right now. But we'll see. I think it was, again, about time for gold to kind of stabilize a little bit instead of just keep on going in a rally like it has been throughout the year. I think it does make sense to find some balance, trading around the structure before eventually breaking either to the upside or to the downside.
I see both that and the NASDAQ very similar. I think they'll actually move largely together. So if we get the positive risk on type aspect for indices, we go higher. I think gold will also go higher with that. That's basically helped by those rate cuts and everything. If indices decide to crash because whatever catalyst has caused that to do so, I think once again people start to liquidate their positive holdings, like strong holdings, to cover some of that. And then we'll see gold come off a little bit again, since they're having quite strong gains there. So, and that's not necessarily something because people don't believe in gold. That's just one of those, like, you're trying to build up your cash position whilst indices are coming off, right? So it's just a portfolio readjustment.
Yeah. All right. Yeah, Pedro, actually, oil is coming down again at around 58. I think maybe there's opportunity to potentially look for new longs on WTI. We'll see if price kind of keeps rejecting this level. I think that's maybe an opportunity to look for this week once it's back at these lows. So we'll see if there's still strength in there or prices want to go a little bit lower. But I think it could potentially lead into an interesting opportunity. The way price has been moving to downside also is strong compression, so eventually could just turn into, who knows, maybe retest this level again and keep on trading within this 57s to 62. Could be eventually just trading in within the range, basically. Anything else that you're looking? Because you did mention, just to go in that point, because you did mention regarding the US indices, the importance of potentially NVIDIA and also other big seven. Because if you just go really quick through the big seven, we see kind of NVIDIA, even though at great results, it kind of moved down a little bit. I think maybe the investors are a bit scared of the potential top on capex. Maybe they are investing way too much, and for a much longer they can continue to invest like that. So NVIDIA is somewhere around here, close to the highs, but it's starting to reject a little bit the highs. This for me starts to become a little bit of a reversal pattern, something that I like to see. Then you have Apple is quite strong. Google is quite strong. Where is Google? Google is quite strong, but then we see Meta getting weaker. We see Microsoft as well respecting this double top and getting weaker as well, even though kind of potentially can react from the structure. And we see Amazon as well, kind of rejecting from the top and kind of going back. So it looks like there is a mix between Apple, Google, and potentially Nvidia, and then the other ones. It looks like they are a little bit weaker. What is your take on those before maybe going to Forex?
Yeah, so it's basically those players that have more heavily invested in the AI infrastructure type situation, right? So they're sort of getting battered down. That's been the talk of the town recently across, headlines, Bloomberg, this, that. We had Michael Burry with his shorts and all this kind of jazz. And I think he tweeted on the weekend as well. That was like phase one, and is going to put out some kind of longer Substack about the next, portions, whatever. So it's sort of related largely to that. We've seen brilliant gains, and I think people are getting a bit dubious of. Even if you just take the broad index, say the NASDAQ or the S&P or whatever, we've had like sort of 20% on 20% on 20% gains for the past 3 years, which is pretty insane. So, it's very rare that holds up, right? You do need a reason for it to sort of break down per se. But as you get, closer and closer to those unreasonable expectations of just, probability, people do start to pair some of those holdings just out of, sort of common sense type facets. So particularly with the other parts, Jerome Powell's going to be leaving. Like Jerome Powell's been very stable, very solid. Whoever we get, the new sort of makeup of the Federal Reserve, and whether Trump starts to put his fingers in more there. The idea of the tariffs was it was meant to also pay for the big beautiful bill type thing. Now he wants to take that money and give it away to the consumer. So, okay, I thought that was paying for it. So how are we now paying for it? Where's the tax money come from? So there's a bunch of these kind of variable questions coming up. So I think it's just one of those things. It makes sense to take some money off the board towards the end of the year, wrap up the fund that you have with good returns. If you're seeing something like gold as an example, so where you get that, you've got some of these positions quite mature. Gold has actually then come off, the 13% of what we hit. You're seeing some of these other guys at all-time highs. Okay, you still want to buy more gold. Maybe you rotate some of those profits out into the other asset that you think actually probably has more potential going into the next year, and at least does also play a defensive role in the event that the whole tech stack sort of breaks down, right? So it has like a dual, characteristic there, I guess.
Yeah.
So I think it's just repositioning,
Okay.
Readjusting portfolios, which is natural.
Okay. So you still don't see kind of a potential top on this AI euphoria that we are seeing.
Not yet.
I think some kind of correction before moving higher again. Okay. All right. Guys, ask us any questions. Any pairs that you are looking at, any assets. Feel free to let us know what you guys are looking at. Where do you think the dollar? Do you think dollar is going to go higher? Dollar has been stuck in this level for the last basically 3 days or something like that. You see it going a little bit higher. We kind of took slightly the high from the beginning of November, but they are quickly come back into this structure. Where do you see the euro and then the dollar moving? More upside on dollar or start a correction from here?
Yeah, so similar to like what you were saying before, where you're kind of waiting a little bit for stuff to play through. I think right now we do get more downside for the dollar. I think this has kind of peaked. I don't expect us to all of a sudden make some dollar lift. I think especially seeing as the rate cut picture is coming back into vogue, the market seems to be pushing them that way. That's still up for question. But right now, I'm still leaning that we will get that rate cut. We're starting to get a bunch of the other varied political pieces out of the way, whether it be Japan, the new government, the Ministry of Finance, the Bank of Japan, how that relates to the currency, which then relates to China with the trade talks with Trump. This is all starting to get to the next level, starting to move along. So I think ultimately that we do get that pressure on the dollar yen. that does come down, that further spurs the DXY off altogether. The nearest interim question I have is obviously the UK budget talks.
Yeah, tomorrow. Yeah,
come right up tomorrow. Yeah, exactly. So where that's going to land, and also the question being, depending on the framework within it, how that potentially then drives the euro, right? Because sometimes you can see euro dollar getting pulled down because obviously the UK and the euro zone, they do a lot of trade even after Brexit. They're still very interlinked to a degree. That, or sometimes you see euro dollar fly to the upside, primarily because euro pound is ripping, and then so euro complex as a whole drives higher. So as far as the DXY, that's going to overweight any kind of downdraft in the pound, which I think for now we will sort of be a little bit mixed in this top section, but ultimately coming further towards December and the Fed rate cut, we get the remaining pieces of what data we have. I think we will start to break down into Christmas, somewhere down towards 98 again. I think going beyond that, I think it'll be a next year story. But I do see further downside, basically back into the middle of this bottom range down here. So somewhere in the 98 to 98.5.
Yeah, because at this point it's really stuck at 100. Like so, this round number 100 price is not really moving at all. I kind of tried to already break it once or twice, but it keeps finding resistance at around this level. So yeah, it's going to be interesting. It can have a little bit of a correction. I would like it to see going a little bit higher before making that move down. But honestly, when I look left, I don't really see any level that stands out to me. That price could just retest and move to downside. So I'm not really sure. I'm not really sure at this point what I was expecting, kind of this rally on the dollar since a long time ago, but now that price is at 100 again, I have no clue exactly what.
Because I think the only next point above where we are now is about 102, right?
102. Yeah, it kind of goes back to that. Yeah, that top. That's kind of where I was looking at as well. There we have that top in May that was created around that level.
So I find that hard
maybe that could go.
Yeah, running back to 99.75 here, where this 200-day moving average is coming through and the 10-day is rising. So it's about 99.80 just here, right? So I think that's the next sort of interim small pullback. That comes to euro dollar. We were talking about just before with Jonatan. I think we'll rise up through here to about 115.80, starting to look pretty bullish. It's basically just into the middle again of this near-term cluster here, so at 115.80. But yeah, so I think we're just going back to a slightly more neutral stance, where the dollar has had a bit more juice over the past week and a half, 2 weeks. I think it just needs to come back to a neutral position. Then we'll get some more of that Fed speak, whatever it is coming out, get a further direction on the actual cut, and then we'll go one way or the other. So I think right now we're just moving back to neutral. Across the board.
Yeah, some people are asking about the pound dollar. We have
pound dollar. Oh. Well, yeah. First of all, what do you think on pound dollar from what you're seeing?
On the pound dollar? I can see. So pound dollar has been a bit more steady. I could see a bit more upside on the dollar than on the euro. I think the euro could still, when I'm looking at euro dollar, I would like still to see euro dollar retesting a bit closer to these 114s. Even though if there was, again, I think we mentioned that already last week, if there was a level that I would like to see that, in my opinion, euro dollar could go higher within this low, it would be where it reacted. So kind of we got really close to this extreme, which we at this demand zone. You kind of feel that fair value gap that was in there, and price found a way to find some buyers, and we are reacting. Now price could fake out this top, maybe react from around that level that you just mentioned, 115.80 or something like that, and then maybe just move down. So that could be a quick one. Just take the liquidity above these tops, maybe find some selling pressure in here, and just try to push lower. So this could be on the cards on the euro dollar. We'll see. But the pound is overall, is I think still a bit more bearish. Overall, still bearish because it just literally broke all this structure, and price maybe could go a little bit lower. But we are at least within this structure, we could hold a little bit more, and we actually broke some structure at around this level. Again, we reacted really nicely from these lows, and we'll see. To be honest, we'll see. I don't like to. I wouldn't be super eager in to trade within this level. I would like maybe to see this top being broken and then give me a bit more confidence that we can maybe do another run to the upside. If I was about to trade anything within here, I think that would have been already played. Either try to sell from here or try to buy from there. I wouldn't be eager to try to sell again from close to these tops. I think price already spiked quite a few times that level, which means that I'm not sure if there are many more orders waiting at around this level to be picked up. And that is lows price already kind of created double bottom, so I don't like to trade triple bottoms or triple tops, so I'll maybe just skip it altogether. If I was about maybe to try to trade a pound pair, maybe I'll try to look at euro pound, for example, which is it's been in a big rally. It's really close also to this structure, and maybe the way price is starting to reject, maybe eventually either create one new high and then sell it, or already start looking for potential sells where we are potentially now. So I think somewhere around here we can try to see some weakness on the euro pound. Price already kind of spiked from there, so maybe whatever price does, maybe can have it, could already have it actually on Monday and maybe Friday as well. So I'll try to find a pound pair that is maybe a bit more, or gives me a bit more better setup than the pound dollar. It could be, for example, maybe pound Aussie, which I haven't really looked at it that much, but also kind of found some support at around this level. So we are kind of seeing a few pound pairs finding some support. We also look at pound CAD as well. So we have pound CAD finding support in here. We had the pound Aussie finding support at around this structure as well that we had, even with this top as well. We had also pound dollar also finding a little bit of support within this structure that we had from the past, and we have euro pound, which is kind of the opposite, finding some resistance at the top. So I'm not sure if price is ready to finally kind of seeing some little bit of more strength on the pound, which kind of would push euro pound actually to the downside, or if there's going to be any other leg down in general on the pound, and that will push euro pound to the upside. But it's interesting when you go across the different pound pairs that you see some of them respecting good or higher time frame levels of support and finding some buying pressure from around this level. But tomorrow is going to be a big one. For sure, there's maybe already some clues of what the budget is going to be. And the market has been reacting to it. Actually, initially the market reacted to it a lot, but then it looked like the chancellor was changing her mind in regards how much tax she was about to implement. But I think tomorrow should be seeing some volatility on the pound. It's not that often that we see nowadays FX reacting too much to direct policies, but the pound has been really volatile to this one. So we are expecting some volatility.
Yeah, I mean, the pound always is, right? Has been for a while, because it's been an ongoing issue. I mean, we obviously have the dollar doing the same, with Trump. But typically most things are pretty stable. So, and as far as Europe, it'll typically only be something from like the banking side, that affects that type of stuff as far as regulatory things or whatever. But yeah, so for the pound, I agree. I would rather, given we have the budget stuff tomorrow, I would rather wait for the drive towards the two higher sides, right? So let me just bring this in here. So yeah, right now we're sitting basically in the middle of this lower local range here. Kind of like Pedro was saying, I'd rather see us, take some sort of move back up above 132 and see that it actually holds and sticks, and then take that leg up towards 133.5 and beyond potentially if we get that sustained momentum. That allows us to look for that as an impulsive drive higher, and then you've now got resistance to lean on. and then potentially take a short for that move to just reverse back to pretty much where we started. That vice versa, if the market hates it, you'll see this run right down and then see if we get some kind of break below the 130 and then beyond. To be honest, I think we're probably most likely to stay within this range between 132 and 130 for the reason that we've had a lot of this telegraph now kind of ahead of time, which was intentional. And we probably had the majority of the volatility from that before. So
exactly.
Since then, they've tried to, throw out, see what the market isn't liking, or, certain pundits, participants, whatever, criticized, and they've tried to throw out further iterations on that. So we've kind of already got the structure, unless they throw in some curveball thing that they haven't spoken about. I think it'll just play kind of within this range. So whatever way we get a dip that might end up being a buying opportunity. We get a spike higher. That's probably a selling opportunity back into the midpoint. I think if we did get the move higher, that probably has the larger momentum. So I think overall the net thing going forward will be a net higher pound once this is digested. The secondary thing after that, I think I definitely have a lean that Rachel Reeves, so she's the Chancellor of the Exchequer. If you guys are wondering, she's the one doing the budget. I think she'll get fired. I think she'll get kicked out again.
Yeah.
So
possible.
That's the next part, that whether the market sees that as positive or if the market sees that then as negative because we're just doing this over and over and over again. And we're just going to, okay, who's the next person that's going to turn up? Who's the next bozo? Are they going to be sensible or irrational or ridiculous, or right? So that's a hard one to call, because the market could at least see it as, they're trying to put in proper effort now. So,
it happened in 2022, right? When it was actually the prime minister, and she kind of just was out of the office quite quickly, kind of in 1 month and a half.
Whereas the
also she announced something quite
lasted longer.
Yeah, she announced something quite catastrophic. The market reacted really quickly. The guilds reacted, and she was out of the office really quickly. So the market still have an impact, or at least the government actually pay attention to what the market is doing, or is saying, and they take action. So it's going to be interesting to see what kind of budget actually she's going to announce, and how the market is going to end up reacting to it. Most can already be reflected with news that came out, but it's going to be interesting.
And so the market has gotten more used to that with the UK now. So since was it Liz Truss? Since she went, we had that initial very aggressive volatility at the time with her. The bond market, the gilt market, has basically moved a lot more than that event, and has been still just as sort of active. But we haven't seen quite the same volatility in FX. Only in a couple of these moves, running right down pretty aggressively. But per the corresponding move, it's not one-to-one. So the market is gradually getting more used to it, less sensitive, just like we've seen with the Trump stuff over time. Initially, that was very chaotic. Now the market cares less and less and less over time. So Bobby Fisher was asking before with this. So do you think 2026 could be a good year in terms of global situation and stable markets? So I've got this up here. So regime model for the USA. So right now you can see inflation expectations. They're right down. Inflation seems to be, every single measure is saying it's very under control, chilling. It's not going anywhere. Right? We are seeing that slight pickup in liquidity, like I was talking about. So growth is pretty whatever. It's just by the by. But primarily, as far as markets are concerned, that liquidity portion is going to be important. So we've had the Treasury General Account, so the TGA in America, has been stacking up, increasing that account. We spoke about this a while ago, up to about 700 billion. So they've got excess liquidity. They could dump from there, about 200 billion or so. We've got the money locked up there from the government shutdown, which will be gradually rolled out between now and Christmas. And when the government opens, it's about 150 billion. We've got potentially, the SLR, so supplemental leverage ratio for banks, which just means how much collateral do they have to hold in reserve versus loans they can give out. They're going to drop that, so that means banks can stimulate the economy a lot more. The other portion is, since the Fed is stopping the balance sheet runoff, that adds liquidity. Balance sheet runoff is draining liquidity. And the further thing is they're trying to do some stuff with the banks to put more of the bonds onto the bank's balance sheet rather than it all being dependent on the Fed. So then that gives the Fed more leeway, but you're still getting this liquidity, the mechanics going through the market, just via a different mechanism, that kind of thing. And having it more of a dual system rather than everyone's just obsessed with the Fed and every single little move, which often puts them in like golden handcuffs because they can't fully maneuver. Something goes wrong. So that's all going to be beneficial. Potentially get the Trump stimulus checks of the $2,000 or whether it's $1,000 or whatever he gets approved for every single US person, which comes from the Trump tariff money that they've made. So all of that added together is very stimulative across the board. And at the same time, we've got rates coming down with Jerome Powell, probably going to happen in December, still up for debate, but at the minute, leaning there. And then obviously you got Trump putting in the new Fed chair, who definitely wants to cut rates, and he's going to be pushing that kind of vibe, all that kind of thing. So this is going to be quite stimulative. As far as stability, that's another question. I think this will be juiced up pretty heavily. My view right now is the first sort of 6 months are going to be pretty good. Going into Q3 2026 is going to be tough. So liquidity should have peaked by that second half, end of second quarter. I think Q3 is going to call everything into question, and then potentially towards like Q4 or back end of Q3, we get some kind of, we've had the blow off top, rates have come down, game's over, market's ripped, and then we get some kind of a crash and some kind of instability or infighting or something like that. So, because that would also be then the point where other trade partners, whether it be China or someone else, wants to, take things back and hit the US when they're vulnerable because stocks are coming off, that kind of thing. You get those bits and pieces stacking up. And I mean, if AI keeps running another leg all through next year, yeah, again, just like we're questioning it now, people are going to be questioning it even more, saying, okay, NVIDIA's at, I don't know, 6 trillion, 6.5 trillion, 7 trillion, whatever insane number. People are going to be like, okay, this is now getting bonkers. So first portion of the year, I think we're good. After that, very much up for debate. But I will say gold beyond 5K next year, I think is a pretty easy call, and quite likely up towards 6K or more, quite possibly.
There you go. Yeah.
There you go.
Yeah, we'll see. Some people asking about exactly. Yeah. Jay, what's your take on the pound?
Yeah, sorry, I was just running through everything else. So pound yen's going to be somewhat similar to the pound stuff we were talking about before. The difference being obviously the heavy yen portion, which we've also talked about. So right now the yen should be in a good position to strengthen. If we go have a look at dollar yen, we seem to have hit a local top. We are gradually starting to pull back down. The key point for dollar yen is going to be 156, right? If we can crack it there, we're back right down to about 155, another 100 points, and then another 50 points, and another 50 points, and another 50 points. Yen pairs often tend to move in these kind of round 50, 100 blocks overall. So if we then look at the pound yen, that's going to get a tangential driver from that aspect. We've also got, obviously, the pound news coming out tomorrow, like we're talking about. So with the budget. Now, yen in general is a risk off. It's a soft risk off currency, so it strengthens when we get risk off elements coming into the market. It used to be much more of a stronger risk off currency, but that we've got different market conditions these days. But overall, pound yen, I would, to be honest, probably just not trade it for a little bit, given we've got the budget thing tomorrow. But if I had to pick, if I was forced to pick, I think downside is probably the way you'd want to lean, because you've got the strengthening from the yen, so dollar yen coming down, so that would mean pound yen would come down in general in tangent with that. You've also got the potential risk of the market probably leaning slightly to not liking the pound news, right? Yen being a defensive asset, this is likely to tank. So if I had to take a forced position, I would say short near term, your next levels are going to be down to that prior head once again, about 204. 10-day moving average, 203.30. 50-day moving average through here, 202, 35, 40 odd. And then basically just look at each of the candle closes and block levels through here and eventually buy down. I don't think we'd get buy down to 201, but you could definitely see, I don't know, about 203, 200 points downside at least on pound yen. I would say in the and then obviously the other side is, you know, if the market thinks it's not that bad, pound yen goes higher. Simple as that. You know, it's pretty similar to the pound dollar situation like we're talking about. I would say just avoid it really at the moment. I don't really like on a daily. If I was viewing this naked without all the other information, I mean, you'd either want to be buying off this 205.30 level with that prior top there. But at the same time, we've cracked through, we've pierced this, we're not exactly convincingly moving higher. So even yesterday's candle wasn't able to close beyond the prior candle close from last Friday. So I would probably be avoiding this overall, and I'd look for that, or I'd look for like a daily close below 204.90, right below these candles here, the body close, and then I'd go short if I was viewing it naked without the other information.
Yeah, if I was about to give my opinion on the pound yen, so when I look at the yen index, as I've been talking for a long time, even on the live stream, we have been getting closer and closer to the bottom of this candle, of this move, and the question mark is: are we going to create kind of a double bottom from here, or eventually going to go below it? But I think at least one reaction should be expected, and we start having that reaction on Thursday. Even for anyone that maybe tries to trade or look at fair value gaps or kind of something more technical, that's more or less where price end up going to. So kind of below this low, kind of within this level, somewhere around here, price found some buying pressure, and that's basically where we had this move. One of the most safest targets that you could have expected was basically for price to feel this move. So went down, basically just retested. That would be kind of a clear easy target that we could have anticipated. And that's why I was a bit upset, because this was when you are looking for a reversal setup, especially kind of a higher time frame bottom or top. It's something that I'm going to talk a little bit about on Thursday when I explain a bit my strategy. One of the highest probability setups that you can look for is the first reaction, or kind of that first move towards the most clear level on the higher time frame, basically the opposite level on the higher time frame. There's a high probability that price actually is going to end up filling that space. After that, it becomes a gamble if price actually ends up holding and going down again, or it kind of eventually breaks it and then kind of creates different dynamics. But so on the end strength, this is a really good target, and now I'm going to be interested to see if you're going to manage to break above again. If you do manage to break above again, then maybe can open space for price to go a little bit higher, maybe go all the way to react from this trend line, or even a little bit higher, which means that then all the end pairs are ready to go even lower. Now, when I'm looking then individually at each one of the yen pairs, so yen index, the dollar yen, sorry, as I mentioned also, it finally reacted from it's slightly higher than 157, but it's still within the structure. Actually, on the lower time frame, it's a beautiful supply where price end up reacting. And again, I think maybe price can still go a little bit lower. So dollar yen, I think price can still go a little bit lower. A yen index basically already filled that space, but dollar yen already kind of there's still a little bit of space that price can go towards you, and then eventually can even go lower. Like we need then that confirmation that price does want to go lower. Euro yen, same thing. Euro yen reacted really nicely from that level I've been talking about as well. That higher time frame structure that we have, price got really close to beautiful fair value gap where price reacted at the top, and potentially can also sustain. We even managed to slightly take this low, so I could see a little bit more of bearishness in here. However, the pound yen is the one that it can still show a little bit more strength, in my opinion. Price is reacting from this top, basically a little bit of a double top in this case. But when you are looking at where price is coming from, I don't really see any break of structure on the pound. Price respected these lows, price keeps respecting these lows. We have this compression, price keeps respecting the lows. There's maybe one in here. Then you had the gap, price respected quite nicely the gap or closed the gap and went higher. And I could see eventually actually pound yen end up taking this top around here. So if there was a yen pair that I could see a little bit more of strength, in this case, it could be the pound yen. And price can eventually even go a bit more deeper into this level, or my favorite level to be actually somewhere around here to look for a bigger sell. So that would be a little bit of what to look for. If price does break below this level, then maybe we can fill out this price, or maybe even go close to 200s. Maybe from 200s you can find a new long opportunity. But overall, a higher time frame pound yen would be the one that I'll be a little bit more cautious into a higher time frame sell. I think price can eventually take that level. Even the Aussie yen also just took this higher time frame liquidity. You can even go a little bit lower before going higher again. Pound yen, I'll be a bit more cautious. I think euro yen and dollar yen are maybe in a better level to already without the need to create a new high. Pound yen, I think we could still end up taking a new high before eventually a bigger sell. Maybe it can happen tomorrow, maybe it can happen. You can even see the way, for example, today, pound yen, the low, it's somewhere around here. Pound yen is trading here. Dollar yen already took this low. Euro yen already got really close also to took the low. So you can see how, actually not so much, but it's a little bit lower, while pound yen is still trading somewhere around here. So you can see the pound has been being able to stay a little bit higher. Maybe anticipation for tomorrow. We'll see. We'll see what will happen. But
I'd want to see the breaks of those daily candles I was talking about, similar to what you're mentioning, both upside downside. And it comes back to the pound thing, how that's interpreted tomorrow, whether we get some incremental tweaks around it that the market either likes or doesn't like, or we end up going whatever. It's kind of the same as what we've heard, but it's not. There's nothing new that is that terrible. We already don't really like it, and then you kind of get like a relief rally. It's basically like a buy the rumor, sell the fact, or if we get the we hate this and the market tanks again, right? So that's going to be very, very 50-50. Honestly, the whole thing is sort of messy depending on your view of what's good, or taxation stuff. You're going to have a different tilt, right? So we're just going to have to see the flows in the market. So I similarly, Pedro mentioned like euro yen or Aussie yen or something. If you want some kind of exposure to the pound volatility, I guess, going on, I would say, pick something like euro yen that is going to have some tangential flow over, but not quite the same whippy, snappy volatility, and probably a bit better structured at the moment overall.
Yeah, we have two beautiful gentlemen on the background. Right? Yep, you. Yep, both of you. So feel free to join. There you go, Richard, William. Welcome back. Happy Tuesday. How are you guys doing? How are you guys?
Yeah, what's good, man? How's it going?
Going right.
Good,
man. Good man. What's news in the markets today?
Not too much. I'm sort of waiting for a bit of direction overall. I like gold longs, but as far as FX, sort of waiting for a bit of momentum to sort of come through. I do have a tilt to the upside for euro dollar overall, but that's kind of about it. I want to see dollar itself starting to make a play one way or the other.
Yeah, nice. Yeah, I agree with you with the gold longs. I want to see longs on gold, but just gotta wait for it to happen. You know, I wanted to see it this morning, but we didn't get it this morning. We had that sort of drop off, and then I thought, that's not my confidence when it comes to this to the buying opportunity. I thought if anything there could be some sells coming through. So I just thought, I'm a stay out because I couldn't fully decide on what I wanted to see, whether it was sells or longs. So we know we're consolidating now. I kind of want to see some longs coming into the market, but we'll see.
Yeah, I think we're starting to build up pretty nicely through here. So I think we'll get it. Yeah, it's just that matter of time.
Yeah, the one thing I do know about is that I have made a fantastic cup of coffee.
Hey. Dude, I'm going to go make some soon in a sec as well. I will tap out because I've got to go put together some stuff for all you guys for stream tomorrow. Gonna for the sort of strategy stuff for you guys. I'm going to try put together a sort of framework that should work hopefully for everyone's strategy, whatever you're trading, but with some like assistive tools that will give some structure and that kind of stuff and add some of the things that I look at every day.
We've been rotten tomorrow, dude. I'm kind of curious to see how what your framework's going to look like as well. I'm quite curious about that.
Yeah, I had some ideas to put together for it. I was meant to get all of it done earlier today. I did a bit of a voice note for it, but I've had a bunch else going on as well. So I'm going to knock out a couple other things and then get onto that. And hopefully I'll have something good cooked up for you guys tomorrow. So there we are.
Dude, I'm excited.
I feel the pressure, man. I can see that I need to also to prepare something like cannot be on the spot, right? I need to do a full presentation.
Yeah, sorry, Pedro, when are you doing your breakdown?
With all of his things, it's all his fault.
Yeah, I'm doing Thursday.
Oh, okay, nice.
Yeah, the last one. So hopefully it's not going to. It needs to kind of.
What they say, Pedro, right? You gotta save the best till last.
Yeah, that's it. I can feel the pressures already.
I have some bad news for you guys. I think Jonatan is doing his on Friday, specifically for that.
No.
Oh my god, I feel released now.
Jonatan did it last Friday, I thought.
No, he's doing it this Friday.
Yeah.
Never. Maybe they don't save the best to last time. I haven't said that though. I'm not last. So that makes sense. Maybe they're not saving the best to last. Otherwise, I would be last. So,
so this is a strategy to stop sleeping under bridges. This is how you get out of
it. Yeah. Who knows? Maybe I didn't sleep under the bridge at the last night. Who knows? Dude, speaking of that, about 10 minutes ago, the last video file, delivered to the editor.
Yeah.
And I sent them the day after I arrived home. So how long have I been home for now? It was, when did I arrive? I think last Monday was my first week back, wasn't it? So this is the second week. So it's taken a full week to send over 1,000 video files consistently as well. Like
1,000?
Yeah, well, over 1,000. I think it was like 1,300 video files.
Dude, that's insane.
Far
streaming.
That's insane.
And I think that we got a couple other bits because me and my brother bought a drone a couple of months ago, and we thought, screw it, like let's bring a drone with us because I don't know if we'll be allowed to fly it, but let's just see if we are anyway. So Ewan's got a load of drone footage as well that he needs to download and send over. So there's like another 4 files there.
Yeah.
Like, there's thousands of files for the boys to go through. So enjoy, guys.
Crazy. Yeah. God,
good luck. First and foremost, good luck.
Yeah, mate, literally that. Yeah. So, I can't wait till it gets released. I'm like, I'm never usually excited when it comes to my productions because I struggle to watch my own live streams back because I cringe myself out, and some of the garbage that I say is just like, oh my god, Will, what are you doing? And the London trip was a lot of fun to the point where like me and my brother actually watched it back with the entire family, including our girlfriends. And even though we still cringed ourselves out, it was just so funny to watch, and it was so enjoyable to watch, even watch myself do it. I know for a fact this Italy trip is gold.
Yeah.
Like, it is gold. It's got everything in it. Like, you imagine, there's stress in it, there's ups, there's downs, there's ins, there's outs. It's got everything.
Nice. Dude, I'm keen.
Yeah, like I've already suggested to the guys that we try and do a deal with Netflix.
Yeah, no, honestly, like
that's how good it is.
Yes,
that's how confident I am in this video.
Yeah.
When are we getting a Pedro version or an LJ version?
Yeah, we need to we need to speak with Jordan to see where am I going to try to trade me out of it.
I will say, can I be honest, guys? It is not for the lighthearted. Like, it was hard. It was seriously hard going. Had I even known what I was signing myself up for, I probably would have at least questioned and maybe second guessed it. But it is so fun. I can't recommend you do it enough. But just the mindset you need has to be iron.
Yeah.
Dude,
I'm mega keen.
Yeah.
It's gonna be fun.
Yeah. Dude, you'd love it. Yeah, honest to God, like you'd love it. Like, it sounds like I'm trying to put you off, bro. You would love it. It's so much fun.
Dude, that's brilliant. That's right up my alley. Like, let's go.
Yeah, exactly. Like,
go time.
The stress levels is.
But LJ, you have to go really big. So we're talking not like going, one country in Europe to another country in Europe, or like from the left of Australia to the right of Australia. Let's do an LJ from Australia to USA. And the long way around.
Country hop.
I was going to say, it would have to be country hop, though. Like, because that's what me and you want to do. We want to be able to country hop it. But the thing is, like, you buy the flights, and then it's like, oh, okay, cool. You bought flights. Or maybe if you don't pay for, like, if you can't afford to fly direct, you got to take a train through or something.
Yeah, no, you'd have to have like forced time intervals that you can't stay in this place any longer, so you're at least forced to go somewhere else.
Yeah,
wherever it is, whether you're forced to get on a bus just to go to like the next random city, just because now this central location is like out of zones. It's like a dead zone. You have to be in some other zone no matter what. Yeah, so you get on a boat, a bus, a train, a plane, whatever it is. Yeah.
Louis got the right idea there. LJ to the USA.
Yeah.
LJ to Ghana.
That's a fair point. I mean,
all over the world.
Give us some ideas on where we go, 100%, because who knows? We can make anything possible. Like I spoke to Jord and I said to him, he was like, where should we chuck you? And I was like, oh, I don't know. I was like, where do you want to chuck me? He was like, do you want it to be a surprise, or do you want to, like, give some hints on where you may want to go? I was like, I don't know. So
yeah, it's hard. Hey,
it's like
to put it together.
I really want to go to Machu Picchu. Like, there's some things though that I want to do, but like I really want to do it with my brother and my partner and enjoy it. But then at the same time, I'm thinking, but come on, how cool would it be if you had to put yourself under I love putting myself under stress. I don't know why. It's probably like some strange, toxic thing that a therapist would love to speak to me about. But I love putting myself under stressful environments that I try and thrive under. So the idea of going to like Machu Picchu or in Peru, or going somewhere like the Grand Canyon or something would be super, super cool. But doing it under the stress of trying to trade your way there.
Yeah.
I think that'd be pretty cool.
I do have some ideas, so yeah. Anyway, but yeah, I gotta cruise.
Great.
Get this stuff done, and then I'll see you guys tomorrow and give you the rundown. So
Awesome stuff.
There we go.
Look forward to it, mate. I look forward to it.
I have to go as well, guys.
All right,
Richard, enjoy.
Pedro.
Yeah.
Pedro,
Okay,
LJ,
guys.
you guys have a good one.
Bye-bye.
See you later. See you later, Pedro. Have a good LJ. See you, bro.
What's up,
Oh,
William?
Bonjour, Rashad.
Not too
Jinyan.
shabby a night. I see Bobby wants LJ to go to North Korea. We'll probably never see LJ again.
Oh, can you imagine? Trade your way into North Korea.
I like
try
the flow of LJ to the USA. I love the flow.
Yeah,
of
that
it.
rolls
Just
off the
sounded
tongue, man.
right.
LJ to
You know?
USA. Yeah, that's quite good. I like that. How
Or
how-
LJ to Jamaica.
You've got to be careful. Like, there's some countries got to be really careful going to, because if you don't make money, you got to slum it. And if you slum it in
That's
in
true.
places like South Africa, Jamaica, some parts.
Hey,
of,
what's wrong with South Africa? What's your problem, mate?
well, people like you live there, and that's just scary enough. We don't want.
I mean, fair.
The
Fair,
South
fair.
African people are great, but then you see you, and you're like, oh, maybe they're not so great. Like, there's some South Africans in chat, and they're absolute legends. They make me want to go to South Africa. But then you're like, oh, Will, come to South Africa. I live here. And I'm like, oh, actually, I changed my mind.
Yeah, but I'm only doing that to be polite with you. I don't actually want you to come.
Yeah, don't want you coming.
Because that's because South Africans are polite. We're nice people, mate. We're nice. Look at me being nice when you're over there, like, bashing me and trashing me. And
Oh, wow, he's
being
playing the
very nice
victim
and
today.
friendly.
Okay, all right, son, all right. I see how you're going to be. I see. You're going to make me look like the bad guy now, are you?
I mean, you were doing a pretty good job on your own, mate.
I was, to be fair. I was making a good effort. Like, I'm joking, guys. I do love Rich, by the way. I'm not
No,
actually
this is just
slamming
our
him.
banter.
I hate him because it's Rich, not because he's South African.
You hate me because I'm Richard.
Yeah,
Actually, no, you love me because I'm Richard.
I do. You're my third
All of your
Richard.
co-hosts
You're my
have
third
always
Richard in
been
12
Richards.
months.
Yeah.
I mean, that makes me sound a little bit fruity, but
Well, you definitely have a type.
I just
Anyway,
yeah.
what are we
Moving on.
what are we discussing today? What are we looking at?
We're gonna look at chat for a real second because I feel like our chat, we lost track of chat, and there's chatters chatting away. So we're gonna have a quick catch up with chat, and then I'm gonna stop saying chat, and then we're gonna get into the charts. Oh, that was a good segue. I like that. And then I'm gonna look at gold. I really think that gold wants to move up, but there's a couple of scenarios I want to see validate first. So I'm gonna watch gold, and then we'll have a jump on your chart, see what we're seeing with you as well. So Partha Patel saying, hey, what's good, man? How's it going? Hope you're well. William, has anyone ever told you that you look like Prince Harry? I don't know how I feel about that. No one's ever. Someone did tell me that I look like a royal, but I don't think it was Prince Harry. But it would have had to be because I don't look like Prince William. So maybe someone called me Prince William, but said that I look like Prince Harry. I don't know. But no, I don't think anyone's ever told me I look like Prince Harry. I don't know if that's a compliment or not. So thank you, I think. Thanks, hello. What do you think about gold coming down to 4K? No, I don't think much of it. No, there's a long way to go before that happens. Like, that's all the way down here. No, that's further than that. Let me go up in the hourly. That's a distance, man. Dude, 4K's all the way down here. Oh, in fact, just pretty much on this low. Okay, that's 3997, but that'll do.
The last time we reached 4K was last week, Tuesday, a week ago.
Yeah. Honestly,
We are slowly making higher highs.
on the
higher
1 hour,
lows.
actually, it doesn't look impossible.
No, doesn't look impossible.
but I don't want it
But
to be.
once
I-
again,
I-
higher
I-
highs,
I-
higher lows.
Yeah. I want to see a break out of this area, to be fair. I think if we break and close above... let me just put a trend line. In fact, actually, no. Let me get rid of that one. If we can break and close above this area here, then no, I don't think we're coming down to 4K. What have we got? A month left of the year? I don't think we're going to see 4K this year. I think we're going to float around 4100. Between 4100 and 4300. I think that's the sort of range we're going to range around in. Because what usually happens towards the end of the year is we just flatten out. We'll flatten out. Like some said, our all-time highs by the end of the year. We've already had that. I don't think we're going to have all-time highs now throughout December. I think we're done with all-time highs, and I don't think we're going to drop too much either. Then maybe we'll drop a little bit of people taking out of gold and getting their bonuses and taking money off the table during Christmas periods, but I don't know. I don't think so, but never say never. LJ to France, dude, that's like literally the other side of the world sort of thing. I think it'd have to be like LJ to Thailand or LJ to Singapore, or I think it'd have to be LJ to somewhere in Asia. Otherwise, I feel like that would just be really demanding, like really unfair. But hey, look, screw it.
LJ to Lithuania.
Yeah, screw it. The more I think about it, more demanding and more unfair just sounds fantastic for content. So, yep, let's send him to Europe. Let's send him to the UK. Shall I greet?
No.
With open arms.
No. We want him somewhere exotic. We want him somewhere interesting. We want him somewhere far away. Not the UK. Why do you want to punish him? Do you dislike LJ?
That's the whole point in this.
You don't want to punish him. You want to see how far he can get. You want to see him hop from country to country and then eventually make his way, I don't know, to the US Stock Exchange, Wall Street. You want to see him right in front of Wall Street, just standing there looking up at the Wall Street building. That's what you want.
What if he doesn't make the money?
Well, you're going to edge him on to get to that point. You're gonna be behind him. You're gonna support him.
I gotta come with him?
No.
Thank God for that. I was gonna say.
The viewers, mate. The viewers.
Oh, I see. Fair.
Yeah.
Fair. I was gonna say, jeez, no. Yo, Will and Rich, what's good, guys? Yo, Vinny, what's good, my man?
Vinny.
You have a question for me. I know that you have a question for me because I told you to ask it tomorrow. I was going to break it down yesterday. I can't remember what the question was. Please tell me you remember because it was a fantastic question. I just didn't have time to break it down. Here's something about video files. Yes, my man. So over 1,000 video files from my Italian trip ready for you guys to view. I'm sure it'll be released in December. It's sometime in December, number one will be. Yes, we got a Jamaican here. That is sick, my man. What's good? Bum. Come to Nigeria. Yes, my man. I'll be a Nigerian prince. And I will telephone my way home. Laughing face. Love your life before death. Oh. It's an interesting username. Love my life before death. Yeah. Richard is trying to bag William and then throw him into South Africa.
Throw him in a South African river.
Yeah. Fair.
Well, now that you guys have gone and given away the plan, now I have to
now he's
change
going to
it.
have to move me in a different way. Yeah, now he's going to have to become a bit more creative.
Now I actually have to host and be a friend. Ugh.
God, I know. It is draining when you got to pretend that you like people, isn't it?
Yeah,
I fall asleep after every single stream with you.
That's why I've been late every single day so far. Or starting the stream without you.
Why do you think I'm still in bed? I'm like, I got to get up and go and see Rich now. I don't want to. I was like crying on the phone to CC today, and I was like, babe, I really don't want to. I don't like him. Babe, you got to get up. You got to go to work. I just really don't want to. It's Rich. I don't like him.
You cry? What a baby.
About you, I do, yeah. About no one else. Greetings to the
What's up, DJ?
highly esteemed Fivers host, Richard B and William D. Hope you're doing well. No cap. Will be nice to Richard B, please. Okay, I'll be nice. Rich, I'm sorry, bro. I love you really, man.
I love it too, mate.
Oh, man. Anyway, guys, we shall continue to catch up with chat in just a second. Let's have a quick look at gold. The fantastic billion-dollar boy. It's billion-dollar baby. Was it? Yeah, it's billion-dollar baby. I'm pretty sure it is, not billion-dollar boy. Anyway, gold. Let's have a look. So,
baby, yeah.
Yeah, I'm sure it's baby. So we had this increase up here. So we had this leg up, consolidation. Super cool that we had this consolidation here. I was really interested to see what happens, whether we break higher or lower. You guys know that I do love a good consolidation breakout. We had this area here, and then it starts continuing down. I wanted to see it wick a little bit more here and maybe consolidate here and then move up. However, we did wick really nicely into this imbalance here. We failed to close below this consolidation here, and then we started moving up. So now we're consolidating. I'd love to see what happens on this consolidation area here. Preferably, guys, I would love to see a break to the upside, a close to the upside, and a continuation to the upside. In the ideal world. Now, however, if we get a break and close above, pull back, continuation, that's also fine. I don't really want to see much more movement to the downside. I think we're downside moved out now. You know, we've taken all this internal stuff here, which is quite nice to see. Oh, come back. No, come here. There we go. So we've taken all this internal stuff. And the reason I call it internal stuff, because I don't like the word liquidity. I don't know why. It just makes me feel like a retail trader, even though I know that I am. But I just find that when I say, oh, liquidity, I just
what a
feel
weird
like...
thing to get triggered by.
No, in it, it's literally that. It's like, I don't know why I'm so triggered by the word liquidity, but I feel like everyone's like, oh, the banks are looking for liquidity, and we're not liquidity, so we got to chase liquidity and like trade with the banks. And that idea is just rubbish, in my opinion. So I like the idea of ignoring that liquidity exists and just call it lows. So we've swept these lows, and now we've started moving up, consolidating here. If we can break and close above, I'm going to be a happy chappy because I think that I'm going to be in a long gold. Jonatan, what's
Hey, guys.
good, my man?
What's up, Jonatan?
How are you guys?
I'm good, mate.
What have you been up to?
Nothing.
Banter and gold.
Nice.
Yeah. I mean,
Been trading gold.
We had a good sort of ripping into each other's session about 10 minutes ago, so that was quite fun.
Been trading gold to the long side or short?
Preferably to the long side, but I'm gonna wait to see what happens. I wanted to be long in gold earlier, but we just broke to the downside, and I thought maybe we'll actually start continuing to the downside, but I don't know. Maybe not. Maybe we'll continue that high side up.
Yeah, I like gold to the upside. I'm in a swing long here on gold myself. I'm hoping that we're gonna get some good, nice to the ups, good moves to the upside. All right, I'm gonna be I'm joining because I'm gonna be doing the Black Friday giveaway here. We got 10 accounts to give away, so I hope you guys are enjoying the show so far. We have Griff coming on soon, I believe, or has he already been here? He hasn't, right? He's going to come on shortly. And then, so we're going to have Griff is going to break down his trading strategy. For those of you who don't know, Griff is also working for Traders Connect. So I'm just going to throw that out there. It's a trade copier. It's a really good one. I'm using it myself. So just giving him some advertisement there. He did not pay for that, but I'm giving him that anyway because I'm nice and I like the product. So check it out, Traders Connect, really good trade copier. All right, are you guys ready for?
Before we release the giveaway, guys, do not forget to absolutely smash that like button. Come on, we're going to be giving accounts away right this second. So absolutely smash that like button and make sure you subscribe and get in the giveaway, my man. Let's go.
That's right. That is right. Hit that like. And once we have 950 likes, we'll click draw here. Let's see how many likes do we have now. We're at 150, so only about 800 left. Let's go.
I'll tell you what. Let's get to guys. Come on, there's enough of you watching. Let's get to 200 likes. How close can we get to 200 likes before he clicks the button? Let's go. Come on.
I mean, yesterday we got to what 370. We can hit 200 easy.
Yeah, definitely.
We can hit 200 before Jonatan actually clicks the button to draw the winner. Come on, guys. How bad do you want?
166 right now.
How bad do you want these accounts, guys? Come on, smash that like button.
Yeah, let's see how quickly we can get 200.
To be in the draw. Maybe if you're not in the draw right now, but for the one for tomorrow and the day after, there is a comment at the top of the chat where you can go and click and you can join. It is, I'm assuming it's green.
Yep. All right, we got Griff.
Hey guys, how are you?
How's it going, man?
Hello, Griff. What's good, man?
What's up, Griff?
Good to see you all.
What's up, Griff?
Are you still working with Traders Connect?
Yeah. So I've just finished.
God for that.
That's great because I
Why
just
the pause?
gave you all lots of advertisement, and I'm like, maybe he's not with them anymore. I hope so.
Yeah, I am. I do the support.
I'm super happy that you introduced MetaTrader again. That it's a good platform.
No, like mate, literally, I was heartbroken. I didn't even realize that I was speaking to Griff at the time. I nearly went nuts. I was like, "How can you take away MetaTrader? That's all I use pretty much." And I was like, "Bring it back." Griff was like, "Hey, Will," and I was like, "I don't care who you are. Just give me this. Give me MetaTrader back." And I was like, "Oh shit, it's Griff." I was like, "Hi, Griff."
Yeah, there were some like legal reasons that it had to be removed, but it's back permanently now, and
Yeah, that's awesome. Yeah,
I can't say any more than that.
Of course.
Yeah, fair.
Of course, there's always a lot of things happening in the back end, and we can share all the details of everything that is happening behind the scenes of a business, obviously. But I'm very happy that we have everything back. I mean, I've just set up with Traders Connect, and everything was super easy. I love that you have the risk template. So whenever I add a new account, instead of going in and doing like 1% risk and then having all the boxes checked, I can just put it on that template.
Yeah, that was pretty annoying. You'd have to go and look at your other copier settings and be like, did I have this enabled? And I'd be bouncing back and forth. Enable it. So I'm like, okay, now it's exactly the same. Good.
Yeah, it's awesome.
I love Traders Connect. That's why I was absolutely heartbroken when you guys did remove MT5 or just MT in general, because I was like, I actually lost an account because of it. I had a few accounts hooked up, and because I disconnected obviously all the accounts, I was having to manually trade them, and I forgot to trade one account, and I blew it because I went past the 30 days. And I was like, oh no. So I tried to get it back, and they're like, nah, sorry, you've blown it. And I was like,
I've bought so many evaluations that I'm just buying and buying and buying, and then just adding into the trade copier. And sometimes it's like I forget to add it to the trade copier, and then out of nowhere I'm getting an email like trade account disabled. I'm like, what?
yeah, literally same.
And then I get an email from a company. I've never heard about that company. It's just like I look at my never heard about the company. It's like whatever weird name, right? All of these preference
when you get when you get what do you call it? Like the account number. I got an email from the Fivers a couple of days ago, a week or so ago, saying your account is about to be deactivated due to inactivity. Account number, blah 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 blah. And I thought, I don't have an account with that number, but it was from the competition. And I was like,
right, yeah. But
yeah.
That's interesting though, the fact that you are able to actually see an account number, because I don't even remember account number.
Yeah.
How am I going to remember an account number? But I remember yesterday I got an email, and it's like, yesterday I got an email and it's like, oh, a trader has been deactivated. I'm like, well, that sucks. And I bought like an Insta funding. Those are quite expensive. There's a couple of firms out there you buy instant funding, right? And no evaluations. Like you probably like, what was the rule of having you had to have like a 2% buffer or something before you can get a withdrawal. And I'd never heard about the company, so I had to kind of like go into the billing history and see. And I'm like, yep, okay, I bought that account. So now I had to go through all of my emails to see, and I found a couple of evaluation accounts that I put on to Traders Connect, and it's pretty cool because I can have like my personal live account gets copied only to one of my funded accounts, and then from that funded account, it gets copied to all the other accounts. So if there's a trade that I want to take to be copied to my other accounts, but I do not want to take it on my live account, I'm just going to take it on that. So it's kind of like
a chain.
Chain, right? So I got the main account is on top of the chain, and then we have chain number 2, and all the accounts that I do, all the trades that I want on all the other accounts, but not my main account. Which, for example, could be I had this discussion earlier because I opened a live account over the weekend to start a public track record next year, and the issue with that is I don't want to be putting in too much money in that account. Like if I'm going to be trading gold on that broker with 1% risk per trade with my swing trading, I need somewhere between 7.5 and 10k USD in that account, and I don't want to be putting like I'm thinking I want to put in like 2k in that account just to build a track record. So I can't trade gold on that account, but I can trade gold with the prop firms because obviously higher leverage and higher minimum lot size. So all the trades I'm taking on gold, I'm not taking that on the personal account and going directly to the other accounts. So now I don't have to put in like 10k of my own money just to build a track record, because I'm not looking to like make a bunch of money. I'm just trying to show that if you make 1 or 2% on a personal account, then you can scale that with the funded accounts. And if you have 10k on your personal account, which for a lot of people is a lot of money, then if you're able to take that 10k and scale it up to several millions in funding, you'll see that track record will make you a shit ton of money that you will not be able to do on a private account. And that's kind of like the power of prop firms, right?
Yeah, literally that.
So nice, good trade copier, because I was able to have multiple, like one master account, and then I can have multiple master accounts and actually have slave accounts, same slave accounts on different masters. So I didn't have to pay extra money to use the slaves multiple times in the chain, which was nice.
Yeah, no, that is super cool. You just paid to add the accounts, which is awesome. Also, guys, come on, not far left. We've got like 17 more likes until 200 likes. So absolutely smash that, guys, as we are about to give away an account. So
exciting.
You know what? I'm just gonna do the giveaway anyway because we got Griff here and Griff have something to share. So I'm gonna do the giveaway. Let's see if I can time the. Let's do this. I get a little bit of a. I got a sound FX routine here. Okay, so. We'll get a timing here. Yeah.
Hey, that was good timing. That was hella timing.
Amazing.
All right, so we got. Is that Louis? Is that Louis? Is that our favorite?
Louis Shepherd.
Louis, is that you? Louis S.
It is, yeah, Louis S. Louis
Shepherd.
Shepherd.
Louis Shepherd.
All right, so we got a lot of people here. A lot of people, few that I can pronounce. So I'm just gonna not pronounce any of the names. Actually, I can probably pronounce them, but then I'll be getting lots of DMs saying how bad I am. But congratulations, guys! We got 10 accounts here. You all won 20k bootcamp accounts. You will get an email to the email that you signed up on this giveaway. The winners of yesterday's giveaway have not yet gotten an email. I'm going to send in all the emails from yesterday and today, this evening, and then the team will take care of that whenever they have the time to do so. There's a lot of Black Friday events and campaigns going on right now, so support is a bit busy. But at the very latest, this should all be sent out probably at the very latest this Sunday. So if you have not gotten an email on Sunday, then something's wrong. You can reach out to support. If you do, then you have to send a screenshot of this and confirm that you're sending from the email that you registered for the giveaway. Otherwise, you're not going to get a response from support. All right. Thank you for joining. I almost said, but I'm going to leave. So thank you for listening to me while I was here. I'm not going to give it up to give the mic to Griff, because you have promised me to show the best trading strategy in the market.
I've been working on it.
Nice. Nice. I love this. Looks really, really cool. Well, I'm going to jump off. I'm not going to be watching in the background because this is definitely something that I, as a swing trader myself, I do really enjoy watching Griff, not just because of his beautiful face and voice, but actually the content that he's sharing is also very good. All right, guys, I'm going to be jumping off, and I'm just going to stop. Goodbye. See you guys later.
Thanks, Jonatan.
Take care.
Jonatan.
See you later, Jonatan.
So I've prepared a little spreadsheet here. I mean, you guys are pretty familiar with my strategy, but have I ever walked you through the whole thing? I don't know if I have.
I struggle to concentrate when you talk, to be fair, mate. I'm just sitting there fluttering my eyes over you.
Oh, William.
I'm excited. I'm about to take some notes, mate.
Oh,
Hang
brilliant.
on,
Okay.
let me get a pen and paper. Where's my pen and paper?
You do. So this is the strategy I've been trading for, since Q3 of 2021. You can see I've written down my results over the years over here. And you can see that in recent years, performance has dipped, which is why I've been looking into a supplementary entry, which I'm not going to be talking about in this live stream. But it's basically just sweeps. I'm looking for a range-bound entry because all of these entries on screen right now, they require trending price action. And if I go on the DXY over the last few, that's the weekly chart. Is that enough to reflect it? No, I go on monthly. If I go on the DXY, you can see that the period where my strategy worked best was around here, when we were having these big moves up, big moves down, and then I've had a good 2 years of quite quiet price action, and the last year over here, I've not been able to capitalize on this because although it's trending on the monthly, it's actually been really volatile. Trends have been stopping and starting. So yeah, I just thought I'd mention that. So yeah, I am working on a supplementary entry, and I'm not going to be talking about it in this live stream. So I've made this. I figured before I start talking about the entries, it's probably quite important to talk about risk management because we all do that a little bit differently. So I risk 2% per trade on my personal account. On my challenge accounts, I risk 1/10 of the max drawdown. So if the max drawdown is 8%, I'll risk 0.8% per trade. And that just makes sure I've got enough room for 10 trades. And then on my funded account, I risk 1/20th of the max drawdown. So say, 10% max drawdown, I'll risk 0.5% risk per trade. And that's because my biggest ever losing streak is around 15 or 13 R. So it just makes sure I've got room to never lose the account. So in terms of risk per trade, that is how I do that. Now, in terms of, this is also risk management, I don't use any take profits, which is quite unusual, I think, because most people will go for a 2R or a 3R. I think these guys do. Is that right? You don't use a trailing stop loss at all, do you?
On my swing trading strategy, I do, but no, not on anything else.
Okay, that's good to know. Well, I think this is partly the issue in the last few years because trends haven't been continuing. I've not been getting the opportunity to lock in any profits. Whereas if you have a fixed risk reward, a TP, I'd probably probably be extracting a little bit more profit. So my equity curve at the moment, like looking at the results over here, it's literally something like this. Whereas if I were to use a fixed take profit, targeting 2R, 3R, these results would go down and these results would go up, and it would just result in slightly smoother results. So something worth considering, depending on how you want to trade the strategy. So
Griff, people are saying that your sound is a bit muffled, and I also did realize that your microphone has been cutting out a little bit.
Okay, that's good to know. Let me see what I can do here.
Oh, hang on, that's
It
better.
immediately sounds better.
Yeah,
The moment you spoke out, sounds better.
I hadn't really noticed it until he changed it, and then yeah, that sounds a lot better.
Let me know if that's made any difference.
Perfect, mate.
Okay, good.
Yeah,
I think maybe the
that's
cable had just come a little bit loose. Just interrupt me if the sound goes bad again, okay?
Right,
Yeah, that sounds good, mate.
Thank you, guys. And interrupt me if you have any questions as well. I'd appreciate that. So, in terms of...
sit back and enjoy.
Okay, good. In terms of my risk management, so I use a trailing stop loss, as I mentioned, and I really want to get nitty gritty with this because it's quite unique. I don't use, when you hear trailing stop loss, normally you just enter a value of maybe 10 pips, and then it will just trail 10 pips consistently as you go up. And then when it retraces 10 pips, you're tagged out of the trade. Now, I do it a bit differently. I trail my stop loss with the highs and lows. So this
Swing
move
points.
up here, as we get a pullback and create a low, when we break the previous high, I will put my stop loss 2 pips below that previous low. And this is how I trail my stop loss, and it's how I have such huge trades. And so I get my biggest ever winning trade. I've had trades run to 50% profit before, off of 1% risk. So that's 50R. I mean, obviously, I don't want to have that super often because you're going to have a really low win rate. But this is brilliant because sometimes I'll get 2R, 3R, sometimes I'll get 20R. So I'm just really, really leaning into the methodology of letting your winners run and cutting your losses short. Because I believe if you use a take profit, although you're going to even out your results over the long term, you're in many ways cutting your winners short. So I'm really giving the opportunity for my trending entries to trend. So yeah, in this example, I would be trailing it here, 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 and then I'd be tagged out right there. So yeah, that's the risk management. And now I'll go over the entries. So I've drawn boxes over these here. I've got my trending entries here. These are my trending entries. And this right here is, well, it's also a trending entry, but I'm getting in at the very beginning of a trend because it's a reversal. So these are with the trend. I need a trend to take these. And for this, I'm looking for a reversal of a trend and looking at the beginning of the next trend. So my methodology for a flag entry is quite simple. I need a high, a high, a low, and then I need a high, and another a low. Sorry, I'm getting confused. Basically, I need price to retrace and then pull back up again to get this flag low. And only when we retrace this flag low am I looking for an entry. So we retrace this flag low, moving up, we break it, and then I'm looking for the first basically green candle, and I'm just putting a market execution on that. And my continuation entry, this is a break and retest, very similar to my reversal. These are both break and retest entries. And this is very, very simple. I'm just looking for an impulse up, very important on the impulse, a pullback, and then a break above that high, has to be with momentum, and then a retrace to that previous high. And quite often that's a great place for us to get a rejection. And then if you combine these two entries, you get my combo, which is literally, you can see it's just a flag and a continuation all in one. And this is really high probability, particularly on AUD, JPY, and NZD, JPY. It really likes combos, no idea why. And my last entry is the reversal, which is my highest win rate and my highest risk reward entry. My reversals, I've not really had any reversals this year, but I actually have an 80% win rate on some pairs with the reversal, and its average risk reward is like 5 to 6. So it's a pretty insane entry, but unfortunately it's really rare. And again, the JPY pairs really loves reversals. So this is basically just an inverted continuation. Instead of coming from a trend, we're coming from a channel. And I'm just looking for us to retrace to that previous high after we've had a shift against it. So obviously these are all like pretty crude drawings, and I've got some actual chart examples I can show, and then you guys can ask me any questions. Lastly, I've got my results over here for the last, is that 4 years? Just over 4 years, 4 or 5 years, because we're coming to the end of 2025 now. So yeah, 12% in my first ever quarter of live trading. And this is after a year of just backtesting this strategy. And obviously over the years, I've gotten much better at trading it. And yeah, it's heavily dependent on the market conditions, and that's the only downside, because you can see this year I'm literally at 0%, which is great. I've not lost any money, but I've also not made any money, and that's with 35% win rate. 30 to 50% win rate per year on average. But it again depends on the year. Like this year, my win rate has been more towards the 30% side, whereas in previous years it's much closer to 50%. And in my backtesting, sometimes it's even like 55, 60% win rate depending on the pair. And yeah, my average risk reward is 4 to 6 depending on the pair as well. So yeah, there's my little introduction. There's obviously a lot more that goes into the price action and the mechanics specifically, but as a basis, like if you just want to go and backtest this yourself, you can probably do it with this information.
I was going to say, so with this, like, it seems obviously it's going to be complex, but this is the most raw you can give someone the information. If someone wanted to backtest this, how long or how much backtested data would you say someone would need to build their confidence on a strategy like this?
Good question. For me, I like to go back to 2021 because 2020 is such crazy volatile price action. Really now though, I'd say you need 3 years of backtesting data, and you need to do 2 runs. That's what I would say personally. But this is trading the 1 hour time frame. That's something I've not mentioned actually. This is one time frame only. I don't look at other time frames. This is 1 hour only. So yeah, obviously it depends on the time frame you're trading, but for me on the 1 hour, 3 years, 2 runs is all you need to get your confidence, I would say.
That's super cool. So literally start from 2 years ago to date. So what are we now, 25? So start 2 years ago from now, go from 2 years ago to now. And then that's one. Go back again, do the exact same dates from 2 years ago to now. And that's 2 runs of, oh, sorry, you said 3 years. 3 years ago,
yeah.
3 years ago, and two runs of the exact same price to give you that confidence in data.
Yeah, that's what I've done, but I've obviously done that a lot because I had this strategy. So there are some months where I don't get a trade, and like there are plenty of flags, plenty of continuations, and plenty of reversals, but none that meet like the quality standards that I have to ensure a good win rate and a good risk reward. Because if I took every flag I saw, my win rate would get worse than it already is. But like the reason I'm okay with this, I think Will mentioned it last week. You were speaking with a guy with like a 12% win rate and a risk reward of 1 to 30. Win rate is purely like if you think about it like this, win rate is like the difficulty you want to play trading. The higher your win rate, the easier trading is going to be. The lower win rate, the harder trading is going to be on you, like psychologically. Regardless of your win rate, it doesn't really matter because it's all about profit at the end of the day. You can have a low win rate strategy where you're making huge wins, and you can have a high win rate strategy where you're making tiny wins. So I focus purely on profit, and I don't care about the win rate at all. And I can manage a low win rate pretty well. As you can see, like the last 2 years, I've gone with making 15% profit, which, you know, I'm glad I've got other investments because that's not good enough in my opinion. And that's with pretty low win rate at times, but I'm pretty resilient over time. So this is definitely a strategy on hard mode, I'd say, but it's very rewarding at times.
As
Yeah.
a trader with, as a swing trader, you know, it's difficult for me to speak as a swing trader because my backup strategy is a swing strategy. I'm an intraday. As a swing trader, we've got a few guys in chat that really struggle with the discipline of holding off from over trading a strategy, or you know, struggle with waiting for their setup to come. How do you find waiting around on the markets all day? Like how do you approach the markets as a swing trader?
Yeah. So when I was just waiting around, not really getting many opportunities, like swing trading is so passive, all I would fill my days with backtesting and just really understanding price action. One practice I would do is I would go through candle by candle, and using the context of the previous candles, I would try and anticipate whether this next candle is going to be large, small, big wick, small wick, you know, in this case, black or white. And I would go through one candle at a time, kind of seeing how the candles interact with each other, really spending, you know, like 20 seconds on each candle. And with that, I've gotten a really good understanding of price action. And I would do that in my spare time, as well as just doing loads and loads of backtesting and data gathering. But like doing that every day for years, there's only so much you can really do. And that's why I accepted a job offer at Traders Connect, because I was like, I can do both. There's no reason for me not to have a job, to be honest, because I'm using my time. I've used my time as efficiently as I can in data gathering, backtesting, but there's only so much of that you can do. So I was like, well, I may as well just get a second income.
Yeah, 100%. Yeah, no, that's smart. A question on a personal level now, which I'm sure all the guys in chat, including myself, would love to know how you feel on this, because this is something that even like I'm relatively new to the swing industry and the swing trading industry before some of you dirty gutter-thoughted people come out into the chat. When it comes to waiting around for ages for your swing strategy to actually play out, you've now entered a trade, it's going well, and then you hit stop loss. What sort of mentality do you have? How do you mentally deal with the fact that you've waited 3 or 4 months for a trade to play out, or for a trade to appear, then you've waited 2 to 3 days for it to play out, only to then hit a 1% stop loss? How do you deal with that?
Yeah, it's particularly hard because sometimes it's not just waiting 3 months for like one trade. Sometimes I'm waiting 3 months and then I get my 6th consecutive loss. So it's pretty awful. Like it's not obviously not nice, but I think you do get used to it. And for me, that's just what trading has become. Trading has become this waiting game, and I've become really disconnected from the results of my trades. And I'm just completely focused on executing my trade plan as accurately as possible. Because the markets distribute its rewards randomly, so all I can do is focus on taking the best trades I possibly can, and whether it wins or loses, individual trades don't really matter. Maybe when I'm at like 10 consecutive losses and it's been like 6 months, that's when I'll start thinking, okay, maybe something's going wrong here. But like most of the time, that's when I get a 10% winner and then I'm back to break even. So all it takes is one trade. So yeah, I think being focused on process over outcome.
That's super cool, man. And another question. I'm just reeling. Sorry, man. I'm just reeling questions at you.
I love it. I love it, Will.
So there's a debate out there. How much of trading is psychology, and how much of trading is technicals?
Yeah.
Now, in my opinion, it differs on the style of trading that you have, but that's debatable within itself. On a personal level, like your genuine opinion, not on what you think the general audience would think, but what does Griff feel when it comes to psychology in trading compared to technicals in trading?
Yeah, I would definitely say it's more psychology, because I feel like the impact that technicals have on your psychology is quite minimal. Like if you make a mistake, that's basically the only thing that you can do wrong with the technicals to impact your psychology, whereas the impact that your psychology has on your technicals is massive. It influences everything. All your decision making means all of your technicals. So I would say that psychology has a much bigger impact than technicals. But that may just be my time frame and my trading strategy, you know, swing trading.
Dude, that's super cool.
I've got I've said before, I don't know if I really resonate with this belief, but I feel like you could just whack a 1 to 2 risk reward on the chart, and as long as you can do that consistently, you'll probably end up making money. Like entry completely random anywhere, and as long as you've just got the psychology to keep taking losses and wins and losses and wins, you'll probably end up making money just with a 1 to 2 anywhere. So I think technicals really isn't too important. There's definitely an edge that you can find in the market, but that edge comes and goes depending on the market conditions and the symbol and the political environment. Like you can see here, for me, 2025 making 0%. I mean, I'm a very defensive trader, which is why it's not below 0%. Like I'm just focused on retaining capital and rather than focused on like making loads of money, I guess, you know what I mean. But yeah, I gave you like an answer to another question there as well.
That's awesome. You not only have you answered the question, you've answered another question I hadn't asked.
Double answer.
Pre-planning future questions.
Would you guys like to see some examples? I've got
Yes, please.
one example for each of these entries. Sure. So
Definitely, man.
I've got 1, 2, 3. How many have I got? 2 of the trades because I've tried to get examples from this year. I felt it would be a bit stupid if I was bringing up reversals from like 3 years ago, because I've got some amazing trades from 2023, 2024. But I've tried to only take trades from this year so that it's kind of relevant. So we'll look at a flag first, because that's the easiest entry in my opinion. And my favorite recent flag is this AU flag from April. There we go. So I've got it here. So super easy entry and the reason it's so easy is because prior price action doesn't really matter. Whereas with the other entries, prior price action is one of the most crucial elements. You really want the entry to be coming from high probability prior price action. Even if you have a 10 out of 10, beautiful, perfect entry, there's no wicks, it's retraced very minimally, it's not showing any shift in momentum. All of that doesn't really mean much with some of the other entries if you're just coming from range-bound price action. Whereas with the flag, because it needs this big impulse, you're basically leaving any bad prior price action behind, which makes this entry super easy because you're literally just focused on the entry itself. But obviously, if it does have good prior price action, like a descending channel, or I like to see a V and a range and then an impulse up, that does make the trade more high probability. But flags are super easy because that isn't a requirement so much as it is on the other entries. So I'm basically just looking for a big impulse, multiple candles, because one impulsive candle reflects volatility. You don't want one impulsive candle and then the flag, because this is likely news, likely volatility. It could come back down just as easily. So ideally, you want to see sustained momentum, so over multiple hours. And then once you see that momentum, what you want to focus on is that you don't see a shift in that momentum. So again, really focusing on price action and the candles themselves. The easiest way to spot a shift in momentum is the candle bigger than any of the candles around it, or is there like a massive wick on it that the other candles around it doesn't have? So in this case, there isn't really a shift in momentum. The biggest bearish candle I can see is this one. Really good way of measuring it is just to take the line tool in TradingView from the top of the candle to the bottom. Let me just change the color of this. And then just compare that with all of the candles in the impulse, and you can see it's smaller than all the candles in the impulse. So this, in the context of the previous candles, doesn't show any shift at all. So let's get really nitty gritty. Have I got the highlighter tool on here? I do. So we've got this high here, and then we retrace, making this low. And then we've got a counter trend now. So when we haven't continued, lower low, lower low, and now we've got higher low. So this is the counter trend candle. And then now let's see what happens. If we were to continue high like this would now be the higher high. And then we'd be looking for a break of this low like this. In this case, we have got this as the higher high, and we haven't got a candle higher, so we've gone counter trend again. And now we've broken this low. And we've retraced, very important. You don't want to see momentum kind of building after you break this flag low. You want to see price rejecting. And the logic for this is on the lower time frame, you're kind of getting like a liquidity sweep or something like this. So it's important that this does not continue and that you don't see a shift again. So we've got our flag low broken now. And all we're looking for, very easy, after we break the flag low, is we're just looking for the first retrace candle. And we've got that here. So I just market execute right there, 10 pip stop loss. And now I have an EA which manages my stop loss for me because the highs and lows, this is a super mechanical element of my strategy. There's discretion, plenty of discretion in the entries, but in the management, there's no discretion whatsoever. So I'm just looking for a counter trend candle now so that I can potentially lock in some profit. So there's our first counter trend candle. And what this means is if we now break this high, I am able to move my stop loss up from down here. So I'm just waiting for that high to be broken. Now it's broken, and I will put my stop loss right there, 2 pips below this most recent low. So again, we're moving up, counter trend candle, another opportunity to lock in some profit. Okay, another counter trend candle, broken the high again, lock in some more profit. AU really likes to trend like this. So we've got another counter trend candle. In this case, we moved down before moving up. So normally, you sometimes you'll have to go down to the lower time frame to see exactly whether it broke the high or the low first. Obviously, in live trading, you'll know because you've been watching it. But in backtesting, you don't know sometimes whether the low or the high was broken first. And then we've got one more, just barely, counter trend candle here. And then we break this low, and that is 4% profit. Whereas, if I were to have a 1 to 2, 1 to 3, I would have made a little bit less. So that's why this is a trend following strategy. But yeah, there's the flag entry. What do you guys have any question regarding that?
Dude, that's awesome. That sort of opened my eyes a little bit. Like that's insane, man. I love that way of managing your risk with the stop losses.
Yeah, I really love it as well. It's one of my favorite parts about the strategy because I literally just have an EA. So I just enter the trade and then I'm completely hands off. I go to sleep and it moves my stop loss as I sleep. So I wake
love
up
that idea as well. I love the idea how
profit.
you've managed to mechanically set. So like you use discretion for entries and then you use mechanics for exits and for management.
Yeah,
like
risk
that must
management
be
has to be
such a weight
discretionless.
lifted off your shoulders.
Yeah, it's very convenient. I mean, some of my peers who trade the same strategy, they don't have a bot which manages it for them. So they have to set alerts as highs are broken and they move their stop loss manually and go back to bed. Whereas I have an EA on a VPS that just moves it for me. So it's really convenient. It's quite exciting.
You're just there, cuddled up in bed thinking,
I'm like excited to wake up in the
baby.
morning because I don't know how much profit I'm going to have, which is a nice part about my trading. Maybe there'll be there'll have been a huge impulse candle or like a news event, and sometimes that happens, and I'm like, wow, I've got 10% profit locked in. It's really nice.
Yeah.
Have you considered using this on a lower time frame?
I've not, and I have seen because some of my friends they've wanted to trade kind of higher time frames, and they've tested this trailing based on daily lows, 4 hour. I've never looked at doing it on lower time frame because I feel like price action, the lower time frame you go, it'll get choppier. So maybe we'll have, rather than clean price action like this, maybe if you zoom in, it will be something like this. And then you would have been tagged out here. You would have been tagged out. You would have been tagged out here, tagged out there. Whereas on the 1 hour, maybe you can avoid these little breaks of the lows by just I mean, maybe we can actually look at this as an example if I go to like the 15-minute. So in this case, on the 15-minute, I would have been tagged out a little bit earlier. I would have been tagged out over here potentially. But that depends on if I'm putting it 1 or 2 pips below, I guess. But yeah, this looks like a pretty clean trend on the 15-minute. I mean, we can have a look on the 5-minute as well. And it looks like would have come close there. 5-minute, it looked like it trailed pretty well. Yeah, no,
I mean,
good suggestion.
I mean, just in the idea of like you're saying it's an 1 hourly candle trying to push counter trend. So in my case, that would be a base, basically. So same idea. You're trending. You have the opposite direction attempt to break the trend, which fails. That is a base. Underneath that base, that's where you put your stop loss, as an example. So this is what yours does. But that hour itself is also potentially up and down movement. It's it could also be sideways action as well. So it's interesting to see whether or not something like this is repeatable, but on a lower time frame. To instead of one candle, you can do a sequence of candles that are not showing real momentum going lower, but instead maybe slowed momentum, or potentially 1 or 2 multiple candles that is attempting but kind of not really breaking lower. And then once you have your follow through, which is in this case now your next rally, you then have it adjusted to the next one. I'm curious to see how it would work on a lower time frame.
Yeah, I mean, it would definitely work on the lower time frame. My only concern would be, with more candles, there's more opportunity for it to potentially break a low in there, which would mean tagging you out. Because I guess the logic of this is that if we're only breaking highs, we're in an uptrend. And as soon as we break that low, now you could say we're in a downtrend. But obviously this can happen quite often and you can continue. But yeah, I would just think maybe on the lower time frame, there's more possibility to kind of tap the high and then the low and still be in an uptrend, But it's definitely worth considering on certain symbols, like on AU, it trends really nice and correctively. And you can see, like you said, there were no low breaks. I mean, it came close a couple of times, but it was exclusively breaking highs, which means you would have been able to stay with this trade. Whereas the dotted line here, this is the first time we broke a low instead of a high. And that's where you'd have been tagged out. So you'd have been tagged out at a pretty similar level as the 1 hour. Anyway, I'm conscious of time. I'll show you another entry now. So that is the flag entry. I think I went pretty in depth. Next, we'll have a look at a continuation. This is one that I took in May. So this is more recent. One of the winning trades this year. Where am I? Oh, I'm on the 5-minute time frame. That's why we're getting confused. What have you guys done to me? Get me off of the 5-minute.
I was gonna say we're getting you off the 5-minute.
So here's a really nice trade, and it's kind of similar to the flag because seeing quite a good impulse is important, but it's not as important because I wouldn't mind taking a continuation from, say, price action that was maybe ascending, and then we get a little impulse, a little pullback, and momentum again. Whereas I would not take a flag from a little impulse like this potentially. So yeah, the impulse isn't as important, but prior price action holds a lot more weight. So in this case, we are in this larger, I can get the actual channel tool out if maybe. We are in this kind of larger ascending channel. So starting to see some bearish momentum is quite nice, quite exciting, because it does signal maybe on the 4-hour time frame, the beginning of a reversal. And then what's really, really key with the continuation entry is that in the pullback candles, you don't have too many of them because that shows a pause and that shows maybe buyer strength in this case. So if we have the move down and then we have several candles moving like this, well, that shows, the sellers don't really have a lot of strength now because they're being held back. The market's moving sideways for all this time. So in this case, again, you want to see sustained momentum, which means you want to see big candles down, but you also don't want to see too many candles going across or against you. So in this case, you want to only see 1 to 2 candles in the pullback, or if you do have a range, you want it to be quite tight and made up of small candles. That's the preference. And then the third element, so we've got the impulse, we've got the pullback. The third element is the breaking candle. So it's really important that we break this low quite significantly with momentum, but not too much momentum, because that means when you set your pending order here, you're setting yourself up for a potential shift in momentum back against you, if that makes sense. So that's acceptable on some pairs, not so much for me anymore, to be honest. But yeah, sometimes, you'll get a really amazing impulse, amazing tiny pullback, and then a really, really strong break for the continuation candle. And, now I'm too far away to set a pending order, because I'm accepting that in the following hour, when I next check the charts, the next candle may look like this. And then obviously, anticipating that, now I don't really want to be involved in this trade, because momentum is no longer to the downside, it's to the upside. So the only time I'd set my order in this scenario is if we start coming back slowly, and then it's a combo. So yeah, in this case, the momentum was good, not too big. I was able to set my order straight away, and there was a bit of a wick, but it's a JPY pair, so that's acceptable. And I was tagged in. That this is the amazing thing about the continuation entry. When you get tagged in, it's by millipips. Like, that when you're tagged in by just half a pip, and then it continues, that it's probably going to be a good trade. I have a chart somewhere. I think I've showed it before. And it's my maximum adverse excursion chart, so my MAE, and this is how much a trade pulls back against me before going in my direction, and all of the biggest trades pull back the least. So in this case, the fact that it just barely tagged me in and then started moving down, I was like, this is going to be a good winning trade. And again, just really nice, trailing my stop loss. So we broke this low, trail it there. We broke this low. They're around the same height, so I think my stop loss would have actually been in the exact same location. Then we broke this low, it's here, broke this low, boom. And now I've actually got no risk on the table. My stop loss is here. So worst case scenario, I'm tagged out for 4.4%. So at this time, now I'm looking for, as soon as I've got risk off the table on a pair, I start looking for scale-ins. And this is the great thing about continuations, because market moves like this, I can just get continuation after continuation after continuation sometimes. I think the most scale-ins I've ever had is like 3 to 4, which is the really exciting thing about this entry. So I'm willing to be a bit more aggressive with scale-ins, because I'm already like up. So worst case scenario, instead of making 4, I make 3%. So in this case, it's well worth it. So again, set my pending order a couple pips below the previous low. I'm tagged in, we're trending down. And there's actually a flag that sets up here, but I didn't like it because of the wicks. And then I get tagged out at last. So these two trades, that's 12% of 13%, and that was in May. So a couple of months ago now. That was the biggest winning trade I've had so far this year, which is actually on the smaller side, to be honest. I have, a few years ago I was having these 10% winners every quarter, but at the moment not so much. So yeah, continuation.
Your stop loss is 10 pips. Is it normally 10 pips, or does it vary depending on trade to trade basis?
Yeah, so good question. I use specific stop loss on specific pairs. So AJ is 10, AU is 10, EJ is 12, EU is 12, GU is 15, and NJ is 12. But this year, market conditions have been so wild that I've kind of been eyeballing it, because it's just been kind of hard to tell. So because sometimes a 10 pip stop loss just looks so ridiculously small. And previously, I would stay out of a trade because the stop loss I normally use looks so ridiculously small. So now, so that I'm not missing trades because the stop loss looks small, because the market conditions are so volatile, I'll just use a bigger stop loss. And yeah, a bit of, just experience. I kind of have a good gist of how big of a stop loss to use.
So for those in chat that may trade the Sydney session or the Asian session or the Tokyo session, like, what's your opinion on this strategy working on other pairs? Do you think that this is this your tested pairs, or is this just the pairs that you've tested? Does that make sense? So like, have
Yeah,
you
it does.
tested a variety of pairs and thought these are the strong ones, or have you just thought these are the pairs that I've chosen to test it on and it works?
Yeah, good question. So when I first started in 2021, I backtested about 15 different pairs, and I started off trading, I think 9 of them, and over the years I've worked my way down to 6. So now these 6 are like my core pairs. The other ones, they would either be really choppy, so when they impulsed, they wouldn't continue, or they would trend in a way that meant that the risk management wasn't very effective. So maybe they'd be trending, but it would be breaking highs along the way, which would have, each one would have tagged my stop loss. So those are the reasons I don't have other pairs. Because, for example, I think I had like USD JPY and USD CAD for a while, and they worked pretty well, but only on flags. And when you'd literally get 2 flags a year. And so it just wasn't worth monitoring it. That's why I removed those. Right, I'll speed run the last 2 entries so that you've had an example for each one. So we've done flag, we've done continuation. Next we'll do combo. So this is a combo that actually happened. That's not it. I think I've got to touch on these not long ago. I don't know which one's the drawing now, because I've done all of the other drawings on AJ. Let's see, I think it's over here. Beginning of October it was. Yeah, so here's a combo. Combos work out particularly well on AJ. So you can see this is an interesting combo because it's actually not a continuation and a flag, it's a reversal and a flag. I should have done that in the diagram. So maybe no, we'll look at this. So this here is a reversal. We've got channel and we've got a break of this most recent low. We're not seeing a huge amount of momentum. At this point, we're a bit too far away to set an order for our reversal, because if we get a candle that comes back like this, well, now we're seeing a shift in momentum. So I was like, right, price has to come back slowly, which means I'm probably looking for a combo this evening. And price did start coming back slowly. You can see that these candles show no shift in the context of these impulsive candles. And unfortunately, this was a trade I missed. So I'd set my order, usually 2 pips below the previous low, and just tagged in. And this one just melted, which was lovely to see. So yeah, a combo is really simple. It's basically just a continuation or a reversal with this kind of counter trend candle in here. So it's literally a flag, because the flag entry you would have taken is right here. That would have been the flag. In this case, the combo lets you get in at a slightly better price. And then lastly is the reversal, which is the best entry of them all. I've saved the best for last unintentionally. This is an entry with very high win rate and very high risk reward. So this one's a bit unusual. With the reversal entry, you're really looking at the price action within the channel a lot more. So you're looking for breaks of the highs with ideally not too many breaks of the lows, because with each break of the high and then a break of the low, well, that starts implying that we're actually range bound rather than ascending. So ideally, you just want to see breaks of the high, and you want to see price struggling with each break. So whether that's a wick or an immediate retrace or a shift in momentum. In this case, it's a bit unusual because we did start seeing some momentum here, but then we got these wicks, and the reason this reversal is worth taking is because the shift in momentum candle is just insane. I mean, that you're not going to get much more of a clearer indication that price wants to go down based off of this candle. I don't think there's a bigger candle on the entire screen besides this impulse over here. Other elements that come into channels is a bit of support and resistance. So we've broken above this old high, and it's very important to see how we react in these areas, particularly with reversals. If we're ascending into it, how do we react? Well, in this case, the market said nope, and we got this really big shift in momentum candle. So at this point, you just set your market, you set a pending order, a couple pips below the previous low. In this case, there are a few elements of this trade which maybe are drawbacks, but I still think it's worthwhile. So in this case, despite the candle being so large, the break is actually relatively small. But in my opinion, because the candle is so large, because of the resistance area we've ascended into, it's worth taking. So this, again, it's I think it was the same time as that combo I just showed you, and you can see it just melted. So you would have been tagged out around here. And if you use 10 pip stop loss, I think on NJ it's 12 that I normally use, you would have been making around 8%, 10% in this case. So yeah, those are my entries that I trade. There are slight variations of each one. For example, there's a timed flag that I trade on EU and GU where I wait for the entry to form at London Open. There's also a flag plus, which is a flag which can form in 3 candles, which sounds impossible, right? Because you can't really get a flag forming in 3 candles. 4 is the minimum. But I found a way that if you look at the lower time frame, there's actually a flag on the lower time frame if there's this particular 3-bar pattern. But yeah, there wasn't really enough time to go into that much detail. But yeah, there's as much as I can fit in. I hope it's, I mean, you guys have a lecture. I'm sorry, I never talk this much, but I hope it's been like interesting.
That is massive gratitude, massive thank you for sharing such an in-depth analysis on your strategy. B, dude, it's awesome to hear you speak for so long. Usually it's just like we're all bantering, we're all chatting, and then like you'll jump off. Like, dude, this was all you. I pretty much just like threw my legs up and just sort of sat there like that, you know. I just sort of enjoyed listening. So,
yeah,
mate,
we do. It's a shame that I haven't been able to answer any questions because, like, I only get this 1 hour and then I've got to go back to work. So I don't think there's enough time for me to answer any questions. But like, you guys,
I'll tell you what. There's 2 questions. Will be super quick.
Yeah, sure.
First question is from MGN saying, how often do you check for a setup? Once an hour or so when the candle closes, or do you set up alerts with what you want to see and wait for them to get triggered?
Yeah, so if the market's really moving, I'll check every hour, and that's 5 minutes before the candle closes, so that I have enough time to kind of set my order and stuff. If the market's really moving, I might come on a little bit sooner, but normally it's like 5 minutes to the end of the hour. If the market's not really moving, I'll check maybe every 3 hours, because the fastest setup that can occur is the continuation, impulse, pullback, continuation candle. That's the fastest that can happen, and that's a 3-hour formation. So otherwise, if nothing's really happening, I'll just check every 3 hours. Yeah.
Awesome stuff. And second question is from myself on the curiosity of the mechanics behind it. Do you see a future in AI, and do you have any intention of automating your strategy?
I do know a lot of people that have tried automating this strategy. They've got it working with flags. But the other elements, the continuation and the reversal, they're so discretionary because it's very difficult for an EA or an AI to determine when we're in or out of a range, because it's just pure experience whether we're like, yeah, we've kind of left this range bound price action behind now, or, you know, we're still within a range. So yeah, I know a few people that have got it working with flags because it's super easy. You just say like 50 pip impulse and just take any flag that comes after that. But yeah, I think some strategies 100% works really well with EAs, but this one, not so much, because you need to change as the market conditions are changing. And in this case, you can see that had I been trading like I did in 2022, in 2025, I'd probably be down like 20% this year. I've really had to adapt. And an EA is not as adaptable as a human, you know.
Yeah, that's absolutely sick. Guys, can we have a massive thank you to Griff for sharing his strategy? And can we have a big thumbs up on this video? And if you haven't already, Leave us a subscribe as well. Make sure you subscribe to the channel. Let's see how close to 100k we can get before Christmas. Big like on the video and a massive thank you to Griff. Dude, that was amazing. Thank you so much for sharing that.
Thank you, guys. I really appreciate it. And
Very appreciative.
Yeah, next week, I'll be the one listening, listening to you guys do a bit more talking.
Be back
I can hear my throat going, I think. Yeah.
Speak so much in my life.
Yeah, guzzling water. You be going back to work like, hey guys.
It's good to see you, boys. I'll hear more from you next week.
Absolutely, man. Yeah, Griff, it was awesome seeing you, bro.
Lots of love, boys. See you soon.
And yourself. See you later, man.
Bye, guys.
Cheers, Griff.
Dude, that was sick. That was super, super cool. Mate, like, I feel like we've done nothing. How weird does it feel knowing that it's now 1 o'clock and we've got the sexy Samir on with us?
How are you?
Dude, I feel like I've done nothing. I feel like I've just said absolutely nothing. So, Samir, welcome. Straight on to you. See you later, guys.
Easiest money we've ever made.
Yeah, mate, literally. Like I don't deserve to be paid today. I'm joking. Please pay me.
Unbiased. Hello.
We did have some unexpected news.
Yes, we have.
Which has moved the market ever so slightly, unexpectedly. And this is all about half an hour before we have big US news as well. So,
I'll tell you what I'll do real quick is stay on my screen and I shall bring up the high impact news that we've just had. So there we go. I don't know if you can see my screen okay. Let me know if not. But we had some high impact news from Ukraine saying a US official has said that the Ukrainians have agreed to the peace deal. Got an air quotation that. And though there are still some details to be sorted.
Quote unquote.
Quote unquote. So there you go. Yeah, not apparently. It's quote unquote. Yeah, I'm not suggesting that is not true. I'm just apparently they're saying there's a peace deal. I mean, to be fair. No. So yeah, so quote unquote have agreed to a peace deal, quote unquote, some details to be sorted. That was 4 minutes. In fact, let me refresh the page because that wasn't 4 minutes ago. That was 4 minutes ago when I looked at it.
That was roughly around 20 minutes ago.
Yeah, it says 18 minutes ago it was released on Forex Factory. However, why is it glitching? Yeah, so 18 minutes ago on Forex Factory. However, I checked it 4 minutes ago. So there we go. As you can see here, in fact, let's go back one more step. There we go. Fantastic. So this is for today, Thursday. Why is my screen shifting? We've got 130 news, core PPI month on month, core retail sales month on month, PPI month on month, and retail sales month on month. So a lot of high impact news data coming out in, less than half an hour. Yeah, less than half an hour. And then at 3 p.m., so in an hour and a half after this, we've got pending home sales month on month and the Richmond Manufacturing Index, which is medium impact, but it's an impact nonetheless. So just be very cautious when checking that out, guys.
As I say, trade with caution around red folder news and even orange folder news because I was
going to say even with orange. Yeah, even with orange folder now,
can move unexpectedly as well.
Yeah, absolutely. So just take that into consideration. Unfortunately, I'll do a quick breakdown on gold because I did promise. Vinny, I'm so sorry, man. I know that I was going to answer your question. You will get an in-depth breakdown of my strategy tomorrow during our session. So ask me all the questions you want. And Vinny, I promise you, before I do my strategy breakdown, I will answer your question. So I did get you to type it out again, so I do apologize about that. Gold, I wanted to see some bullish movement coming into. We saw a consolidation here. We struggled, and I thought, you know what, actually, after this break and close below this area here, pull back into this area, consolidation. I thought maybe we were going to wick a little bit higher. I thought we were going to wick into this. And then I thought if we get a break and close below, maybe there's a continuation to the downside. We did get a break and close below. However, it was due to the Ukrainian high impact news come out, the breaking news. So that could be a fundamental news, but it could also be printed data. So we'll have to wait and see. But for me, I'm done for the day. High impact news now at 1:30 and 3 p.m. I'm not interested in trading after 3 p.m. and certainly not interested in trading between the news. So that's me done.
Good. Sam, who's in with you today?
So we alone. Can you hear me, by the way?
Yes,
we can use him.
Check into YouTube. I spoke. I see, no response. So yeah. So today is a strategy day. I'm gonna be breaking down my strategy. I do have a couple of strategies, but I will give you insights of a liquidity strategy, which I believe works good, and it is also a beginner-friendly strategy. Of course, it is a very simple thing like price takes out a lower high, but how to enter in that particular market condition or in that particular scenario, I will be discussing about it today. I do have a couple of entry criterias that you guys will come to know. So I will be breaking down my strategy in a couple of minutes here.
Awesome.
So until then, let me ask: have you guys been involved in any trade?
I wanted to be, but it's a no trade day for me today. I thought I could have been in some gold trades, but nah, nothing. But I think you caught something, Rich, earlier this morning. I don't know if you caught anything recently.
I did have a singular trade this morning on EU. It was a buy off of a little bit of a change in momentum. The trade...
Here, maybe?
Let me see. What is this? This is on the... What time frame is this? 5 minute.
Okay, 5 minute.
So my time, it's just after the Tokyo session. So 9 o'clock my time, just after the Tokyo session.
That'd be, what's that? 8 o'clock. That's New York, London Open.
It's half an hour after the close of Tokyo.
So
yes, there was a momentum shift on the left.
Somewhere on here, maybe.
So we can see it on my screen. If we bring my screen up, then
that will be helpful. Yeah,
that might be the easiest. So this was the trade that I took. This was Tokyo. It came down, wanted to push lower. We came into, I had an area marked all the way on the left over here, where price had reacted once off. This was yesterday's Tokyo, London, and New York session. So the low of London was tested during New York, failed to break through, came back to it here during the Tokyo session. As it started to slow down, and then it started to push a little bit higher. If I just remove these two indicators, then you can just see it. Basically, what I was waiting for is I was waiting for price to break above the previous swing point, and also not create a new low, not have this new low over here tested. So price broke above this previous swing point, and when it had an opportunity to try and push lower, it failed. And on this follow-up candle, so this is a base rally on a momentum shift or a change in direction, basically. Entered it here, 1 to 2, done and dusted. And then I tried to enter on the stream account here.
Dude, I love those candle colors.
I tried to enter over here, which was a lot later than what I would normally have entered. And then price just did not give me any sort of movement whatsoever. We started attempting to push lower with this candle. I didn't like how this candle looked. We had an indecision candle and then a candle attempt to push higher, and I decided, you know what, I'm not in the mood for this. I entered late into the trade, first of all, and secondly, we were losing momentum, so I decided to cut it. It was a small little loss, so it was only a $2.80, and then commission is 80 cents. So this was a $3 loss trade on the stream account. I was supposed to be in a lot earlier, so as price was pushing higher, makes a higher low. It attempts to push higher, it fails, but it doesn't make a lower low, and then it starts pushing up. showing it wants to move up momentously. I would have liked to have entered on this candle over here, and then I would have still had the same idea of having a 5 pip stop loss, which would have been somewhere over there, and then I would have wanted to get 10 pips plus the commission, which would have been up over there, and it would have been taken by this candle over here. Unfortunately, I did not plan that entry all that well, and I was a little over eager, but I spoke to Will about it. I am going to adjust my stream strategy just a little so that I can actually get more proper entries, because I'm not getting a lot of entries during the stream time. So the stream in the morning and then the Fiverr stream as well. So I'm gonna do a little bit of adjustment on that one, and then when we rock up again, maybe from tomorrow or so, I'll have my strategy, which I am working on, with an adjustment just to, you know, be incorporated for the specific live stream account. But yeah, this was taken on my personal accounts, and yeah, unfortunately, not anything other than that. GU did not give me any movement. I did mark up this one over here, the same movement, but I did not like the fact that we did not test a specific low point, an established low, like for argument's sake over here, an order block. So we were too far from this order block for me to say, okay, yes, we're going to start moving up from here. I thought maybe there was a potential for price to come and test the order block first. So same idea, price starts slowing down, attempts to push higher, we get a slightly higher high, the low does not get tested over here, price then starts to push up, trying to break this downward trend, which was established over here with a base area and then a continuation lower. We made the low. You can basically say that this whole area was a area of consolidation. We have the break, the retest, and then I would have wanted to get in on this candle over here to try and ride it up, but did not get that, purely based on the fact that we did not have a test of a significant area, in my opinion.
Yeah,
That's
yeah, nice. Awesome. Right, guys, I'm going to have to love you all and leave you. Samir, awesome. Look forward to seeing your strategy. Guys, can we have a massive welcome to Samir? Absolutely smash that like button, ready for him to break down his legendary profitable strategy. And I shall see you all tomorrow, where I will answer all your questions, as well as giving you a very in-depth breakdown of exactly how I trade my strategies. Oh, I said strategies, not strategy. Anyway, guys, I'm going to love you and leave you. Thank you so much for joining. I shall leave you in the very capable hands of this legend down here. Samir, I shall see you el mañana.
Take care, man. Bye-bye.
Bro.
All right, thanks, Will. Samir, I'm also going to hop off. I have some things that I need to take care of before the end of day. So,
yeah.
Wish you a good day, my friend. We'll see you a little bit later.
Just realized
Same to you.
Oh, Remy, you could have caught me off guard then.
Was your finger about to go?
Well, no, I moved my mic out of the way, and I was about to get up and leave, and I thought, oh, hang on a minute, I got to get off the back end of the terminal, and then it switched over to Samir's thing, and I realized that I had appeared, came out and just sitting there. I was like, oh, yes, I'm still here. Anyway, guys, Thank you so much. I'll see you all tomorrow.
Take care, man.
Samir, have a good day, my friend. We'll speak
Rich.
to you.
Bye-bye. Yeah,
Cheers.
Definitely. All right, guys. So now I'm gonna teach you my strategy, or you can say how I see the markets. So basically, I will give you a few terms, few terminologies, like which I use on a day-to-day basis. Then at the very last, I will give you the entry criteria. But at first, you should know, how to read the markets. So let me go to a blank screen here. Okay. So first, to read the markets, the terms that I use on a day-to-day basis. Let me make my camera a little bit like this. Okay. Yeah, the terms that I use is fair value gaps, some support and resistances, and some liquidity areas. Okay, this will give you some kind of guidance or some kind of patterns where the market is going and how you can potentially enter in that particular market condition or in that particular scenario. Okay, you don't have to be very stubborn. What do I mean by that? Let's say this is your area, can be any strategy. Okay, let's say for an instance, this is a kind of a high, and now price is coming back, and price is giving you a break of that. Okay, now to enter that, we do have certain criteria, and I will discuss about it shortly. But I want to cover one point, that you have to observe the market behavior. Okay, you have to be sitting on your charts, you should be very focused, there should be no disturbance, and you should understand how the price is behaving in that particular session. I'm a session trader, so for an example, this is New York session. Okay, and I have marked my high right here. I have to see how the price is behaving in that particular session. I don't have to be very stubborn. What do I mean by that? I don't have to be, okay, this is a liquidity point, I have to take a short only. And this way, you may can take some wrong decisions, you may can get FOMO, or you may can, do some do something that you shouldn't do. So to avoid that thing, you should build one habit, which is just observe the market, what price is doing. Okay, so now let me give you a few scenarios. Price either will just continue, in this bullish direction, it will give you signs. Okay, it will give you signs. Okay, price wants to continue to the upside. Okay, and it will give you signs if price has to um, use this as a liquidity point, and it has to come down. So you have to wait patiently, and you have to see if price is printing something that you have seen in the past. I will cover a few things that I believe works like not like 100% of the times, but works like 60 to 70% of the times. I will give you that few entry criterias, but I want to focus on this point. You have to build this habit, you have to see what price is doing. You don't have to be stubborn, you don't have to be, okay, price came to my area, let's just execute that trade. You should never be that kind of trader. Okay, so for an example, I do this, I'm just taking this liquidity example, like this is if price is treating this as a liquidity point. Now if price wants to continue, it will just give you a pullback and it will continue, then you can take the break of this. I will give you what pattern I'm talking about. If it has to use this as liquidity, price will just come lower, and then it will give you some pattern, and then it can short it. Okay, and these are only two scenarios that you can use in liquidity example. I will share it in a couple of minutes, but I'm just sharing this liquidity example. Okay, so this is one liquidity example. Let's cover a fair value gap example. So let's say this is a 4-hour fair value gap. Okay, I hope you know about fair value gaps. If anyone don't know, if anyone don't understand anything, the terms that I'm using, you can just comment down below. I'll be happy to you know clarify you what I'm talking about, or give you some insights about it. I hope you know about fair value gaps. So this is the I'm gonna give you a couple of scenarios here on a day-to-day basis what market is gonna do. Okay, so this is the first scenario. Either market will create this type of scenario. Maybe let's say on Monday market is creating some liquidity scenario. On Tuesday market is falling, it is going crazy, and it is on the 4-hour fair value gap. I'm just giving you an example. Okay, let's say on Tuesday, this is the market condition that you have. Now, in order to enter, you need some pattern that I will be discussing in about in about 10 minutes. So if market is giving you signs that it wants to go up, then you can definitely take the entry. But you have to observe what market is doing in that particular area, okay, in that particular market session. So this is example number 2. So the third example will be if market is on the support or resistance area. Okay, for an example, this is the let's say 4-hour support, and this is the this is the 4-hour resistance, this is the 4-hour support. So let's say on Wednesday market is has taken the liquidity before your NY session. Let's say you are trading the NY session, so market has taken the liquidity. Now when you came to the charts, market is at support. Now you don't really know what the market is going to do. You are just observing the market. You are just, you are not stubborn. You are observing the market and you are seeing what the price is trying to do. So if price has to take the liquidity, use this support as a liquidity point, it will give you signs. What do I mean by that? Price will just, give you a little bit pullback and then it will give you signs. It always give you some kind of signs where the market has to go. You don't have to predict 100% of the time. You just have to have some kind of edge or some kind of pattern that you have seen, maybe hundreds of times or thousands of times. So I'm just giving you an example. On Monday you saw some liquidity setup. On Tuesday you saw some prices at the fair value gap. On Wednesday prices at support or resistance area. Okay, so you have to be a little bit dynamic in the markets. So I always promote this. You should have a couple of scenarios in your mind. You should have seen a couple of scenarios in your mind, or on once you see your once you come to the live charts, you should have some pattern recognition. Okay, then only you can execute on a day-to-day basis. You don't have to be stubborn. Okay, market do ABC, you have to react. Sometimes market is giving you some you know some different things, or sometime market is in some different condition. Okay, so let's come to the point. On Wednesday, let's say market is at support, it will give you signs. What do I mean by that? It will try to impulse to the upside, it will give you some pattern. Then you can take your longs considering this is the support area. Okay, so these are some day-to-day terminologies that I use. I'm going to give you one more example. This is the I'm just giving you an example. Okay, on Wednesday market is at support. On Friday market is at trend line. Okay, market is at trend line. Okay, so you came to the NYSE. I'm just giving you an example. Okay, just you came to the New York session or NYSE. If you are trading indices, I'm a big indices guy, so I trade indices here and there. Okay, so on Friday market is at trend line. It will give you signs if it has to go to the upside or if it has to use this as a liquidity point. Okay, if market is just impulsing, then you can use this opportunity and you can talk to yourself, do a self talk. Is this a breakout, or is this a liquidity, or is this just a liquidity move? So in order to understand that, market will show you if it impulses to the upside, and then if it consolidates, then you can take a breakout. Or if it is a real trend line breakout, then it will just dump to the downside, then you can take your shots. So the whole point that I am trying to make here is always you know observe the market, what market is, where the market wants to go, what patterns market is printing. You don't have to be stubborn. Okay, it came to my area, let's just take the entry. You should never be like that. So let me give you now the entry criteria, some kind of entry criteria that I have in order to take entries in almost every market condition. Okay, so let's take today's market condition, what the price is trying to do. So for an example, I'm just gonna take this as example. We are on the daily chart. I don't think so. Let's go to the 1 hour because we are session trader, right? Now for that, let me apply any session tool here so that I can understand, you know, what session we are on. I'm gonna apply a session tool here. Okay, let's apply this session. So for an example, you are a London session trader, and one tip that I want to give you guys: don't try to trade every session. Just trade one session. I'm just gonna use London session as a reference here. Okay, what is support and resistance, supply and demand? I'll come to that. Just give me 2 minutes. Okay, so let's come to the 15-minute now. Okay, so this is the London session, and you are a London session trader or you are a New York session trader. I'm just giving you an example. Okay, you have to trade only one session. So in this particular market condition, what the price did, price showed you an impulse. And let's go to the 1 hour time frame to maybe make our bias. Okay, this was our resistance area, right? And this was our liquidity point. Now you have to mark these areas, and now you have to talk to yourself. Okay, this is a high. Will the price use this as liquidity, or will the price break this and continue to the upside? Let's see what market is trying to, what footprints or what patterns market is printing, so that we can build our buys, so that we can use that information in our favor. Let's go to the 15, let's go to the 5 minute. Okay, on the 5 minute, market impulse to the upside, and market used this as a retest. Market again tried to push to the upside, and then it came to the downside. It really didn't give you any solid confirmation if it has to go to the downside. Let's go to the 3 minute now if we have any pattern. Okay, we retested this area. If it has to go to the downside, it should have broken this area, right here. So let's use this as a trend line breakout. I will give you some entry criterias, okay, like how you can enter on the day-to-day basis. So let's say this was a trend line breakout. I always go to 1 to 1, 1 to 1.5s. So this market condition, you was having a very beautiful trend line breakout, and then you got in a buy. So before explaining or before moving ahead, now almost every market condition, what price is trying to do. I've explained here. If you are confused, you can ask me, or you can just refine the stream. Now I want to cover few entry criterias that I use on a day-to-day basis. The entry criteria is, if market is impulsing and if it is consolidating, then I want to trade this consolidation. I don't care if this is a this is a liquidity point. Market is showing me buyers are more active in the market. I don't want to use this information. I want to use the current information. Market will always give you signs. Okay, if this is if it has to use this as a liquidity point, then market will slow down here. It will slow down, and then it will give you signs it has to use this as a liquidity point. Okay, then you can trade this consolidation. Okay, I will cover a few examples here. So this particular session, it gives us the continuation to the upside. Why? Because we had an impulsive phase, then we was having corrective phase, and then again we, I will consider this as impulsive phase. So this information showed you buyers are more interested, and you cannot use this as liquidity point where it was. Okay, this you cannot short it from here. Why? Because the current information is not giving you that confidence to short this market. If it has to go to the downside, it should have slowed down here. It should have given you some signs. Okay, market is slowing down here. I might want to look for sells. Okay, then you can plan your trades accordingly. Let's move to the previous session. What market was doing on the previous session? It is very consolidating. So let's just consider gold maybe. Okay. Okay, what gold was trying to do here on the previous session? I'm just gonna mark my arrow here so that I can see. Let's do our analysis from the 1 hour point. 1 hour point, we was having this demand area. We have this information that we have demand area. We don't know yet if price wants to hold that area or it wants to break that area. Okay, we don't know yet. We are just observing the market. We are just giving time to market to just we just want to react on the current information that we have. The current information is that we have demand area, or we have support area. Okay, whatever you want to call it, or you can just mark your Fibonacci like this. I also use Fibonacci. I like to trade gold on 71% retracement. I'll talk about that. I'll give you some insights of this gold pair. Okay, now this session, as I'm not being stubborn, I know how market behave. I do have some terminologies in my mind. I've seen, okay, if this is a demand area, supply area, if market has to react from there, it has to show some pattern. Now let's go to the smaller time frame. Let's go to the 15-minute. This is the demand area. Don't forget that. Okay, now if price has to hold this area, it should slow down here, right? It should not break it impulsively. If it is coming very impulsively, of course there is high chance that that thing is gonna this support is gonna break, or this supply demand is gonna break. Now coming to this London session, as you are London session trader, or you are one session trader, one tip that I gave you. Now let's see if it is giving us some market structure shift and some impulses and some consolidations. We do have this impulse and we do have this consolidation. Of course, this support, market is telling us this demand wants to hold. So you are using this information, you are taking the entry on the breakout. Okay, And I do place wide stop losses. I don't mind placing my stop loss, at the very low. You can target 1 to 1 or 1 to 1.5. Let's target this high, 1 to 1.3. Okay. So my point is, if market has to hold your particular area, it will give you signs. Don't just out of FOMO, just enter that trade just blindly. Okay, don't be that kind of guy. Just see if market wants to react from that area. If it has to break, let me give you another scenario also. Suppose you draw this area and market is just pushing to the downside. It is very impulsive, and now you came to the London session is here, market is retesting that area. Okay, now if markets try to impulse to the downside, if it is giving you consolidation, just take the consolidation. Don't be stubborn, this is a support area, I have to just buy from here. Use the current information. If market is giving you, you can just short it, you can put your stop at swing high, and you can target area. Okay, how to know it is support area or resistance area? Okay, very good question it is. How to know if this is a support area or resistance area? If market has shown you a sign of rejection or sign of a recovery, then you can classify this as classify that area as support area or resistance area. What do I mean by that? If market is falling, and it has shown you a recovery from here, okay, it has shown you a recovery, then you can classify this as support area, and vice versa. If this is a price is going up, if it has shown you recovery, then you can classify this as resistance area. What makes support and resistance area a good area? If that correction, or if that corrective move is little bit impulsive, or if the reaction is little bit more, it shouldn't be that like a consolidation like this, then there is high chance you cannot classify this as a resistance or support area. It should be little bit reactive to that particular point, then you can classify that as resistance area, and you can use that as a future reference. If price came here, then again, suppose I'm just giving you a hypothetical example. It is let's say it is Thursday, and you came on Thursday, and price is at resistance area. Now you are a very good observer, you are waiting, you are seeing what market is printing. Market is printing some slow moves here. Now you are like, okay, market is slowing on the resistance area, maybe it wants to go to the downside. Now you cannot enter blindly. Let it show you. If it has to go to the downside, it will show you. Okay, it will give you impulsive move, and it will give you some consolidation, then you can short it. This is how you should trade, in my opinion. That's how I find my profitability. Just drawing my areas, drawing my support resistance areas, supply demand areas, FVG areas, or liquidity areas, and then just using the information which market is giving me at that particular session. Let me give you other example also. So let's say market is impulsing today. It don't want to reject from this support, from this resistance. Market is in impulsive phase. Then you can use this information. Then you can wait for a consolidation, and then you can buy. Don't be that stubborn guy. If you want to sell from that area, use that information that market is giving you in that particular session or that particular day. Okay, so let's cover a few examples now. What do I mean by that? I gave you some insights of my strategy. So okay, this is London session, right? Let's go to the 1 hour time frame. Okay, market is at fair value gap. You've seen it. Market is at fair value gap. You have one information. You have one piece of a particular of this puzzle. Now you have one piece, right? Now you are London session trader. You are coming to London session. Now, in order to short this, you need some shorting pattern. You need some impulses to the downside, and you need some corrections. And then you can use this information, and then you can be confident. Okay, this area is holding. Maybe this area is holding. Now let's go to the 5 minute. This is a 1 hour fair value gap. Price is slowing down. If you observe here, at this phase, price was impulsive, and now look at here. Price is consolidating, little bit impulsive phase, again price is consolidating. Use this information in your advantage. Okay, price is now slowing down at your FVG. Now in order to short this, you need some patterns. Okay, Let's see if there is a that push pullback pattern that I see. Okay, yeah, this pattern that I'm gonna tell you what this pattern is. This is also a pattern that I use on a day-to-day basis. So now this is a FVG. This is a push pullback setup, I call it. You can short it from here. You can target 1 to 1.5, 1 to 1. I don't even target 1 to 2s nowadays. I used to. So this liquidity point you can target. Okay. So this session, the market was at fair value gap. In order to short it, you need some patterns. And what patterns that I use, you might be wondering, okay, you short it. Let us know why you short that, why you took that in consideration. Let me give you a few patterns that I use. I'm gonna use my drawing tool here. Okay, let's use this green. So this patterns that I'm teaching you, it is very powerful, guys. Once you adapt this behavior, adapt this use this information that I'm giving you, you are gonna see yourself in different place, trust me. So what that pattern is, so one pattern is this I use on a day-to-day basis. So if this is a, let's say this is a support area and market prints something like this, okay, I'm using the information market is giving me this as this particular session. Now I want to take this breakout. I will take this breakout. I will put my stop loss, let's say somewhere around here, and I will target 1 to 1.5 or 1 to 1. I don't even want to target 1 to 2, 1 to 1.5, let's say, just to be safe. This is my one pattern that I use once price is at my area. Okay, let me explain you the other pattern that I use. You can take this as a screenshot. This pattern is very powerful, works more than 50% of the time if you are trading it in the right area. You shouldn't be executing this randomly. It should have some story, why you are taking the trade. It should have some confluence why this pattern should work. You should ask yourself question why this pattern should work, why this information that I have in that particular session, why it will work, what confluence that we have. If you don't ask this question to yourself, I'm sorry my friend, you are doing trading in a wrong way. Okay, so again, this information that we have, you can use this to go long. Okay, and we use that information to go short. Simple. And the other pattern that I have, let me explain you what other pattern now I have. Let's erase that. Let's say this is a support area again, or let's just use another example. Let's say this is a liquidity point. Okay, this is a liquidity point, and market is slowing down in that particular session, and market showed you impulses to the upside. Now you want some consolidation. Simple consolidation, very basic price action, no rocket science. Consolidation, you can take this trend line break, this trend line break, this trend line break, everything is fine. Okay, you just need to use the information in a right way. So let's say you take the entry here, put your stop loss wide. You can even place your stop loss couple of pips below, target 1 to 1.5 or 1 to 1 or 1 to 1.3, something like that. What is your RR mostly? Nowadays I am targeting 1 to 1s and 1 to 1.5s. That is it. I don't go beyond that because this information that I'm giving you, it has very good win rate. So combining it with this RR 1 to 1.5s or 1 to 1.3 some days, it is gonna change your trading. Trust me, because you are using the current information market is giving you, which side is powerful in that particular session, and you are keeping your stop loss at a very logical place. If sellers has to step in, it should break this area, and you can use your stop loss a little bit wide. I don't mind using my stop loss a little bit wide. So let's like that. How to observe consolidation is about to end. Consolidation is about to end. You can use trend lines. Okay, let me give you an example. I'm gonna take, okay, this market condition. This was a liquidity point. Price breaks out. How do we know this is a liquidity point? How do we know? We are using the information market is giving us in that particular session. Let's go to the 5 minute. How do we know? We are just observing the market. I have explained you few points here. Look at what market is doing. Is it slowing down? It is. I'm just observing the market. If this is a liquidity point, now if it has to break to the downside, I would have taken shots considering this may not be holding. Okay, anyways, that's not the point. But the point that I'm trying to make is, look here, price is slowing down. What it means? It means price wants to use this as liquidity point. Maybe. Okay, I'm not saying it's 100% of the time. Maybe price wants to use this as liquidity point. You are just asking yourself this question. Okay, maybe. Okay, let's see what it wants to do. Okay, price showed you an impulse. Now price gave you a consolidate correction type of thing. Now you can use this trend line and you can use this information. Now where you can place your stop, use this as liquid. You can place your stop safe here, because if market break this, it is gone. Use wide stop losses, guys. If you're a beginner or if you are not consistent, you haven't find your profitability, man, just try using wide stop loss and just try to make some stories like this, and you can target maybe this high. This is a liquidity point, 1 to 1. This session was 1 to 1. It's okay. Just try to end the day in win. You feel good, you feel confident. It doesn't matter which risk to reward you are taking. Okay, just try to build a story and just try to react in that way. I forgot to mention the Fibonacci thing. Okay, so Fibonacci is on gold. Just I use 70%. Let me make it black. This is another market condition that market can be in. So in that particular session, market was rejecting from the Fibonacci. You came to the London session, price showed you consolidation. You can take a break of that, where you can put your stop. You can put your stop loss wide. You can place your stop loss here, or you can even place your stop loss here, man, because you are building story in a right way. I'm trying to teach you how to build the story in a right way, how to be reactive, or how to use the information that market is giving you in that particular session. Don't be stubborn. If you has to, you want to short it from this resistance. What if market is in a very impulsive phase and it is giving you like correction like this? Use that information, man. Don't be stubborn. You can just use that information and you can go long. You can place your stop loss anywhere. Just keep it a little bit wide, keep it a little bit room to breathe, even if price gave you a deeper pullback. Okay, I hope I'm making sense to you. I hope I opened your eyes. How do you read market? Don't be stubborn. Be a little bit dynamic. Use what market information is giving you. Use in what market is trying to do in that particular scenario. Now, let me give you a live example. So let's say this was a fair value gap on the 1 hour we just draw it, right? So now you came to the session. Now we have to wait for New York session. It is already on, I think. Yeah. Let me, okay. Let's say you're a New York session trader. Let's go to the 15-minute. Let's draw our few areas here and there. So let's say this is a fair value gap. If price has to reject from here again, what I need to see? I need to see some push to the downside, and then I need to see some consolidation. Then I will take this sell. I will use this information in my favor. I don't want to be stubborn. I don't want to be that kind of trader who wants to short it from here, considering, I don't know what technical terms you use. So this will give me confidence. Okay, market is wants to reject from here. Other scenario, if market pushes from here and if it give you consolidation, I want to use that information in my favor. I want to trade it confidently. Okay, let's say this information or market prints that pattern. Okay, that that pattern I gave you, and then you can trade that breakout. And one thing is there, this pattern will be consolidation on more smaller time frame. Let me show you an example. Okay, this pattern was here, right? That was the pattern. And if I go to the 1 minute, this will be consolidation, a very good correction on the 1 minute. Look at that. Okay, use this information in your favor. Try to trade this way, guys. Use that particular information in your favor. Be a little bit reactive. Don't be stubborn. Whatever strategy you are using. For an example, you are using, I know many guys use ICT nowadays. So for an example, you are an ICT guy. There was a fair value gap. Price came to the fair value gap. It gave you a chalk, change of character, and then you enter blindly. Use this little piece that I gave you. Let market react from that area. Let market give you signs if it wants to go to the upside. What sciences will give you, it will impulse to the upside, and it will slow down, and it will give you a chance to enter. Use that information. Okay, sometimes it can be a losing trade. So what? This information works more than 60% of the time. What else you need to be profitable? Okay, I hope I opened your eyes how to read market in the right way. Don't be stubborn. Sometimes market condition change. Sometimes market is, giving you a liquidity setup. Just take it. Sometimes market is on the support. Take it. If market is on the Fibonacci level, wait for the confirmation. Wait for price to show if it wants to go in that direction. Okay. I hope I taught you something good today. And now let's go with the comments. If you have any comments, or and if you have any question, you can just drop it down. I will love to cover it. A developer indicator on a concept called advanced fair value gaps. Again, that is a good thing. But if you just add this one thing, let the market come to the area, let market show you where it wants to go. And how you will know that? By seeing certain patterns in the market. What are certain patterns? If market gains strength from that area, if market gave you a little bit of strength and a little bit of consolidation, just take it. Okay, I'm not saying you to change your strategy. You do this on a day-to-day basis. Just add this one thing. Okay, whatever strategy you're using, let's say you are order block guy. This was order block. This is 1 minute. I'm not going to use this as a reference. Okay, this was a, let me give you a, let me remove this area. Okay, I'm just gonna draw this fair value gap. Price came to the fair value gap. Let's say you are a fair value gap guy. Okay, if you were the fair value gap guy, you would have shorted right from here, right? But the point that I want to make here is just wait for the market to react from that area. Let's go to the 50-minute now. Okay, market start to shift its behavior. You seeing it now? You're using this information in your favor. This might be consolidation on the smaller time frame. Let me give you 5 minutes. Yeah, look at that. Market is just shifting its nature. Okay, you can trade this trend line break right from here. Just place your stop. I'm not even saying to place your stop loss here at this high. I'm saying you to keep it above where it completely invalidates your analysis. Now you can use 1 to 1.2 here. Should I follow trend if I follow your system? Yeah, definitely. Do you do scalping? I will not consider this as a scalping strategy. I will consider this as intraday strategy, and I am not a scalper. I trade this way, and I use the information which market is giving me in that particular session. I draw my areas. What areas I draw? Either liquidity points, some fair value gap, support and resistance, trend line areas. These 3-4 areas. Let me give you like this. Trend line areas, SNR areas, FVGs, Fibonacci. Oh, I'm sorry. 70% retracement I use, guys. Okay, I don't use any other level. And fifth point, let me see if I'm missing something. Yeah, liquidity. Okay, these are 5 scenarios that I use in order to see where market wants to go. Let me just wrap it down. If that particular session market is at liquidity point, what is liquidity point? Very strong high. Market is breaching that, will give you signs, little bit of consolidation. You can just take the shots. It will confirm this is a liquidity point. Okay. Another thing, fair value FVG. I'm sorry, Fibonacci market is in that particular session is at 70% area. Wait for it to react. Wait for it to give you confirmation. Then you can take the shot, take the entry. FVGs, if market is at fair value gap, okay, fair value gap, tapped, will give you signs. Take that information in your advantage. Oh my god, I'm just very thirsty, guys. I'm sorry. I need to drink some water. I speaking too much. Okay, yeah. SNR areas, let's say this is a support and resistance area. Market is slowing down. Wait for the market to go in your favor. Use that information. Just take the trade. Trend line, market is at trend line. Okay, use that information, take the entry, place your stop loss a little bit wide, and wait for market to give you signs if it wants to go to the upside. Always see what market is giving you, okay, what signs, what footprints it is printing. Okay. Okay, let's take some question. What time it should follow to find trend? You can follow any session, whatever suits your timetable, whatever suits your life, but don't try to trade every session. You can pick New York session, London session, and Asian session also. You can pick any one session. Every strategy works, and the only thing that doesn't work is our mindset. Definitely, bro. Use it in information, and I think you will have a little bit more win rate than you are having normal, or you will find success with this. Use that particular session's information, what market is giving you. Okay. Any suggestion for SMC traders? SMC traders place their stop loss very very tight, and they want to capture a very big win. Nothing is wrong in that. Okay. But if you're a beginner, if you didn't found success in trading, try this way, man. Suppose this is your order block. I'm just giving you I know SMC guys follow some order block, some liquidity areas. I'm just giving an example. Let's take an example. Okay, let's say this was an order block. Okay, price came to it. As a SMC trader, you will trade your entry like this, right? If correct me if I'm wrong. Okay, and you will target like this. This is as a beginner, you don't know which order block is going to work. Let the market come to your order block. Let it give you some signs if it wants to go to the downside. Okay, came to the order block, and which signs it gave you. Price didn't printed any good signs. So again, price pullback and impulsive. Okay, this was a very nice trend line. You can take this, place your stop loss like this, target 1 to 1 or 1 to 1.5. In this case, you can go with 1 to 1. Let's keep this high. Okay, you can also use this consolidation. You can take the break. I know risk to reward is less, but if you trade this way, I think you will find some success. I'm sure, guys, if you just take my advice, just do this thing for 6 months. Whatever areas you use on a day-to-day basis, let's say you are a support resistance guy, this was a resistance, let price come to your area, let price show you transitioning to the opposite direction. Here it started to push lower. I know the 1 minute this trend line would have been working. So let's say this was a trade. Yeah, 1 to 1. Yeah. Okay, I hope I made sense with this example. Okay, what to do if you miss trades just because of fear? No trenched yet. It is a very good question. I don't want you to look trading that way. What if you miss a trade? Don't look at trading that way. Next trade, next opportunity. There are plenty of opportunity, my friend. If you are, trading, don't be, worried about just one trade. And about the fear, there is no cheat code of fear. You have to have live experience of the market, and then only you can overcome. Okay. And about the greed, you have to make a plan. If you have to just minimize that nature, because trading is gonna enhance your nature. If you are a greedy person, it will just gonna enhance that feature if you come to trading. Your psychology when trade is running and management system. I just leave my trade, TP or stop loss. Okay. And one thing is there, if you don't have the confidence in your strategy, if you don't have the confidence in your execution, these things are gonna come. Fear, greed, psychology issues, all these things are gonna come. Okay, let me adjust my camera here. Oh, my camera is gone. Oh, it's back. Yeah, I'm sorry, guys. Okay. Yeah, trading, don't make it complicated, guys. It is very simple. Price comes to your area, just wait for it to give you that information. If it wants to go in your favor, Just this one practice, you are set for life. I'm telling you. Okay? And the points that I gave you, I use that on a day-to-day basis. Okay? I am an indices guy, so I wait for my NYSE session. So let me give you an example. So let's say this is my resistance area or this is my liquidity area. If price has to react from this liquidity area, it should slow down like this. NYSE came, impulse. If price goes like this, I will take the entry. Okay. If price decides to break that area, decide to impulse to the upside, then I will take this. Okay. Very simple. I want to use the information which market is giving me in that particular session in my favor. Okay, just do this one practice and you are done. Don't make this complicated, guys. Don't make it rocket science. Don't make it serious thing. It is very simple. Let price come in your area. Let it give you signs if it wants to reject from that area. What signs it is? Some impulses against some impulses, in that opposite direction. Simple. Very simple. I got $100. Which pair should I trade for intraday? Because gold is high profit and loss. If you got $100, try with the Fivers 5K account, because I have always believed in prop firms. I was came from middle class family, was having nothing to my name, and prop firms risk to reward wise gives you a very big opportunity. And if you're a beginner, it also teaches you discipline, because you cannot risk a lot of percentage in one position. If it is a loss, then your account is going to be gone. So try the Profam route, because I succeeded, or I saw a light in that. That's why I'm advising you to follow the same path, because it works. It is a very big opportunity, very huge risk to reward. Just use it in a wise way. Use it with risk management. Use it with the things that I just teach, that I just taught you guys now. Okay, that is it. You go with the Profam route, Krishna. That is my advice for you. Because for me, I have never traded live broker money or put in my money in live broker. I'm a Profam guy from day one, because it has been a hope for me, and still I like these rules. Now I am transitioning. I'm transitioned into a Profam trader only. I don't like to trade personal money. This is just my personal opinion. I'm confused in number of pairs to trade. I also you don't have to trade a number of pairs. Just keep one or two pairs. That is it. Is there any offer for the black week in the fivers? You will know very soon. We have offers for you guys. It will be there in the black week. So make sure you are tuned. Make sure you take full advantage of that offer, and we have a surprise for you. So make sure you take advantage of that. Where are you from? I'm from India. Do you do break even when the market moves in your direction? No, I'm not a break even guy. From the day one, I have followed this practice: TP or stop loss. That is it. Giveaway result for today. I think Jonathan will be announcing that. So stay tuned. He will be here in some time. And oh, it is announced. Okay, it is announced then. I'm sorry I missed the update. You have to rewind the stream, to see the winners. I'm confused. How many pairs to trade? Just trade one pair, man. Two pairs max. Two pairs. You are set for life. That is it. I am confused between day and 4 hours time frame to find trend. Uh, I think 4 hour time frame is good if you're an intraday trader. Let's do some analysis. Let's talk about gold. Okay, this is a resistance area, and I don't like that. You just have to follow the trend only. Sometimes it can give you the shorting opportunity, and you can take advantage of that. Like for an example, this was a double top, resistance, price came to that. Now if market is giving you signs, it wants to go to the low, it wants to go to the downside, I know it is uptrend, use that information in your favor. Okay, the giveaway was already announced like 2 hours ago. Yeah, giveaway was announced. So if you're watching this, our winner, congratulations to you. And if you enrolled in the giveaway and you didn't won, don't lose hope. We have plenty of giveaways in coming future. So definitely you can participate in that and you will win one day. There is my belief that if you don't quit even on giveaways, just continue with the participating in the giveaways, you're gonna win one day. So yeah, it is my belief in life. No matter what you do, just do that, continue to do that. You are bound to succeed then. Succeed or success. Gold plus NAS 100 or gold plus GBP JPY, which will better? I think gold plus NAS 100 will be good. Why I say NAS 100? Because let me show you NAS 100. Because when the NYSE opens, it moves in a very good way. It moves in one direction. If even if it is, even it I'm sorry, even if it has to take the liquidity, it will give you signs. Let me give you an example. Let's say this was a low, price took out the liquidity, it will give you signs. Look at this, how it closed. It is giving you signs, right? So this the nature of this pair is very good. So try trading gold plus NAS 100 or just trade one pair NAS 100. This is my just opinion to you or my advice. I hope I win. Definitely, if you don't quit, you are bound to succeed. That's how I believe. That's how I live. Just continue to, do your thing. Just continue to participate in the giveaway and you will win. Maybe not next giveaway. Next to next, you might can win. Okay. How to participate in a giveaway every day? Because when I try today, you say, I'm not sure how to, participate. You have to be a little bit engaging, if I'm not wrong. Yeah, I hope I win. Yeah, I already answered that. What is the highest single payout? I think it is in five figures. So five figures. So we have zero payout denials, guys. 2016, we are operating zero payout denials. That's amazing. So highest payout, five figures. There is. I'm not really sure about the exact figures, but I have seen some five figures payout coming from the fibers to traders. So definitely. And you can be the next if you follow the plan. Okay, follow your trading plan. We are here to provide you capital. Use this opportunity in your favor. Work on your skills, work on your psychology, work on your, I should not say strategy, because I don't believe in strategy. I solely believe in mindset and the psychology things. Okay, we are giving you opportunity, $4 million you can scale up to, guys. Just imagine that. Imagine, try to imagine, even if you make 2% on that, you are set. Okay, use this opportunity in your favor and take the full benefit of it. NASDAQ buying side, yeah, I do see buying side because of this nature. Look at this impulsive correction, and we might can see impulse to the upside, definitely. I think taking the first payout will be the toughest thing. Afterward, it will be easier to pass accounts and get funded. Um, Trading is, you have to perform well every day. So it is not like, you pass the account and, oh, we are here. Victor, how are you, my friend?
I didn't want to interrupt your flow, your sentences.
Oh, it's fine.
Yes, I'm doing fine. How about you? How has your day
Good.
been so far? And perhaps even more importantly, how are you guys in the audience doing today? It's a wonderful day to be a trader. What do you think about the everything that Sam has been explaining today. Let us know in the chat, and let us know how you're doing as well, how the market is treating you, or how you are navigating the obstacles in the marketplace today. Sam, how have you been? How was your day?
I'm good. Yesterday took two trades, one loss, one win, a break-even day. Let's see what today is gonna be. And our viewers, I taught them strategy. I hope they take some notes and they follow, these practices that I mentioned. And I think if you just work on those things, you are bound to succeed. Again, I will say. Yeah, there was a question. One viewer was saying it is tough to get the first payout, and after that, it is easy to pass the accounts. I think throughout the trading career, throughout your trading journey, you have to be disciplined. Okay, even if you do one mistake here and there, even if you are on a winning streak, you just you feel invincible. So you have to keep everything in check when it comes to trading. Even one mistake can cause you a losing day or losing month, or maybe blowing your account if you are going too crazy. So if you're a trader, always keep that in mind. I have to be disciplined, I have to stick to my plan, I have to work on my psychology, all these things. Do a self talk, so then only I think it will do good to you.
Awesome. Yes, it is.
The
This indeed.
win, yeah.
It's you hear successful people saying this a lot. Their first million was the hardest, and after that, it's just rinse and repeat. But it's much easier because you're already in a position of strength.
Yeah, exactly.
When you're already getting payouts, the next one is great, but it's not as drastical of a change anymore because you've had one or more, and you know how it is, how to do it, how so the it's a different experience altogether. And I suppose it's the same with everything, right? If you are like, let's say, if you study to be a lawyer, your first trial where you are actually the one, the leading counsel, or where you're going to be doing the work, that's going to be the hardest, perhaps, because it's the first time you have that opportunity to do it. And once you've done it, once you've seen it, you can it's you still have to put the effort in, but it's no longer as it doesn't make that big of an impression as the first time. I think that's similar in trading as well, right? When you're with the very first time, you are still very sensitive to the excitement, to the tension, stress, good or bad, about something new, something that's very important to you. Kartik, I do not know of anyone. At least I haven't gotten I haven't seen anyone scale up to 5K, 500K, but that doesn't mean there hasn't been one, right? I simply, from what I've seen, just like you, on the YouTube and the interviews, I haven't seen anyone with 500. But that doesn't mean they don't exist. No one has reached it yet. On the high stakes specifically, we know of on hyper growth of a few interviews who of over 1 million in funding. But then again, not everyone wants to share that information. It's quite personal, and it's so that's the other thing. So one thing is, perhaps I don't know about it, and the other is, maybe someone who was already public about it, but I don't know about it, and the other is maybe they're simply are not not too keen on that kind of exposure. Let's double check. I'm coming in. Let me double check. Last couple of minutes on the chat to see what you guys have been asking about. Has the giveaway for today already happened, Samir? I suppose it has, right?
Yeah, it is done. It is done. Yeah.
Okay. Well, congratulations to
came to know
those
about
lucky
YouTube
10
itself.
winners of today. Congratulations to those
It is good. I didn't
1.
knew about if I was a beginner trader and if these live streams was there and these giveaways, all this opportunity, it would have been so good. Nowadays we have a lot of the fibers is giving you a lot of this live stream for you, giveaways for you. Take full advantage of these guys. Back in
Mm.
the days, not a lot of people was doing that. But if I was a beginner, it would have been so good.
Yeah, I understand that. That's very, very. It makes a lot of sense. I would be
Yeah.
glued to this stream as well. There's, when I was becoming and learning the craft, there weren't as many, or at least I wasn't aware of that many places where you can go, and funding was just the prop industry was just getting started. There weren't any, not in any significant way, streams like we have now, where you can learn from, and you can ask question, interact with them. You can go into their Discord server, and ask them just about any question and learn from them. That wasn't really a thing back then, at least not as much as now. And now you have so much opportunity, so many things you can do, that I envy traders who are starting right now a little bit, because of that. The opportunity are much more accessible and more abundant than 8-9 years ago. Indeed. Thank you for those nice words. No stretched yet. Thank you for those kind words. We are happy to see that you're getting value out of these streams, because that's exactly what the intention. That's what we set out to do, is bring, completely free, bring value to you. Not only give you the possibility of funding through prop firm, the fivers, but also give you tools and tricks and exposure and courses and education as much as we can, to help you get the funding. Not only offer you possibility of a funding, but also give you the tools that you would be needing in order to actually secure those funding. So it's awesome you appreciate the it's awesome you appreciate the effort put in. All right, let's check here. We have okay.
I like this triangle pattern. I wanted to break to the upside, then yeah, and where I see make and take buys today. Let's see.
Mm.
Is color not affecting your psychology? No.
AVZ FX, are you referring to green bullish candles
Candle,
and
yeah,
red bearish candles, or do you mean the background being white? Which one of the two do you mean? I probably think it is the green red combination. For
yeah,
some
yeah.
people, that could be a trigger for them to fear, perhaps, or be triggered to get into a long position whenever they see green. If that's a thing, you certainly should address it. Meaning, have it a little bit less of a, you know, um, colors that attract your attention that much. Maybe black and white, or just colors that are less, you know, attention grabbing. Sachin Patel's, we love to see that and hear about how you're using the value and the things we share to your advantage. That is awesome to hear. Thank you for those nice words. Remember, everyone, we are on a journey. We are on a mission to reach as many traders as possible and help them in any way we can to become better traders, right? Uh, and in that mission and that endeavor, you can help us by liking this stream, by subscribing to the channel, because the algorithms of the social media platforms like YouTube will then, the more people like, the more it will suggest it to others, and so you help us reach more people. We are, this is a service. This is you could call it a ministry, right? We are trying here to serve you, give you as much as possible in value, education, and company. We're a community, and we're trying to give you, with the Discord and these streams as well, give you a place where you can come and be yourself, ask your questions, and interact, and perhaps even, find some, who knows, friends, colleagues, and who knows what will grow out of those connections. It's That's what it's all about, human connection. All right, we have someone asking, Santos Kumar King. I don't trade
I see a lot of
NQ.
Indian people here. So if you're not in a
May,
Telegram and if you haven't subscribed to the Indian YouTube, and we do have Indian Telegram for you guys, so please join that, and you can ask anything there. You can talk about trading in a Telegram. So very specially made for our Indian trader. So we are working on almost every region. So yeah, if you're not in the Telegram, make sure you join that. I do see, this last three comments are from our Indian people, so that's why I, said that.
three, I think, many more than just three. The last three,
It's
perhaps you
last in a
meant,
row.
but
Yeah,
yeah,
last in the
because
row.
we are we are surrounded by the Indian community all the time, and I'm very grateful for that, because there are many viewers who are very regular in our Discord sessions as well, and they're from everywhere, from all around the place, the world, I should say, but a lot from India, and that's great to see. That's awesome. I really like that,
Yeah,
because
that's good.
especially, you know it's great for everyone, right? These opportunities that prop firm give everyone, doesn't matter where you live, whether that is a Western country, a somewhere where the opportunities are perhaps more abundant. But especially, it especially feels great to be able to reach these communities, these countries where it's not exactly where opportunities are everywhere for everyone to pick up, like in India, or perhaps in Africa, in Latin America, in some countries where life is much more difficult, right? Because the opportunities aren't you know uh, there easily. And I find that to it makes me happy. It makes me happy to be part of a the fifers who is trying to reach these communities, these countries, and offer them these kind of opportunities that can change your life. I mean, this, Samir. You're from India, and the opportunity that prop firm gives you, and everyone around you, or anyone in your position, is just
Yeah,
too good, actually. They're way better, and for some people who perhaps it's a opportunity cost, right? There's an opportunity cost because they have a career in front of them, but for a lot of people, you know this might be their one of their best opportunities to get ahead in life, and have an upgrade in their security, financial independence, and all of that, what we all want and need, basically, as individuals. All right, I'm checking the we have a question. Where was it? I think it was this one, right? I don't trade NQ. Maybe you, but I can look at it. Maybe I should switch to mine, so we can take a look at that, if that's okay with you, Samir.
yeah, yeah.
With your permission, I'll switch to the other
It's all yours. Yeah.
screen. All right. So on the higher time frames, NQ, um, here we go. Let's take a look at that. Sure. On the higher time frames, we have a this is the monthly. Nothing really, no fresh order blocks, no quasi at play. We had a breakout and we haven't come back to retest that. If you wonder what I mean, we had this breakout and that's still to, some, that's a level that needs to be seen. There is, however, the open of last month, um, which is perceived, right? That's the line that will distinguish or divide whether this the close of this month, which we're relatively close to, so above this level, right? It will be perceived by the markets on this time frame of to be something of strength. If we can close above this level, and conversely, if we close below it, it will be seen as a level of weakness, meaning it will open the door for lower prices, perhaps. But that's the only thing we can see here. On the other time frames, on the weekly, the next one up, the next level of in terms of reversals, it's this level. Well, not that arrow. Let me get the right level there. Right, so we do have a fresh order block here, which was retested, and it was then fresh. There you go. That's the area right there. For those who are wondering what fresh, why do I say fresh? What is an order block? How do I trade? How does one trade an order block? And all of that. Yesterday, I talked about that. It was roughly in the last hour of the stream, and I talked about I gave a framework where I explained, what the definitions of order blocks are and how to use it and what you can expect from it. And this is I can show you guys on basically on every chart where you have these order blocks being created. It comes back to the retest and moves away. Perfect, nice area. And even when the market invalidates it, let me see, did it invalidate it? Yes, it did invalidate it. It still had the reaction after the invalidation. Normally, I wouldn't be trading that anymore. Let's see, we have on the weekly time frame. We do have an order block here, which was retested on the first candle after the creation before it moves away. That's the same principle again. That's the order block. It goes back to retest it and moves away. Perfect, beautiful, simple, and basic, but very, very powerful once you can identify which are the ones you want to be trading. So we do have a fresh order block here. It has been retested once, but that's the immediate retest, and that's okay. You can still look for later on when we get to that area. There is an order block here. By the time when it was retested, it was fresh, but it no longer is, and there is another one here. So these are the levels on at least on the weekly time frame that we are in between. Right, we're basically in the middle of them too, meaning the market can do it can do any of that, right? We are basically in the middle, the equilibrium of this possible range. You shouldn't say this is a range yet, but between these two levels. Other than that, there isn't really much to say, at least not from the perspective of quasis and order blocks. If you go to the daily time frame, let's take a look. What do we see? Immediately, we can see that there is a bearish order block here on the daily. That's marked as such. Which will function as a supply area. This is an outside bar, so it's quite strong. So you want to be looking on a daily time frame. The bias is to the downside, right? Because of that order block, and because it's an outside bar, the probabilities of price going lower is a little bit higher than it going higher from the daily perspective. Let's see. Do we have a quasi here? Let's mark the neckline. The neckline is here. We do have a reversal pattern, a quasi that is on the daily. That would be exactly there. That gives us this as a reversal pattern, I should say, singular. We have one area there, another one here. giving this area entry order block on the daily, and another one here as well. And that's it. These are the two areas to be particularly interested for a possible. This is the quasi basically. Actually, the quasi is from down there. Let me correct that. Let me do it properly, which is like so. This is the quasi. It breaks the neckline. This is the neckline. It breaks it, and possible reversal points are these two according to the quasi, right? So going there and then moving lower for the completion of the pattern, and probably into that weekly structure below. And that is if the daily does not hold, which could already be the case. So you have two areas here for possible areas to be going short. Keep in mind, this is the equities. This is not Forex. So you always have that slight positive drift or bias long term for price to break and continue making higher levels. So keep in mind that reversal patterns on the equities will have a slight lower win rate than on Forex or other markets which are more rangy. All right, so that's what you have. There is a reversal pattern right here. That's the daily quasi. And the blue line here, that's the monthly level that will be seen as, so likely if the market continues and sticks here for the rest of the month, it's likely that it will be able to continue a little bit higher. Conversely, if it closes by the end of the month below that line, it's just a little bit likely that eventually prices will look for lower levels, right? That's how you could interpret these open on higher time frames affecting the daily as well, the daily and all the time frames below that. So on the lower time frames, do we have a quasi here? Is it also on the let me double check here. We have 1, 2, 3. Yeah, so that's not a H4 quasi. It's only a daily. So this is a normal or a ordinary order block, which is no longer fresh. So it's not neither fresh, neither an entry order block on the quasi. These are the levels that I currently have. So we have no reversal pattern on this time frame yet to go for higher levels. On the buy side, this is the structural level, right, which is the H4, which hasn't been broken, as we can see. And let me see here. So we have, I'm checking here the chat. We have a couple of messages that I haven't been watching. All right, I'll be reading in a short while. So on the NQ, so what can we see? There's no reversal pattern going on the long side, and on the short side, what can we see? Do we have a fresh order block? Not really. We do have a area here where we could price could gravitate towards, still fresh. But you can see here who is in control, right? It's the sellers by that size of that big, huge, humongous candle, indicating who is really in control, right? Breaking that low and so far unable to break that high. So it's not a reversal pattern yet. And the, likely also because of this daily order block, but, the easier path, or the path of least resistance, is to the downside for this chart. I'm going to see if there is anything else we can see. We do have a fresh order block there, and there is an area here, but it's no longer fresh. So it could be a great area to target, but I wouldn't be trading from it because it's no longer fresh. So that's on the H4. And in here, I don't have a lot of, I don't have any indication of where price wants to go. This is clearly, though, the impulsive is to the upside. So, it could just as well break and continue higher until it reaches something, perhaps this order block, to reverse from, or we'll have to see in time. But it's not really telling us a lot, except for the fact that we do have an uptrend, but it falls short compared to the move we had before. So even though this is impressive as a bullish, indicating bullish appetite, it does not compare with this much more impressive push down, meaning that when considering the push down, you could, reasonable say that we're likely to be at some point, either from current level or from a higher level, we could be probably most likely be going for lower levels and lower structures, and then price will decide whether it wants to continue or maybe reverse back and break this daily. Everything can change, right? We could have there's rumors of, not even rumors, but headlines of the possible deal that is going on in between the conflict in between Ukraine and Russia, and the Trump administration trying to broker the deal, mediate. And if that could be something, I don't know if that could lift some kind of, I don't really think that's going to be very impactful, but sentiment can change. It could be, it takes away some uncertainty in the market, and that could give the market the needed stimulus it needs. I don't really think that's a huge thing, though, for the equities, but hey, that is something that's happening today or these days. So certainly to take more likely to see the effect of the deal with gold, right, as a safe haven, than on the equities. But we'll see how that plays out. So that's my take basically on NQ. It's predominantly for a predominantly short, this market structure. It looks very weak, and we're likely to be trying to be looking for that lower levels, I assume. But the first indication is that likely the market will will struggle with that order block right there that we indicated. And it doesn't really make sense to go on lower time frames. But if we really have to, this looks quite bullish still, right? This move, consolidation, impulsive move, and then consolidation, and presumably they will have another leg up, right? So in the next couple of sessions, perhaps we'll see something like that. But sooner or later, we'll probably see price not being able to continue up, or maybe it will. We don't know, but likely I would be preferring looking for a short. I don't see it right here, right now. This is not a structure that I would love to trade from. I just know that it will be a supply zone. We'll have to see how price behaves as it gets there. Hopefully that helps. We have a couple of messages. Santos says, perfect. Perfect. You won't be missing our live sessions. I appreciate that. We appreciate that. As a team, we work hard to bring you, value as much as possible. So that's great to hear. And not to mention all the accounts that are to be won this week. 10 20K accounts, bootcamp accounts, for free. They're giving away, the Fivers is giving away this week every day 10 in total, 50 in total by Friday. So that's an awesome thing to hear. Peter, who is a regular in our show here at the Fiverr, says, I've noticed something while following your strategy strictly. After marking key levels and aligning multiple time frames, the most reliable order blocks are on the lower time frame, it seems. Peter, there are a couple of principles when using order blocks. One is normally the higher time frames are the more a potent one, right? Just like the in the hierarchy of the time frames, the higher, the more force, the more power, simply because it takes longer, right? So you need, in order to create those patterns on a daily or weekly or even a monthly, it takes a lot more participants, time, volume, capital, than to create them on an 1 hourly. So in general, um, the higher time frames are more reliable. However, you know you will see just what you're mentioning here, where there will be times where the market is very, I say, we say it's very technical, meaning it really recognizes and seems to be responding to these levels on the lower time frame, sometimes for a period, better than it seems it does on the higher time frame. And that's normal, because the market is liquid, right? The market, it doesn't do the same thing exactly precisely the same way all the time. It's a pattern, but it could be slightly different. And sometimes, some period, some market condition, it will be reacting more, and other times less, to certain objects or something. I call them structures, but some to certain levels. So your observation is very keen. I like that. Keep making those great observation, Peter, because that's how you find new edge. It's by watching how price behaves when it does something, right? For example, when it comes back to that order block on the first time, compare it to the second time. What do you learn? Right? There is a lesson there. There's a principle that's applied all the time. I can share with you already, and I have in the past, which is, the first one is the strongest. The second one, less so. Still strong a lot of the times, but less so. And the third one, and increasingly so, it becomes weaker and weaker. And by the third and the fourth time, the likelihood that that structure is going to hold is not great at all, right? But so, like you see, the principle that the number of retests will influence the probabilities of the structure holding. That principle is something you could is an example of something of other principles and patterns you will see in the market by observing and taking notes and comparing in time frames in all possible ways, so you find and you can recognize this and use it to your advantage, because that's what trading is about. Peter is very, very vocal. I like that. I like that, how you're engaging us with a lot of comments. Peter asked, those right at the final line in the sand, those right at the final line in the sand, for example, the euro dollar and pound dollar today, those area gave clean reactions and delivered around 3R with very minimal risk or stop loss exposure. The thing is, Peter, that there's a lot of layers, even with something very simple like order blocks. And the framework I shared yesterday is, it doesn't take into consideration many other things that are consequential, that are factors for the probabilities of one particular structure or order block to function, or right, to be successful, to be respected, like the impulsiveness of the market, the volatility at that time of the market, the trend, um, the market structure in general. All of these things will have an influence, of course, right? And there is probably, when you see these clean reactions to a specific order block, probably, and the trick is this, probably there's something else happening that we still, if you don't see it right away, keep digging. There's probably a reason why particularly that order block had such a beautiful reaction, as you mentioned, where the market didn't even go into drawdown or very little, and moved cleanly to 3 times the risk, the assumed risk. There's a reason there. That level, that order block, is has some other confluences that perhaps you don't see it, but it's there. So it's your job to dig deeper, and find what is it that made this particular order block so special that it had this reaction, right? And when you ask these questions, I know it may sound silly, but that's how that is something that has helped me, and I'm sure it will help you as well, by asking yourself why this why did market do this? And sometimes you will not be able to answer because there's nothing you can find. But if you keep asking why, you will find some answers, and take notes of them, write them down in your journal, and see how often they occur. And perhaps in the future you might be able to identify these special order blocks before price gets there, meaning you would be able to see that it's not one before, but the one afterwards, perhaps, for example, is the one that market has a very, very high possibility of reacting cleanly off of it. Let's see. We have a lot of questions, but Samir, maybe you have something to. I don't want to hijack the mic for the rest
No,
of
no.
the stream,
I
so
was
I
in a
want to be
position in my couple of accounts. I just
okay.
booked this profit.
Really?
I
Okay,
made a
nice.
very amazing profit, man. I was talking about this pattern break. I took this trade here, and my stop loss was this low. And look at that, I just targeted 1 to 1. I
That
just booked
is
this on my all accounts. Yeah, it is really amazing day.
wow, man. And that was a clean
That's
breakout.
wild. I'm gonna request my payout after this live stream. One account is at payout. That's amazing.
Nice, nice. How much did you
Yeah,
risk on it?
I risk like 1%. So technically, I have 3 accounts. So I'm up like 3% on all of these accounts. If I
1%
combined it
each, you mean,
that way. 1% risk.
per account?
Yeah. On the
Okay,
on
per.
one account, I caught this entry a little bit here, so I secured 1 to 1.6. If I'm not wrong, yeah, 1 to 1.6. I was being a little bit risky on one account, and other accounts I waited for a confirmation, which is candle to close above this area. And I was talking about this to our viewers, you know, taking the signs from the market, where it wants to go. Right now, the impulse was to the upside, and then we waited for a correction, and then buyer stepped in, and then I took this trade. And my TP was also very logical. If you see, this was a order block, so I don't think so. We should be very targeting beyond this area. So amazing day, guys. I am
Wow.
I am happy. I'm a happy man today. I'm not a robot man. The profit, if I make some profits, you will see some smile, or in my heart there is some happiness. I know a lot of traders say, you should be emotionless or whatever, but you feel happy when you make some decent profits, and when your hard work is paying off, you feel happy.
We're not robots. I mean, you
Yeah,
will feel
exactly.
emotions for the remainder of your life. For as long as you breathe, you will have these
Yeah,
emotions and these reactions. It's completely normal and unavoidable
exactly. Yeah.
to have the emotion and the reaction. The only thing we need to watch out is it's not to you, but I mean to the viewers out there, is as long as you observe the emotion, it's all fine, right? Once you have the emotions
Exactly.
driving your behavior, you start acting differently or behaving differently because of the emotions, good or bad. That's when you need to be watchful and watch out, because typically actions and behavior driven by emotions are not always the best ones.
Exactly. This
And
this trading with a wide stop loss, it have been a life changing decision for me, to be honest. I've been hitting more wins than often. So giving trades extra room to breathe, where my analysis will be completely invalidated. And just waiting for, of course, the market to show which side we want to go or where the strength is, which of course, by seeing some impulses and corrections and marking some liquidity areas, you can make some story out of um, that particular session. You can make some sort of story once price prints some kind of patterns that you have seen maybe like thousands of times. So that's how you will come to this point. Like, this was a very clean trade, to be honest. I would have taken this trade blindly if I would have seen this setup, these some areas, some auto block, untested auto blocks. My pattern recognition is this setup is high probability to me. So I would have taken this trade like, I don't know, if I can put maybe 2% risk on this kind of setup also. So my eyes consider this as high probability setup. So yeah, very good day. I don't,
Good for
I
you,
don't,
man.
I
Good
just
for
took
you.
maybe two losses out of 20 trades, maybe. It feels really, it feels
Wow,
good.
that's that's really
In my
really
whole
good.
trading career, I have not been this, in a winning streak like this, or maybe this kind of trading I have done. So what made me, once I transitioned in that wide stop loss and that waiting for a confirmation where the price has to go, I do use 200 EMA. I forgot to mention. I haven't really plotted here. I have some other, yeah. I have this chart.
Um,
Let me.
not Yeah. There's a big. We have a big fan, Samir. His name is
No trend.
Abhishek, who is says hi, and is a big fan of yours. That's awesome.
That's
Samir,
amazing.
you don't have to confirm or deny anything necessarily, but you just um, you know, let me put it this way: if you what you just said, um, if all of those trades were just put on one 100K account, risking 1%, and you said something like in the last 23 trades, you had two losses, that means on an average, that is 21R, 1R
Yeah.
being 1%. This is absolutely hypothetical. I'm not disclosing here
Yeah.
your P&L and your payouts,
Mhm.
but if all of them, and that's only one, and you mentioned you have three that you're trading, sometimes all together, sometimes you pick one and just trade one single one. But let's assume it's just one you traded, 100K account, 21R, 1R being 1%. Basically, you just said, well, hypothetically, you would have just and not it's not hypothetical because you traded, because but the point is, I don't want
Yeah.
to
Yeah.
state something as a fact, since I don't know if you share this information, kind of personal, but
Yeah.
21,000 basically in profit. And at 80%, we're talking about 16,000, what a hundred 16,125 dollars
Yeah.
in
Yeah.
after profit
I
split.
spent some time passing the evaluation also. So if you consider that those wins, and that is also counted. But phase one was 100% win rate. Phase two was also 100% win rate. In live account, I took one foolish decision which I wouldn't have taken, but still it is managed. It was under my risk parameter only. And coming from this winning streak, I did one thing: I reduced my risks to 0.5%, and that trade was a losing trade. That was a good decision that I took there. And then after that, my normal risk, which was 1%, and that trade was a winning trade. But yeah, these winning streak, these trades, I took some trades in evaluation and phase one and phase two also. And now I have these live accounts. One account is already at the payout, so I'm gonna be requesting it maybe now. Yeah.
Perfect. Yes, and actually, what you just mentioned, if the phase one and phase two is 10 or 8 and 5, right? Like the high stake is, that means that you're left with 8,000 in
Hmm.
profit. If it's only one account, that is, so per account 8,000,
Yeah,
and you're
yeah,
talking
you are
about
right. I'm close to that.
6,400 on each account, and you have three. I don't know if you traded all of them at the same with the same all. simultaneously, but say potentially 6,400 on each account. That's the kind of I know it sounds silly, but it's really isn't. That's the kind of money anyone who dedicates to trading, not easily, not easily, but this can be possible after you've gone through the process of becoming not just a trader who trades, but I mean becoming a consistent, profitable trader as Samir is. And Samir is just beginning. I mean, he's has a lot of growing still to do, but that's the kind of you know how long did this take you to pass the to get from the start of phase one all the way to these how long did you started, how long ago?
Can I put? Okay, I'll try to show you my Fiverr's dashboard. Actually, let me show you.
we
I'm
we,
gonna
we
remove
don't
this screen so that I can.
only show what you're comfortable showing.
Yeah, yeah. I'm
Don't
gonna
don't
show you
feel
my.
don't feel pressure to do or share anything more than you know
I'm gonna.
you're comfortable with.
Let me show if I'm not exposing myself. Yeah, it is fine. Yeah.
Yeah, yeah. Maybe double check that,
Okay.
triple check that, because we're
Yeah,
live and there's once it's out there, it's
took like.
we,
Let me see. Yeah, it is 100%. It took like
awesome. That's
maybe 4 days to pass this one, and another another 4 days for the phase two. Yeah,
yes,
almost
that's
like 1.5 week, or you can say 2 weeks, considering just receiving the login credentials and all these things. And I have the
yep.
live account, and this trade was on the live account itself, and live account is also decent. But I do have to complete
There
those 0.5% profitable days.
there it goes. There it goes, guys. There you see it. This what Samir just um, displayed. Uh, how long did you say from the beginning? You passed how many weeks are is this? You went from buying that 100K account till now. How much? How long ago was that?
It took me 2 weeks,
Wow,
phase
that's
one and phase
impressive,
two both.
Samir.
Yeah.
Well, that's very, very. It's not a competition. I want to say that to everyone. Don't feel pressure that you need to do it just like Samir did. But the point here is, it is possible. It is very, very possible. You don't have to. It's not a competition. It's not a race. If you pass it in 3 months, in 2 months, or
Mhm.
even in 5 months, that's fine. That's completely fine. But the thing here to realize is it is possible. Samir is, of course, he didn't do and reach this level overnight. It made a lot of growth and a lot of pain and lessons in the process, and many years learning, but it is possible. See Samir right here.
Yeah, I've did
That
almost countless mistakes. I have blown 200 plus accounts. I have mentioned a couple of times in stream. So that's how you know I got to this point, and I'm grateful I took the prop firm route. I was no stubborn. I was not that much stubborn to explore this opportunity. you know I still know some
mhm.
guys who just trade their live money, but I was open to it, open to this opportunity, and only this was the hope for me, and now here I am. If I look back, I have came you know I have came far, and sometimes we don't appreciate these moments, and even I myself, I'm lost in my work or trading. I forget to look behind. I was doing a job which was paying me $200, so my one trade's risk is more than that, more than like 5 months income that I was supposed to make in one particular trade. My 1% risk is that
two hundred
amount.
dollars a
So
month.
yeah, my salary was that in 2020. Yeah,
That's
if I look behind,
the
that is really
amazing.
phenomenal.
Yeah, that's the amazing potential that these prop firms,
Yeah, guys,
the Fivers is offering to
exactly.
everyone. And doesn't matter what country you're from. You can earn. The possibility is there. It's still have to work at it. It's not free. Nothing is free in this world.
Mhm.
There's no free lunch. You have to work at it and be willing to put in the hours and the effort and you know do the whole process, which is not for everyone. I'll be honest with you. Not everyone has what it takes, but it is possible.
Yeah, guys, this is very serious business, man. Just think about it. I met a trader actually. I was on a podcast with him. It is not released yet. So he was selling, vegetables from. He started trading 1 year. He started trading in 2018, I believe. So he was a that vendor. Now he has six-figure in payouts. Just learn the skill and just it is amazing. I saw him. I forgot my journey also. When I heard about his journey. Amazing. This platform can change your life, man. He was also saying this thing to me. His life is changed. This platform, because of these platforms, because of the fibers. So guys, take this thing seriously. It is a real business, and you can really you know do good in this. If I can do
Do
it, I
very,
think
very
you can
good.
also do it. I made like a lot of mistakes, to be honest. I consider myself over smart, to be honest, and this has costed me a lot of money also. And I have made a lot of mistakes with this nature, considering myself over smart, egoistic person.
What
I'm not afraid to admit this
what
thing.
what do you mean by over smart? You think of yourself, you
Like when
overestimate
you
your capacity,
yeah,
your
overestimate.
abilities.
When I'm like I somebody taught me, let's say A, then I'm like, I know B, C, D, E. I can figure it out. That kind of nature that I am. I don't need you. I can do it. You know. So that
I
kind of
understand
nature I
you're
have, which is also destructive.
I understand your overconfidence in your abilities.
Overconfident, yeah, and that kind of nature has costed me. I've made a lot of mistakes, man, a lot of mistakes. Just one nature has made me profitable. I just stop. Whenever I make profit, I just stop. Whenever I lose, I stop. I have traded multiple strategies in one account. I think this nature has saved me. Like I stop when I take a loss or whatever, when I hit a certain targets, when one trade is take profit, or when I hit when I hit a win on one trade, I stop there. Only this nature has made me survive in these markets. Only this one nature. I've made countless mistake. I
When you
think
say
taking this
stop,
advice,
when you say stop,
yeah,
you mean for the day, you whether you win or you lose, you just take one trade
yeah,
that day and
exactly.
that's it? Okay.
I just stop. And this practice also takes a lot of time for me. I was a big over trader, big over risker. You know, I this habit also took a lot of time for me. I remember me and my friend about a challenge. On phase one, I was very disciplined. I still remember. I think I might be having this FTMO link here and there, but my Telegram is maybe gone. I don't remember. But my point is, the thing that I'm mentioning here is taking one trade a day and sticking to my plan. I follow that plan very strictly in phase one. I remember there was a day I took two trades, and that day resulted in two losses instead of one. I learned I learned that day, and from next day onwards, I was focusing on one trade a day. And on phase two, guess what? I didn't follow this plan, and I breached the account.
Mm.
So I think this habit can save you guys. Just take one trade a day, win or loss. The strategies that you are using, just continue to use that. Just that is it. That just saved me. I have taken a lot of lessons, and yeah, now here we are.
That's amazing, amazing advice. Even though it sounds very simple, but it's very
Yeah,
powerful
exactly.
because by having this rule imposed on you, even though it is yourself, but you before you start trading every day, you basically agree with yourself. I'm only going to be taking one a day, and that mentally already makes it easy for you to adhere to this rule. And when you're going to buy the Fivers account, then you're ready for you're better equipped to withstand the temptation of over trading. That's amazing. I think that's great, Samir. Um, someone asking how many accounts. Samir mentioned 200.
Krishna.
Yeah,
Overall, I have lost
Krishna.
200 in fibers also, maybe 25 accounts, maybe.
Yes, and it takes a lot of, and everyone has a different path or a different journey. It doesn't mean
Yeah,
you
exactly.
watching us here, you have to, lose this many accounts before you become profitable or consistent.
Exactly.
Maybe it has something to do with, overconfidence that Samir said he had issues with, right? And maybe it's, so for someone else it's their impulsiveness, right? For someone else it would be, everyone has a different path and a different journey to mold themselves and teach or learn from the market, and learn from their mistakes. And so the time it takes for you to get profitable and consistent, depends on many things, and a few things you have no control over, which is, the kind of person you are. That will, make it longer, make it sometimes even almost impossible, or make it shorter, the time it takes for you to get to that level. Samir, we have, sadly come to the end of
Yes.
our stream today. It's been amazing to be, able to stream with you and hear from you as you talk about your journey. um I know it sounds like, if someone says, yeah, if someone says, in any project or any career, that they failed 200 times before they succeeded. And I don't see breaching an account as a failure, but for many people it is seen
Yeah,
as a
yeah.
failure. If anyone said that, anyone, just about anyone, would say, wow, that's bad, right? That 200, it sounds like a lot. However, would you change any of that? Would you change the fact that you went through that process of losing this many accounts? Would you change that, if you had a choice?
That is amazing question, Victor. Amazing question. I remember I received a payout of $5,000. I remember I purchased the accounts in bulk because I was overconfident, and I blew all of them. And those experiences, those psychological barriers, you have to overcome it. Because from day one, if I had 5K in my hand, that was a lot of money for me. I wouldn't be in this place nowadays. 1K here and there in fluctuation, price fluctuation, in PNL fluctuations. I don't have that emotional attachment. With that being said, I would not change anything in my journey, to be honest, because I developed psychologically, like these numbers that I see. And of course I'm not there yet where I see some major fluctuations in my PNL, but I will be there. My uh, I am preparing for those numbers as well. But if I wouldn't have gone through those hardships, gone through those failures, my psychological or mindset wouldn't really be, you know wouldn't really have developed that much. So with that being said, I think the journey which I was on, 200 plus account blown, whatever it was, I think the end is okay, and I will not change anything. I've done mistakes, and now I know what those mistakes resulted in, what the outcome of the mistakes was. I made those mistakes. Now I know what is the outcome of it. If I wouldn't have made mistake, my future self would have told, do this, do that. But still, I would have made the mistake, because at the end, you have to learn from your own experience, from your own doings. You can take advice from someone, and here and there you can implement that thing. But what will you do, the psychological, how will you grow psychologically? You have to slowly develop your character. Slowly your mindset will get developed by facing certain things in life, by experiencing things in life. Then only you will come to know. If somebody is telling you verbally, that will not be that much impact in your journey. So you have to face that thing.
I
Yeah, I will not
totally
change.
love your answer. Exactly. I totally love your answer because it is those failures. Although I don't see them as failure, it is those lessons, but those breaching of the accounts, those blowing of the accounts that actually molded you into Samir that you are today. And if you
Yeah,
didn't
exactly.
lose it, if you didn't break those, lose those 200 accounts, and that number may be different for everyone. I understand that, but for you specifically, if you didn't pass through what you went through, you wouldn't be the person you are, the trader you are today. So we are, standing on the shoulders. While reaching success, we are standing on the shoulders of our failures, which are not really failures; they're stepping stones towards
Yeah,
success.
exactly.
I love your answer right there.
I would add one
Samir,
last
we
thing.
go
Yeah.
ahead.
Then we can. I will add one last thing. God is basically preparing you for something He will give you in future. These payouts. He was preparing me for this. So whatever you are facing now, you are getting prepared for your future self. I am very excited to meet my future self. I am getting prepared for that. I cannot meet him, you know, in a blink of second or without going through the hardships. So I have to be prepared. God has to prepare me to meet my future self, and the God is also preparing you to meet your future self, which is successful, who is doing good. But you can't meet him like this. So you have to be prepared. You have to face few things. So with that being said, that is it, guys. Thank you for joining. If you And I will be there tomorrow also. If you like the stream, make sure you like it, subscribe to our channel. Tomorrow, see you the same time. And yeah, take care, guys. Now,
I
yeah.
couldn't have finished the stream better myself. Samir, thank you. Thank you, everyone who's watching us today. That will be the end of today's stream. See you guys tomorrow. Bye bye.